throat hole is hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both.
Hello.
Woo, we made it.
Woo-woo.
We made it. And it did feel like summer again yesterday. And it's going to feel a little bit like summer today, I'm told. So what does Vinny want, Vanetta?
I don't know the answer.
Baffles at the pool.
Exactly. He wants the pool open. He wants heat in the pool. And then I had to show him the forecast, the 7 or 10 day forecast where we're 50 degrees for, 7 of the 10 days as a high.
But that's coming soon. The pool's open soon.
Well, the pool's open, but it's not heated. So
you swim at your own risk.
Man.
He swam last night. It had to be Shrinkage City. I mean, the water's got to be 50 something degrees. I mean, it's
the horror. What a depraved child. He has to swim in an unheated pool.
But he has a beautiful, nice, hot sauna sitting there.
It's like torture
that they were using, but he could have just stayed in there.
It's amazing.
Poor kid.
It's amazing. Was anybody else involved with the pool swim?
Yeah, Charlie. His friend Charlie was there.
Oh, okay. All right.
Yeah.
All right.
Well, he wouldn't do that. He wouldn't do that all by himself.
Yeah. All right. That's fun.
Yeah. Vanetta, what'd you do?
Well, I was with a bunch of kids yesterday, so I just came home to my quiet house.
you realize your quiet time is sacred, right? So
it was the best day ever yesterday. So many wonderful kids of all ages took over the Tasty offices, and it was a lot of fun. They're so curious, they're so funny. Joe on the trade desk, wonderful guy. He taught the 10 and under crowd how to trade using stickers and candy. And so he's like, okay, so if you have stickers, you can trade them for candy. And then some kid was like, he took one sticker, but he wanted like two toys or 2 pieces of candy. And then Joe dead ass looks at the kid and he's like, that's margin. Because he wanted more toys than he had stickers for.
Is there video of this? Is there going to be a video of this?
I put out the video, just a summary of it, but that part was just really, really funny. And then one girl, she asked me like what I did, and I told her, well, I do financial news and I do social. And she's like, what's your YouTube? And I was like, well, it's tastylive. And she's like, hold on. She takes out her iPad. She's like, you guys have a lot of subscribers. She's like, I'm going to follow you. And I'm like, thank you.
Oh, it's so good.
That is pretty good. That's funny.
It was just so good. We gave each of the kids a chance to like be in front of the camera to record a message. And Tracy has the most adorable 3-year-old ever. And she just sat in the chair. She's like, hello, my name is Elise. I'm from Chicago, Illinois.
Yeah. Yeah, it was funny because I saw Tracy and Elise, like they were kind of by the lunch area. And I was like, Elise, are you excited? It's like a pizza party here. We got Lou Malnati's coming. It's going to be so fun. She's like, yeah. And she gets all excited and starts like running around on those like green couches that we have. And all of a sudden she gets over to the sweet green salad bowls, which I don't know if she knew they were sweet green salads, but she just starts jumping on one of the bowls of them, and it's just like spraying everywhere. And Tracy's like, no, Elise, like not the salads. It was chaos everywhere. It was chaos.
And then what happened to the Zin on your desk, Nikki?
That too. They can't. It was so funny because Vanetta's like, you got to put like your can of Zins away. You can't have those there. And I was like, this is my desk, I didn't sign up for this, and nobody's getting on this desk. And I guess they were like throwing it around like a hockey puck.
I told you, Nikki.
Oh, that's good. You did warn them. You warned them.
Yeah, you did. You did.
Do that.
Yeah, but I think the future's going to be bright. It was so cute. Thomas Jr. Got to run the show a little bit, and he was tickled pink, and he's just all the kids are so cute.
Great head of hair on that one.
Great head of hair, a true towhead. He's just the cutest little kid with his little glasses.
Yeah, it's amazing.
Did you see any future on-air talent? I mean, we have nepotism going on. We should probably hire from within.
Yeah. There's a lot.
I'm still upset we didn't get to do my skit. I guess you had to.
I know.
You would have to get parental
consent. Yeah.
Consent.
But that we were going to do a thing where I asked each kid, what their parents did. But then I also just interviewed Nikki.
That would have been cute.
Yeah.
Yeah.
Yeah. I thought it'd be more fun if I was just sitting at the kids' table, like with all the parents watching the kids, and I could just be sitting there like eating glue, just like.
And we're like, Nikki, what is your dad do
It would have triggered me, but sure.
It was funny because there were so many kids, and Alyssa, who organized it, did such a great job. And she was like, here are the rules. She's like, let's use our indoor voices. And then Mike, our CEO, comes in, and the first thing he does is, hey, kids, how loud can you yell? And so one of the dudes from the trade desk, he was trying to walk to the kitchen to get coffee. He sees all of these kids, and he literally just turns around and walks back to the trade desk.
So good.
He's like, no.
Too fun.
No, but anyway, but thank you to all the tasty parents. I mean, it's really hard to work a full-time job and to be a parent. I have mad admiration and respect for people who are parents. I couldn't do it.
Yes. Yeah. It's a labor of love, they say.
Yeah.
That's what they say. I thought it was just a contractual obligation.
Yeah, well, it's servitude for you.
Servitude.
It's servitude. You made me so I could carry you through this.
That's right. That's right.
I didn't sign up for this. I didn't sign up for this. I was brought here for it.
That's right. That's right.
Did you guys get a chance to watch the draft last night? Nikki, what are your thoughts?
I didn't actually watch much of the draft. I did catch, obviously, who we picked. Daniel Thieneman is a safety, which I will take.
Yeah, out of Oregon. Or Oregon State, maybe. Hold on.
The discourse around it is that it was a great pick, that it was, that he slid in the draft, and that's just a solid pick. So I'm happy. I mean, they picked a defensive player, which is good.
First time since 1990, Bears have picked a safety.
It's insane. I think it was our first one and our first defensive player in the first round in like 20 years or some crazy number like that. But I'm happy. I mean, I don't know who's going to rush the passer for us, but I hope that we can address that somewhere. But yeah, we needed some defense, so I'm happy. I'm happy.
The powers that be give him a grade A. I don't know what that means, but they give him a grade A.
No, he's good. I mean, he was the second best safety on the board. He's really fast, a lot of range. I mean, we need somebody like that to guard.
He was the third pick or something like that of the whole draft, wasn't he? I mean, he's
no, 20th.
Well, I mean,
25.
Yeah, but I mean, top round, first round. I mean, you would think they're going to be good.
Yeah, it's not always the case. I mean, we traded 3 first-round picks for Mitch Trubisky. Remember that. So it's not always that it's great.
That was the only round that they did, right? They only had the one pick.
The Bears.
We have a couple in this early second round. So I'm hoping we get some edge. Some D tackles, something like that, where we can get some pass rush here, but we'll see.
I just want to give a shout out to the state of Indiana because Fernando Mendoza, of course, went number 1 to the Raiders, as we know. But Jeremiah Love from Notre Dame, which is in my hometown of South Bend, he went number 3 to the Cardinals. So pretty good for the Hoosier state. Ho, ho, Hoosiers.
Yes. I actually saw Mendoza was not getting praised, but some of the people were like, oh, yeah, he really followed the NFL rules and didn't have a single advertisement in like his shot. So like the NFL, they don't want like Bud Light, a can of Bud Light there or something.
Fernando would never.
Fernando just rule following, didn't put a single thing up there, no side deals. Pretty funny.
I think that's great.
But he's got
I can't wait for the buddy comedy that is him and Kirk Cousins just fighting sin in Las Vegas.
Oh my God. Yeah, that is true. You have the two biggest like Jesus freaks together.
You were gonna get emails.
No, I didn't know what else to say. Just
upstanding men. How about
people.
that?
The two most good people on the same team.
There you go.
Yeah. Non-tainted by the evils.
Someone posted
your own foot here.
Someone posted a clip of that opening scene from the movie from the 80s, Revenge of the Nerds. And they said one was Kirk, one was Fernando, like when they're coming with the big trunk to college. Good times. So. Anyway. All right. Anything else going on?
No. Let's do it.
All right, let's do it. Got a lot going on today. We are going to have a really great show for you on this fantastic Friday. Thank you so very much for joining us. We truly do appreciate it. On this fantastic Friday at the top of the 8 o'clock hour, we have the weekend stocks. Jamal going to recap the week. Chip stocks are just ripping the face off of the market right now. Jamal is going to get into that. We have ceasefire, mid-fire, no fire, I don't know. Yeah. Jamal is gonna, like I said, get into everything that happened this week. We had our first set of earnings kickoff as well. And then at 8:40, we have Fast Market. Viewer participation is hashtag Fan Friday. So the bats are going to do viewer-submitted trades at 8:40. It will be interesting because the market's been moving a decent amount this week. And 9 o'clock for market measures, managing out of the money 0 DTEs. Beyond puts.
Yes.
Listen, Jimmy did it first.
I'm the sloppy seconds here. But yeah, it's a good one. It's on not just put spreads, but we're looking at just the call side. We're going to look at iron condors. We're going to do them based on management at the close, management at noon, a variety of, 25, 50%. So it's a good one. The takeaways are self-explanatory. If you've looked at a chart over the last 3 years, it's been pretty strong to the upside. So, puts and iron condors have been pretty good. Call spreads have been bad, but hopefully just giving you some new light on some of these 0 DT trades.
Perfect. And then at around the 9:20 time frame, we have live from the trade desk. Quentin Q in the house, counting down all the top trending tickers over at Tasty Trade. So just sounds like bell to bell. It's going to be a great show, and it's going to be a great day.
We're going to do our best.
We are going to do our best with what we have. Are you ready for your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Leading story. Top story. Jump in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today's a fantastic Friday. It's April the 24th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Japan's core inflation, or so-called core inflation, which strips out prices of both food and energy, dipped to 2.4%. Headline inflation in Japan came in at 1.5% compared to 1.3% in February. I just wanted to get started talking about some currencies. What are you doing in the yen?
How do you take out food and energy from inflation?
Japan does what Japan does.
Isn't that inflation? Like for
that's
99
the core of my spending.
Yeah, for 99% of the people, that's like where the most inflation is. It's like, it doesn't make any sense.
You want to take it up with Takashi? You go ahead.
What do you even put? I want to know what they put in that number. Like used cars,
rice. I don't know what to say.
No, rice is food.
Yen, that's true. Yen, basically.
Like, what do you put in there? Like pool chlorine for you? I mean, like what has that gone up? What's the inflation on the chlorine tablet?
Allegedly 2 years ago or a little more than 2 years ago, a chlorine factory, one of only two in the whole nation, caught fire and chlorine doubled. True story. True story.
That can't be true.
That's what they said. Anyway, the yen unchanged. The euro pound look a little unchanged also.
Yeah, I closed out of my Japanese yen position. I held it for about 30 days. I don't think I was ever a winner on the trade, but it was less of a loser. So I took that one off, and I think that'll be the last yen trade. I'm done with that.
Right.
How many times have you said this?
A million times. I don't know why. It's not something I like focus all that much on. I know it's, one of the key currencies that people trade. It's very, very liquid. We've had the carry trade dynamic as kind of a headline. I do not get the appeal. It's low volatility. It goes down every day. I do not see the appeal to it.
You're needlessly suffering.
You have to be in an abusive relationship to trade yen.
Seriously, it doesn't make any sense to me. It's just not something I'm interested in. So I need to remember that the next time TP or Glenn pitches me something with the Japanese yen. I gotta stick to my guns here.
Okay. In an interesting move, President Trump yesterday said his administration will be looking into banks, and he singled out Wells Fargo regarding payments and the treatment of debts in the aftermath of the Los Angeles wildfires. That is a bonkers statement. But he said Wells Fargo in particular has been very difficult to deal with. He said in a post on Truth Social, the banks must treat those people who so horribly lost their homes in this tragic fire very fairly and well. Okay, I agree.
Banks have a little bit of a stigma to them, but Wells Fargo does have a little bit of a stink to them too. I mean, all their past.
They're so shady, allegedly.
They really.
Don't sue me.
With their fake accounts, and they're just, I don't know. They nasty. But anyway, Wells Fargo trading around $80, Ivy rank at 18. I would probably avoid it. That's just me.
Yeah. What are you guys doing in bonds to end the week?
Have not been trading them. They're back at 114. They were actually a little bit lower yesterday. So you had a little bit of volatility in the bond market and getting down to like 113 and a half-ish was kind of the low of the session when we had that little bit of like a micro dip on, is the war back on? Are there bombs flying? You had oil, kind of spiking towards the end of the session. So bonds have been, despite sitting here at 114, have had some whippiness to the news cycle here. So I don't have a position currently, but there's certainly been some opportunities here if you've been quick and nimble in trading the bonds.
Okay.
Yeah, and I agree with you. And that dip that you were talking about, you had the market gave you at least 2.5 minutes to do something, right?
Maybe a little bit less. I actually did scalp out of my NASDAQ into that move. I've done that twice. So I've been happy. But yes, the 2-minute dips are about as much as you can get. And, it doesn't look like you're going to get much of a dip today. Even though volatility is still staying at 20, it has not gone anywhere. It doesn't look like you're going to get help today. That's for sure.
Ooh. Getting into earnings from last night. Ooh.
Sorry.
No, you're okay. It's a trading show.
It's all my emails. I have my email.
Oh, yeah, that is annoying. I know. Yeah. I got to figure out how to turn off Teams. Intel reported first quarter earnings that beat Wall Street expectations. Intel's revenue rose more than 7%, a sign that the chip maker is finally starting to see growth. Intel brought in revenue of $13.58 billion versus $12.42. The stock is now up 80% this year as of Thursday's close. It was up 84% in 2025, and it's up 20% since last night.
Unbelievable. Yeah, I should have known the government portfolio. This was destined to be much, much higher. I think I saw something that it's at the high or near the highs of where it was 26 years ago, like at the top of the .com bubble. So it's got back to where it was. I gotta say, I was not expecting this. After LRCX and some of the stuff that you've seen with like ASML and NVIDIA has been kind of choppy here, and just the face rippers you've seen in some of the other ones like AMD.
AMD up another $35 this morning.
Yeah.
What?
I was not expecting. I felt like, this was kind of a cool off. You get the earnings, they're good. Everybody just kind of chills here. I was not expecting to see a face ripper, but.
And you also mentioned before we started the show SMH.
Yeah, just in general, I mean, you could not miss if you were long chip stocks going into today. SMH is at 500, up about 5% here. So, yeah, I mean, just a massive move.
Yeah, I don't know what to do. Intel. I do have one question for you, Nick. You might know better than me. I should have paid more attention in school. When the government, we always tease about it's a government portfolio stock. They bought some. I mean, does that go straight to the? I mean, I know it's paper gain, but does that go to the U.S. consumer? I mean, it would be something like
When does anything go to the U.S. consumer?
Especially in this administration.
What do you think? They're going to write you a check? You got $1,200 in COVID. They pumped $4 trillion into the top of the funnel.
I was looking for a better answer out of you than that.
Yeah, that money is in a bank account in Saudi Arabia right now.
Yeah, I don't know. That's a pretty interesting question.
They own it at 20. Now he's doing the same. I don't know if you have a Spirit Airlines article coming.
Yeah. Yes.
All right, so I won't mention that at this moment, but they're doing the same thing in Spirit. I mean, at this point, I'm looking. I mean, you could be talking about 450. I mean, they bought $400 million at $20. That's
one day on an aircraft carrier in Iran, buddy. I mean,
like that, $30 billion, $40 billion. I don't know.
The gain doesn't. They're not a $40 billion.
I know it's paper money, but
I mean, I don't know. It'd be interesting if somebody is more adept at this, but I would imagine that they have to have some sort of exit point, right? So if the stock gets here,
no hodl.
Well, maybe they hodl.
Paper hands over there.
I don't know. It's what do you do about dividends? If it starts paying a dividend, what does that go? Do you drip it? Like, do you just buy more shares? Does the government just, there's got to be something out there, but I don't know.
I'll get my man Chris Vecchio on this.
Yeah, Vecchio probably does.
You're not going to like what he's going to tell you.
Oh, of course not. But at least I'll know the worst that can happen.
Yeah. And I don't actually have a Spirit story. Sorry.
Yeah.
I thought I did, but I don't.
Yeah.
Anyway. In other news, Nike announced 1,400 layoffs, primarily in their technology department. The company said the job cuts are a part of its efforts to better position the company for future growth as part of its win now strategy. The layoffs come after 775 Nike roles were eliminated in January.
Yeah, Nike's doing anything to get its stock price up. I told you yesterday I was a little bit long in, and I'm going to be paying off for me now. It's up 20 cents.
Oh, sorry.
Nice. Congrats on your wealth, my lord.
After it was down like 80 cents yesterday. Man, Nike can't do anything.
Sorry. I am so sorry. I am all over the place. My cursor moved too fast.
Oh, no.
All errors are on me this morning. I'm so sorry, Laura. Texas Instruments also had earnings last night, and that stock, also similarly to Intel, had its best day since the year 2000. AI demand soars. The company gave upbeat guidance, and they are on pace, like I said, for their best day since the .com era. Did you trade Texas Instruments?
I did not, but man, back in the day, if you had that TI-89 instead of the TI-84, you were in a class
was that the calculator?
It's a graphing calculator.
The graphing calculator.
Yes.
So the graphing calculator, the positive for that one, because nobody really knew how to actually graph or do anything on it, unless you were like in Calc 2. But if you were just the algebra guy that got your parents to buy you the 89,
did you have one?
You could load Snake on
I did, but I was also in AP calculus. So
I know, but Mickey, do you have one?
I did not, unfortunately.
You're such a liar.
unfortunately.
Stock was
But
two.
I had a TI 83, and that thing was sweet, and we would jailbreak it to play Tetris.
Yeah, I thought it was TI 84. Was it?
Maybe by the time you came around, it was 84. But when I was in school, it was the 83.
Ooh, Vanetta dating herself.
Yeah. No, fun fact: my dad legitimately worked for Texas Instruments. If you know, I was born in Texas, but way back in the day, like my dad was like a little startup tech hipster.
Well, he must be happy now. The employee share repurchase doing pretty good.
I don't think that he still has.
280. It was 240, 48 hours.
I will say this though, it was a sweet company because they would give their employees like 6 weeks of paid sabbatical like every year. And so my dad would just use the time. He like taught himself how to cook and he just like hung out with me. It was awesome.
That's amazing.
I know. Hint, hint, IG.
Well, no, everybody has that except for the handful of us on the show.
Nick, my Taiwanese sources just told me that Intel money, it goes straight to Medicare and Social Security for the boomers.
Oh, good.
Yeah, good. Yeah, that's funny. That's really funny.
They would have to sell it though, and you can't dump 10 or whatever their stake is. You can't just
straight
dump
to
that.
Medicaid, Medicare, and the boomers.
You need more, Dad. You need more.
Microsoft is planning its first ever voluntary employee buyout for up to 7% of the U.S. workforce. Seismic news coming out of Washington as a bunch of people just straight up got an email during lunch. It was like, hey, do you want to leave? We'll pay you to go. The one-time retirement program, I love how they phrase that, will be open to U.S. workers at the senior director level or below. Whose years of employment and age add up to 70 or more. So
good for them, I guess. I mean,
but then it's not layoffs. So it's a way to, I don't know if the street likes this or not. What's Microsoft doing?
Microsoft
$5. See, that's what Nike was trying to do. They were trying to kind of boost the price a little bit by coming out with something. They came out with something that didn't work. Microsoft did. It's up $5.
Yeah, Microsoft was a little weak yesterday with the rest of the SaaS apocalypse, which continues. I thought ServiceNow was the out there. Like I thought it would be, the numbers came in line and everything seemed, at least baked in, and that stock was down $20.
On their earnings.
On their earnings, it just tells you that there's just those stocks are just unloved. There's no buyer of those stocks.
Yeah.
But Microsoft up a little bit today is bouncing a little bit.
Well, how about this? Talking about all these blasts from the past hitting their 2000 highs. Intel, Texas Instruments adds Cisco to the board. Cisco Systems announced that they have a switching chip that they can connect to quantum computers of different types. What do you think about that?
It sounds like a lot of buzzwords.
Cisco. What are you doing with Cisco?
It sounds good. I mean, Cisco's at highs, so I guess it's positive.
Yeah, it's unchanged near its highs. Earnings on May 13th, looming.
Yeah, haven't traded Cisco in a while. I think we took a little short delta into the last earnings where it had a pretty big move to the downside. But certainly I can't look at Cisco when you got, AMD moving 15% a day.
That's fair.
Yeah, it's and that's the same thing with like some of these SaaS stocks. Like everybody's trying to pick bottoms in a ServiceNow. Meanwhile, like you can't miss if you're buying a semiconductor.
Right.
Yeah. Or like SMH exists. Like you don't have to try to pick and choose. Just go with.
Yeah. Well, and none of those service stocks are in SMH, but it's just like, some things are cheap for a reason. And that's what it seems like with a lot of these software names. Is like they're cheap because they've got big problems, at least in the short term.
Well, here's a stock. Does it have big problems? Palantir was down 7% in a single day yesterday. Is this the buying opportunity investors have been waiting for?
Well, I thought it was. It's trading 143, up about $1.50, which is closer to probably where I bought the stock with my trade that I did for option trades today. yesterday. Yeah, it looked like it had a high IV rank. Looked like it was hanging, getting beat up, and volatility was hanging in there. I did a little bit of a long delta play in Palantir. We'll see how it works out.
Yeah, Palantir has me perplexed because it's grouped into the software basket, but you've got, the crazy.
But it's also
CEO.
kind of in the government portfolio.
It's kind of in the government portfolio. It's a bit of a mystery as to like what it is. Is it like a super technology that launches missiles from the sky? Is it like an LLM that'll manage like customer emails? You're not totally sure which one. It's a very wide deviation of things. So I'm cautious of being too bearish on this one because it has that kind of.
And it was weird because the day before, Palantir announced a $300 million software purchase agreement with the U.S. Department of Agriculture. So Palantir is going to be in charge of our food supply.
See, that's what I'm saying. It's like
Palantir is people.
I don't want to hear them. Like if I say something bad, I don't want Palantir to hear me. Say that. So
it's too late, Nikki.
I'm a little scared. No, I just said I'm cautious. I'm cautious.
We're gonna have to start growing our own food, Nikki. You're gonna need a bigger patio.
Yeah, don't poison my food.
Yeah.
What's the IV in Palantir now?
Well, it's a little screwed up and low right now, but we'll see. It was in the 30s yesterday. We'll see how these options open. Prices are subject to change right now, so it's kind of screwing it up a little bit.
Yeah.
Nikki, I know one of your personal demons is Bloom Energy. Now there's a new entry, X Energy, nuclear reactor developer X Energy. The ticker is XE. They're backed by Amazon, and they raised $1 billion in their IPO. The Maryland-based company sold 44 million shares in its upsized offering at $23 a piece. That's above the marketed range of $16 to $19 per share. So what?
Incredible. Good for them.
They were founded in 2009, and they develop small modular reactor technology that's become really popular because companies like Google and Meta are looking for SMR technology to power their AI fever dreams.
Right.
Yeah, this sector has been kind of hot. I mean, BE obviously has gone straight to the moon. CCJ, which is uranium, in the nuclear kind of space, has been pretty strong. Some of the I don't know how to describe it other than the more speculative names like your Oklos, your SMR, this whatever this thing is, where it's kind of just an idea. Those stocks have caught a little bit of a bid, but they're very, very, very volatile. I mean, we've traded Oklo when it was at like 300, and we've traded it when it was at like 30 in the last 2 years.
That is wild.
IPO. Yeah. I mean, it's one of those where the momentum in some of those names and just kind of the news flow, like this might be a news flow that pops Oklo, 20% in one session. It's just very volatile.
How mad do you think Elon Musk is that his secret plans to start his own nuclear reactor company that he was going to call X Energy have been thwarted? No.
There's probably a lawsuit
I'm just kidding.
Baked in the oven right now.
Because that's what he would have called it. Like
For sure.
Netflix is boosting their share buyback plan by $25 billion after a failed Warner Brothers bid. Netflix said on Thursday that its board had authorized the additional $25 billion share repurchase program, resuming capital returns after the streaming giant walked away from a $72 billion deal to buy Warner Brothers Discovery.
Netflix has been, I was a little surprised because you had that. I mean, you obviously, through the whole Paramount takeover, take under, merger, whatever you want to call it, the stock could not catch a bid. I mean, it went straight down to basically the lows. And
violently down, right? No matter what the market did.
It was every day. It was a step. Yeah. 50 cents to the downside every single day, no volatility. And then you get the breakup news. They minted $2 billion of cash out of thin air. And
it was three.
It was basically free. And then the stock rallied up to back to around like 100. And I was like, okay, now this is a catch-up trade, much like I thought with, kind of a Meta, Microsoft, in that same light of a stock that has been, unnecessarily punished into a news-driven down move. It's back at 92. It's just not. I just don't think it has the spice, the flavor right now. The flavor is chips. The flavor is AI, and Netflix is just kind of like in a weird spot where it's not really caught in that tailwind.
Any post-earnings juice in Netflix?
Not really. I have long delta. I put some call diagonals on into this down move, but it's a tough one. It's a tough one to trade.
Yeah.
In a bonkers story, a U.S. Army Special Forces Master Sergeant was arrested on an indictment accusing him of using classified information to make bets that won him $400,000 on Polymarket related to the American military mission that captured Venezuelan leader Nicolas Maduro. Girl, what?
Yeah. Crazy, right? This is unbelievable. I mean, the kid, I think I read it, he bet $33,000 and won $400,000. I gotta think 33,000 was basically everything he had. I give him props for going all in, standing up and just saying, if I'm gonna be a thief, I'm gonna be a good one, trying to get himself.
Yikes.
Give him props. I give him props.
Yeah.
He was 38 years old, and he wagered, like you said, bet $33,000 in 13 bets in the week leading up to the operation. So netted him.
What is? I mean,
I feel like you got to have a fall guy for this, though. Like,
right? Like put it in your kid's name.
I know, but why does he get arrested for insider trading and nobody else does? Like, this doesn't seem. I mean,
because he's a small fish.
Who gives a crap?
No, that's true. No, you're right. Like, yeah.
I'm not being a homer here, but I mean, if nobody's going to get arrested for insider trading, then play at your own risk. Otherwise, play in a regulated market like you should be.
Yeah,
it's a small fish. Okay, you can't get the congressmen and women. You can't. Those aren't. You can't get the big one. You got to get the little ones. This is how you throw them a little bone. Like, look here, we're watching.
Yeah,
this is like $30,000 that this guy made. It's not the big ones.
Yeah.
This is crazy because I was like, this can't be true, but it absolutely is. It was 20 years ago today that Spotify began to play. It was actually yesterday. But the streaming service is marking its 20th anniversary. What? And they shared the list of the most streamed artists, songs, albums, podcasts, and audiobooks in history. Of course, if you're new here, my name is Vanessa Logan. I'm a Swiftie reporter. And of course, my girl Taylor Swift was the most streamed artist. Put some respect on Taylor Allison Swift. I'm sorry, Dr. Taylor Allison Swift.
Doctor?
Yes, she was
honorary.
that. Yes, she was conferred that. No, but it was just there's some fun things. So Taylor Swift is number 1, Bad Bunny number 2, Drake number 3, The Weeknd number 4, Ariana Grande number 5, Ed Sheeran number 6, Justin Bieber 7, Billie Eilish number 8, Eminem number 9, and Kanye West at number 10. So,
yes, but that list is skewed because boomers aren't represented. We don't know how to use Spotify.
Are you okay?
That's true. Like, fish would be way higher on that list. Vanessa, can you give us what are you on the rankings of Taylor Swifties?
Oh, Taylor Swifties. There's levels to this. No.
Are you the 0.1%?
You better be
on Spotify. Yeah. Of listeners, yeah.
They need to add like another decimal place for you.
I know. But what are you guys doing in Spotify? The stock? Can you trade it?
Ooh, we haven't traded it in forever, right?
Yeah.
I can't believe it's been around for 20 years. What?
Yeah.
I don't know if the stock has. I think I remember them kind of
right. No, not being public, but the company. Yeah.
Yeah. I don't remember using this.
$515. Good Ivy ranks. 515 sounds like a lot, but it was a $700-800 stock at one time. It has earnings coming April 28th, so next week it has earnings. Maybe it'll something to look at. I'm looking at May options here. They're $2 wide. I don't know. It'll be a tough one.
Yeah.
Okay. All right.
Yeah, I remember when Gina gave me Spotify for a Christmas present. She asked me for my credit card and then got me Spotify, and I've been paying it now for the last 10 years or whatever.
Well, you're happy you have it.
Yeah, there you go.
I'm ecstatic now. Yeah, sure, it's great.
Hey, this is great, Nikki. Harkening back to our childhood, Kellogg's is bringing back toys in cereal boxes. Remember, you used to get a toy in a cereal box? Oh my God.
Yeah.
In collaboration with the Toy Story 5. Why are there 5 Toy Stories? Do we need that many Toy Stories? To celebrate the June 19th release of Pixar's Toy Story 5, Kellogg's is releasing a limited, of course, number of cereal boxes with toys. These are spoons and trading cards inspired by the popular animated movie franchise.
Didn't this get like outlawed because they had like insane amounts of like iron or just like
probably
some,
full of lead, and they're probably all choking hazards.
That's what I'm
The
thinking,
Cracker Jack box. We used to get them in the Cracker Jack box.
Yeah,
It would explain a lot of your mental problems, though, Bat.
for sure. For
It wasn't my
sure.
fault. I was touching the radioactive stuff. I mean,
Yeah.
I actually saw an article or something where they gave away. We were talking about mercury, and somebody sent it to us. Like, because I would play with the mercury in a thermometer. We would break it up.
Oh, the puzzle piece is falling into place.
Yeah.
Well, they said they would send out this like radioactive mercury for.
Yeah.
I missed that.
Yeah, I feel like I need to get one of those, like the green pen, like the
You
light
need a
up.
Geiger counter.
Yeah, one of those, because
Yeah.
my dad, he orders all this stuff online, and like a lot of it is just like electronics that
To see if it's full of lead.
or like knockoffs from China, and it just shows up, and it's somewhere in, like it's next to the bed. It could be radioactive or filled with lead. I feel like I need one of those pens, like where they go to the like Goodwill and they test if there's too much like lead.
We are seeing the same TikToks. It's the guy, he goes to Home Goods.
Yeah, Home Goods. Yeah,
Yes.
which is one of my favorite places on earth.
Nikki!
The Home Goods chaos is something that you either love it or you hate it.
Sure.
I love it.
You're
I love
built for
walking.
it.
I love it too.
You just see just like crap just everywhere. And it's like, you can't even imagine that this thing exists. And then you look at it and you're like, wow, this is pretty interesting. And then
I need that.
It's $3. And you're like, okay, it's just put it in the cart.
No,
Like,
I bought my outdoor grill setup from
You
them.
certified yappers. I got to keep it moving or I'm going to go over Jamal's time. I'm almost done. Finally, I got a video for you. A little thing I like to call Trader Taste Test. I scour the internet for food for fat traders. And Chicago, got an installation of a very fast growing New York icon. And that is a pop-up bagels. And when I tell you, all the white people in Lincoln Park lost their damn mind. All the white people in Lincoln Park lost their damn mind for some bagels.
Send this back to New York.
Around the block.
Send this back to New York.
Watch
we need
this.
bagels, but this place, send it back.
Y'all good? So the premise
Don't tell me you kids don't have money in this economy. This
you're
is
supposed to rip them. You're supposed to rip them and dip them, and they've gone viral. What are your thoughts, Nikki?
Send it back.
I'm waiting in line for that.
We
That's
need
nice.
more bagel places in Chicago. We're a bagel desert. Send that place back. I don't want the hype. I want the bagels.
They did have
New York Bagel and Bialy. Been here for 40 years. Bring that back. 50.
They do offer jardinera cream cheese though. That sounds good.
That does sound
That's
good.
not a New York thing.
I might have to try that
Okay.
before I send it back to New York.
There you go.
What's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with a look back at yesterday, confirm and send, Jamal. We got a whole big show for you. We'll be back in 90 seconds. Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Nicky, we are back, son. And you know what that means. Time for a little bit more Tasty Live, but a little bit of a look back on yesterday. But before we get there, let's take a look back at today. Just a quick moment here. Even the S&Ps was strong pretty much for most of the night out of the gate. Matter of fact, they opened unchanged and then walked up about 10 or 15.
They were down 5 or 10 at one point.
Which was weird with Intel coming out and being $80 at the time. But we'll get to today after we look at yesterday. Let's see what's going on.
Yeah, I just got short a little bit of NASDAQ here at the top. I scalped.
Whoa! At the higher price, not the top yet. You don't know.
No. Yeah,
I'm just kidding you.
Well, yeah. Okay. All right. All right, Johnny. Yeah. Mr. Top and Bottom here, I guess. But I got a little bit of short delta in the NASDAQ here, trying to trade it. I'm not married to it. I would love a couple handles here. That would be great. You got oil kind of staying bid and is at the highs of where it's been. You got the weekend coming up. Volatility looks to be still very, very sticky. I mean, some of these stocks are just through the roof. If AMD ends the day up 5, you got to imagine that the NASDAQ is in the red on the
AMD up 35. What did you say? AMD
no, it's up 35. I'm saying if this is kind of I'm out now after 80% move, I think you see a little bit of a pullback in the NASDAQ, which is well outperforming everything else.
I think the NASDAQ ES ratio is just, I think, as high as it's ever been. On a 2-to-1 basis.
Well, it wasn't at when we were at the lows. The NASDAQ was way weaker.
Not talking about that. I mean now.
Yeah. It's had a big swing.
Mm-hmm. Yep.
So I don't know. Just looking to trade it. I'm surprised by the move today.
Yep, me too.
Was not prepared for this one.
I agree. I actually got a little short delta in IWM. Yeah, so I hear you.
All right, let's do a quick little recap from yesterday. So markets were a little bit weaker, shockingly. It was first time.
It was a red day.
It was a red day. It's been very, very choppy up here at 7150-ish has kind of been the number. Been a little bit weaker. So had some two-sided action. I mean, we had that one little moment though, and now we got.
Yeah, we got down around 7,000, right?
Yeah. Well,
sorry, 7,100. I apologize.
We just had something happen.
Even the S&P's up 14. NASDAQ.
I'll put an order in to buy them back.
Because you're good that way.
About 10 handles from here. We'll see if we get it at 27,200.
Right. You sold them at 27,250 and change.
Yes. So a little bit of weakness yesterday. Nothing too spooky, but you did have a big move in oil, which happened in the middle of the session. A little bit of a pop in volatility, but doesn't look like that's going to continue here. At least not right this second. This looks like a little micro dip. Anyways,
micro dip. I don't know what. I don't think it's anything that was scheduled. The only thing I see scheduled on is consumer sentiment at 9, 10.
Yeah, 10. And usually the other like big macro events are at 7:30. So something moving at 7:50. This is something else. But I don't have my ear to the street right now. Live on the show, I need my peeps to fill me in on what's happening here. Yeah. But a little bit of weakness yesterday. When we look at the Mag 7 stocks, a little bit of a mixed bag there. When we get to the next slide here, Microsoft was one that had a needed pullback for me, I think, and I think for the market as a whole. You had to kind of move it in sympathy with ServiceNow and some of the service stocks that have been just mooning higher. Apple was really the only one in the red yesterday. Even Amazon and Google kind of gave it up a little bit. NVIDIA had a little bit of a pullback. Meta, Tesla, Microsoft, those have been kind of the more volatile of the group here. Tesla does not look good. I don't love the sentiment I'm feeling from that stock.
Yeah,
that can change on a dime.
Yeah, it can change on a dime, and it usually does, right? I mean,
it usually does. Yes.
Yeah.
When we look at the sectors here, so utilities strongest of the group here. You had semiconductors; they have had just an unbelievable run that will likely continue into today. Energy stocks have been choppy in both directions here. The other stocks like your metals and minings, your financials, it's been a weird kind of mix throughout the last week or so after getting back to 7,100 on the E-minis. It's been very choppy besides the semiconductors, which have been consistently to the upside. Basically every day they go up.
Yeah, and when you see utilities at the leader of the clubhouse, that means it wasn't my kind of trading day.
For sure. Right? For sure. Yes. Biggest gainers in the market yesterday. On the next slide here. So you had Texas Instruments, which was up 20% after earnings. I think URI, which is United Rentals, also had earnings, but it's not a very tradable stock. It wasn't one we really talked about here. You had some of the pharmaceutical stocks in there. Some of the other we've gotten down to the third tier semiconductor stocks here, microchip technologies on semiconductors. These are, they're tradable, but they're not your AMDs or your AMATs or LRCX, which I kind of group into the second bucket. These are the third bucket. And then you've got, a handful of kind of industrial stocks in there, some of the communication services, stuff like that.
And I know these. Well, go ahead. These are the gainers. We'll get to. I was going to get to my train of thought in a moment. It's really a stock lower, so I'll get the next one.
So on the downside here, ServiceNow just absolutely hammered here on earnings. You had Lulu in there, which cannot catch a break. It was down $13. FCX, Freeport, some of the kind of metal mining, copper stuff. Taking on the chin there a little bit. You have Workday in there, another one of the software names, Thermo Fisher, which Thermo Bravo, I think, is actually the most recent name. Thermo Fisher, which was back when they were biotech stocks. Now they're kind of in the software stocks, is a fund that kind of buys into lower, market cap software names. Just CRM in there. I mean, it just bludgeoning the software names.
It is, and some that you have. ServiceNow, by the way, is tradable stock. I mean, markets are nickel wide, $85 stock, so that's something we should take a look at. Lulu's a lot harder to trade. FCX has that nice kind of component to metals. If you're looking for that, I was curious, and I'm not really curious, but I mean, it's amazing that car is not in there now, trading around 260.
It's not in the S&P 500.
Good point. Good point. That's why I meant 230 or so. By the way, it was 800. I was going to say, I think the low is in there now for a little while.
Yeah, I don't know. I think they're going to have to offer shares. And so I imagine the stock is back at 100 in the very near future.
Oh, there you go. There you go. Well, good trade out of you in there.
Thank you. Mm-hmm. Just to look at a heat map here. So technology has been kind of the leader of the upside. Took it on the chin a little bit yesterday. It's up today, reversing that entire move, so no big deal there. Energy has been relatively big here. You have oil futures up another 44 cents here this morning. Financials been very, very choppy. Some of the stuff that people have been hiding in, your consumer defensive stocks, your Walmarts, your Costco's, Coca-Cola, Philip Morris, those have been pretty strong. And then you got, your industrials, your Caterpillars, GE, Boeing. Those have all had nice little moves here.
Yeah, and then all the way in that bottom right-hand corner, which nobody cares about, real estate catching a little bit of a bid on some of these REITs. Let's take a quick 90-second break and come back. We got more Tasty Live coming up, which we're going to go over a little bit of confirm and send too, right? Take a look at that. We'll be back in 90 seconds. Then we got Jamal coming in. This is Tasty Live.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
I started trading around 2018, soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nikki, we are back, son. You know what that means. Time for a little bit more Tasty Live with Confirm and Send, where we look at your viewer emails. But before we do, let's take a look at your market. Even the S&Ps up around 19 handles. You see here they've had a decent range overnight from 71.35 up to around 71.90, just rounding up and down here in that tightish range, which we've been in for the last couple of 4 or 5 days. I mean, I think the longer we stay in this range after this big higher move, much stronger move up, I think it's actually good for the bulls. What do you think?
I would agree.
Yeah.
Because I think I mean, volatility is telling you people are still hedging.
Yeah, volatility is been going sideways too, but it's still bid in that 20-ish range, 2065. Matter of fact, yesterday volatility stayed bid all day long, popped up to around 21 and change, almost 22. I think 2175. Here, I can look for you. I think it was around 2175. 2177 was the high in volatility. That would be the highest high it had since we made this move higher, and we've been going sideways. Just trying to illustrate to what you're saying, volatility is bid. People are looking for protection, especially when there's any sign of a red move lower. Typically,
oh yeah, that's the other dynamic is like any downside move, you and that's why people are hedging, which is fair because on any downside move, things are like volatility is exploding and things are moving very, very fast. I mean, we've stair-stepped higher, kind of chopped higher here for the last week. And I think everybody recognizes that the 50-point up move or 250-point down move is probably your distribution here.
Agreed. Agreed.
At least
the more likelihood of the 50 handles to the upside. That's the problem.
I agree with that. I think
and again, my opinion. It's just me.
It's like 70-30.
Too. They usually stink.
If you ask me about what would you put the probabilities of a 50-point up move on Monday versus a 50-point down move on Monday, or just in general, not just on Monday, just in general? What are the probabilities now? In Europe, not and we
know it. We know it's 53-47 or something close to that.
But what does it feel? What's your market feel?
65-35 to the upside.
I was honestly right around there. I was going to say 70-30.
Yeah,
but I think the probability of like a 250-point move or to the downside versus 250-point move to the upside, I think is like 90-10.
I give you
that.
Like
I think if there's any 250-point move, it's coming to the downside from here.
I give you that too. And the velocity will be, well, I mean, who knows? Let's take a look at the rest of the market. NASDAQ up 300 and change. That's your leader in the clubhouse, about 1.8% when everything else is up minuscule. As a matter of fact, the Dow is actually down 70 on the break. I went through all the Dow 30 stocks to see if there was one, because it was down to over 100 a minute ago, if there was any one stock that had an outlier. And it just really looks like a mixed bag of tricks. Must be the weighting in there that's kind of looming a little bit on the Dow. Russell up around 6 or so handles. We spoke about volatility, but bonds are trading 114. I know they've been a little bit lower. I know they've been a little bit higher, but really 114 is where they've been kind of gravitating towards for the last 2 weeks or so. Bitcoin back to 79,000, although it's under it right now, 78.8. Bitcoin sold off a little bit yesterday and caught itself a bid pretty nicely too.
Yeah. Risk on, baby.
Yep. Totally agree. Ethereum up 14. Oil trading just under 96, got down to 93.5, up to 97 and change. Trading 95.60 right now in oil. Gold is up $9.70. Sorry, gold is down $8.40. Silver's down 20. They're both down around 20 cents. They're both down around the same. Intel is your big mover to the upside this morning. It was closer to 80. I saw it as high as 85. For most of the night, it was sitting around 80. That's all I got. Confirm and send, April 24th. Let's go. When you see a stock like TXN, Texas Instrument, Vanetta talked about it a moment ago, making a big move higher, does it influence your thinking when trading other stocks in the sector? Good question.
For sure. I mean, I call it a sympathy move. It's just hard to do after the fact. Like you can trade, like I did Strangles in Delta as a sympathy play to UAL when they were having earnings. So I think it's easier to make that story after the fact of TXN. I don't know if the similar stocks are moving like that already. Like you have to position prior to that. I mean, AMD is a perfect example today. I mean, AMD is not up on any news other than just Intel moving in that direction quite significantly. And so, it's hard to do anything post move.
Yep. Yep. Totally agree. It definitely influences and maybe more existing positions that I have, right? If I had an existing position in that sector that was maybe counter to the move, and my stock had moved a little bit in the wrong direction that I wanted to go in, whatever hypothetical direction it's going in, I might be a little bit more aggressive with my roll up or down just because the whole sector is strong or the whole sector is weak. So yeah, it definitely plays a part.
For sure.
Next one, please.
If you already have a core position in an underlying and earnings are coming up, do you do anything to hedge your position?
Earnings are coming up. I mean, this is a great question, and it really is subject to change. I don't have like a hard set rule on, what I do. So I'll give you a little bit of my subjectivity in it. If I had a winning trade in there, like let's say I put this on 2 months ago, I wasn't going to trade into earnings and I rolled it because it had high IVR, or I changed the position and I'm up a couple of dollars on the trade. I probably close it. If I want to do an earnings trade, I do an earnings trade, or I just close it and let the earnings come out and then do something after that, a post-earnings trade. If I'm in it and I've been fighting it and I'm down money in it and I have a relatively high probability trade on that just is not working out, I'll probably stay in it and hope that, the earnings bails me out. I could roll to the next month, but I'm probably going to stay, especially if it's in a time frame like now where you have 50 some odd days or 30 some odd days. If I'm closer to 20-ish days or under that, I probably roll it to the next month. So there's a lot of things there. I try to stay as mechanical as possible. I know you're a little bit more aggressive. I'd love to hear your answer.
It depends on what you're what you consider a core position. Like I
hate the term core position, by the way, unless you have like a long only portfolio or a short only portfolio.
Yeah. If you're talking about like the bigger part of your portfolio, sure. I think, putting a hedge in or at least trading around that position makes sense. But I don't know if that my hedges are market hedges. They're not like single name hedges. I usually have a directional bias in each individual underlying. And then if I'm trying to get like a short delta hedge, I go and do a put diagonal in SPY, or I get short a little bit of, micro E-minis, micro NASDAQ, something like that. Like that's the hedge. It's hard to hedge a core portfolio, like where you want to be long Intel, but you're hedging. Like it's hard to do. It's hard to trade that way.
I agree. Next one, please.
Ooh, long one.
You often talk about how tight markets are and trade right around theoretical value for the most part. If that is the case, why would it not make some sense to buy options? It seems to me that if you sell premium, you're making small amounts and one loser can wipe out those winners. Why not take the lower win rate? And when you do win, you win big, man, big. What am I missing?
I mean, that's not always the case, but sure. Yeah. I mean, since I buy options all the time, these diagonal spreads, your net long premium. I mean, you're selling something against it.
Your crab trade, your net long premium.
Crab trade.
Net short premium, but long delta.
We've done butterflies and SPX. Like, sure, go for it. It's just there's not as much management that comes with those positions. They are directional trades. You're long premium, so you are long extrinsic value. There's not, there's no rolling. There's no managing. It's kind of a, make your bed and sleep with it. But just generally speaking, yeah, options, you can buy and sell at the same price. There's one is not better than the other. It's just, if you look at the dynamics of markets and you look at volatility and prices, I mean, volatility tells you whether you're paying a high or low price for whatever that option is.
Relative
to itself.
Pricing, right? Mm-hmm.
And so that's the game. Like, you want to buy the option, go for it. It's the same. 70% probability if you sell it, 30% if you buy it. Go for it. That's what it is.
Yeah, and the problem with the big win is, what is the big win? Like, it's so easy to look at in hindsight afterwards. I took a shot. I bought this option at $2. It went down to 75 cents. Now it's $10. But did you get out when it was $4, $3, $6? I mean, it's really, really hard. So for me, it's a hard way to do it. But I love the strategy difference. You got low implied volatility. Options are cheaper relative. You put something on with a little bit more delta, like you would in a diagonal. You got volatility disparity between the front and the back month. You're taking advantage of volatility skew. You got an event that's going to happen the front month. It's not going to affect the back month as much. You take advantage of volatility pricing. I mean, for me, that's trading. So yeah, we do this. We like this, and we don't mind it. You got to make it your own.
And you can do whatever you want.
That's right.
I'm not here to I'm not here to tell you that you should do what I'm doing, or you should do what my dad's doing, or you should do what anybody's doing on the network. Do what fits your risk profile, your assumption. All that stuff is super important. It's the only way you can trade. I can't trade what my dad wants to trade or thinks, or what Liz and Jenny or whoever, Mike. I have to trade what I'm thinking. You can't. It's not all the same. There's not one way to do it. Next one, please. On the morning show yesterday, Tony looked at DRAM and said, which is DRAM, I should say, but DRAM is the ticker. I got somebody in the chat was giving me a little, I know, okay, chat, I know it's DRAM, and said the markets were wide. How do you determine what a wide market is versus a narrow market?
I mean, I guess it just comes from market awareness. You don't have to take my subjectivity to it. I mean, you can go, if you really want to, look at open interest, and you could see that the open interest is thousands on some of the lines, but it's relatively light volume. So that would be an indication of, maybe this is not the most liquid option market. Now, that being said, you look at something that's, $1 wide or 75 cents wide on a $37 stock, and you go and look at other stocks that we trade all the time, and you look at those stocks and they're 10 or 15 or 5 cents wide, well, then I'm going to extrapolate out and say markets are a little wide in here. Figuratively speaking, if you've got a stock that's under $100 and it has wider than 20-cent wide markets, at a guideline, that's starting to get in the wider side of the bid ask. Still tradable, probably. 0.1%.
$100 stock, and it's 10 cents wide. That's pretty decent. Yeah. Below that is good, and you'll know. You'll look at the options, and you'll see goofy spreads. One option is marked $1 at $10. The other one is at $3, $3.50, and you'll know that those options are goofy and not liquid.
Correct. Good job out of you. All right, good job out of the market too. They've gained a little bit of their green back. Even the S&Ps are up 23. Nasdaq back to almost where you sold them, up 315. Russell.
I know. I missed my scalp. I tried to adjust it and missed it.
Russell up 7, and the Dow down 43, volatility in by 6 cents. We'll see what Jamal has to say. We'll take a quick 90-second break. We'll take his little look on the market and see what's going on there with his spin. We'll be back in 90 seconds. With Steve.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
First thing about tastytrade is how easy it is. It's a very quick, light platform. It's all on one page. I
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
I started trading around 2018, soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nikki, we are back, son, and we classed up to join a little bit. We brought our friend Jamal in the house. Jamal, how are you this morning?
Doing great, man. Doing great. How you guys doing? What's going on?
Doing good. No complaints. Are you in a correctional center right now?
Why do you say that?
Background looks like cinder blocks from my boomer eyes. I don't know. I was just
what? Really? When do you see a plant? When do you see a plant at a correctional center?
I can't see the plant.
We don't see the plant.
It just looks like a blackish wall, and then it looked like cinder black. There you go. There's the wider. There's the wider range. There we go. Oh, World Boxing Championship. Very cool.
I like the
Wait, now you guys see it? I don't get it. I don't get what happened.
Now we see it. They wind out your screen.
So gotcha. Yeah.
Very nice. Very nice.
Yeah, it's pretty cool. Yeah, this came, there was like some boxing championships in like 2007 that were happening at UIC. Me and a buddy at the time at a trading firm went. Yeah, it was kind of fun, man. It was kind of dope.
Oh, I bet. Remember they used to do those with the Merck versus the Board of Trade and stuff like that when they would do those those boxing championships. It was fun. Anyway, what's going on in this boxing match?
I could see JJ being the SIBO representative.
No, SIBO was we were lovers. We weren't fighters. We didn't have any fighters.
Really?
It was always the Merck and the Board of Trade.
That's South Chicago Irish. That's you don't mess with those guys. And JJ, big guy.
Yeah. No doubt.
I figure he might be the representative. It's like Hunger Games, but traders.
Like Hunger Games, but bigger. Jamal, what about this boxing match we call the market here? What are you thinking? Are we stair-stepping higher as we cautiously wait for the down move? What's your take on this whole thing?
You know, it's so funny you mentioned that because I feel like that's the sentiment. I feel like market's been going higher, but people don't trust it. I feel like, we're at record highs at this point, and we've had a big run up, and you can see things have chilled out a little bit. So, a little bit of stats. I mean, this is the first S&P weekly range under 200 points. You got to go back to the week of March 2nd to get one of those. We've had some huge ranges, right?
Yeah.
And it's again, I always find it interesting. I feel like even when things are crazy, all of a sudden earnings comes and it's like most of the stuff that we were dealing with, like it's still there, but it's like on the periphery. You know what I mean? It's like the kids walk in the room and mom and dad might be fighting, but it's like they're not going to fight in front of the kids. You know what I'm saying? Like that's what it feels like as soon as earnings comes up.
You got to be careful, but sometimes after that happens, daddy's in the basement for a couple months and then he leaves.
I know.
So you have to be careful sometimes.
From experience, son?
Yeah, sometimes it's, yeah.
I didn't mean to touch a nerve.
Daddy's going to sleep in the basement for a little bit now, and then he's gone.
Would you like to talk about it?
It really was a metaphor. Anyway, before we go there, big earnings have come up, right? We've had some interesting, some strong earnings, it would seem so far. We're about to really get into the thick of it, and I'll mention that. But there's been optimism around the ceasefire, which I think is why we've gone higher, but we haven't really had a huge range of move. And oil has still been sticky. Oil has been higher all week. It hasn't crossed 100, but it's still been up there. VIX, and this is what's confusing about this market. We're at all-time highs. Oil is still up there. VIX and VVIX are both under their, I would say, warning levels. I mean, VIX is under 20, VVIX is under 100. They are both a little bit higher compared to last week. Dollar is up this week, right? So how weird is that? But the last time you had a week where the dollar was up and yields up on the week and markets up, you have to go back to the week of February 16th to get that. So this has definitely been a strange week. If you felt this has been a little bit of a strange week, you're definitely right. Big movers this week. Texan, I don't even have to mention Intel with the earnings today. Holy cow.
Unbelievable.
ADI, so it's been the chips throughout the whole week. And then this one is fascinating to me. URI. Do you guys ever trade URI?
No, it was on our list this morning, but that's a huge move too.
The funny thing about URI being, it is one of the comparables to CAR. CAR had a big move this week, and it is in the same group as CAR, and so it's had one of the hugest moves in the up direction. CAR obviously having a huge move in the down direction, so it's been a weird week.
Yeah, it has been a weird week, and this URI is a hard trading stock too, right? I mean, on the option side.
I would never trade it. I was just curious if you guys knew what it was, because again, they're in the same group. Huge move to the upside, and similar market cap. I would say actually URI is double CAR market cap. So I'm just comparing the two as far as things that have moved this week. It's wild to see just that big dislocation, but that tells you how wild CAR was. Tesla earnings, of course, we had this week, and the big move to the downside. And a lot of the like the ServiceNows, the IBMs, the Microsoft, the software stocks moved to the downside. Those names three of them had earnings. They carried Microsoft down with it. So as much as we saw some promise there in those service names, they ended up not being so great this week.
Those stocks are, it seems like they're dead.
Yeah.
I thought you had baked in kind of the bad stuff there. Those stocks seem dead. I will say to your point about volatility. Volatility, it's been stubborn. I know we're below some low, kind of the warning signs, but it's been oddly stubborn, and there's spikes. Anytime we have a tweet, headline, I think that's why that kind of goes to the fact that we've grinded for the last week or so. I think a lot of people are kind of positioning for this downside move because it seems like that's the faster moving trade now. Whereas, over the last 2 weeks or so, it's been the face ripper upside where you gotta buy the dip.
Well, look at yesterday. I mean, we ended up being down 70, almost 80 handles at one point out of the blue damn near, and then we bounced back. So yeah, it's definitely the faster trade to the downside.
And you mentioned you led with the oil. Oil in this month's future trading around 95 and change. It's unchanged, down 60 cents right now. But oil's been stubborn too, kind of going sideways with some violent moves. And not most of those moves. It seems like a lot of that move is overnight too, in oil futures at least.
Yeah, for sure. So, I mean, it's basically saying the catalyst is still here. We're at all-time highs, but we don't trust it. We're still a little bit worried, but we're going to put it on pause in the meantime because we want to hear from all these earnings and hear what these companies say. And we had some good ones this week that you would want to hear from given this environment, right? Like UAL was interesting. Dow, which is, again, a name I don't trade. I just find interesting what some of these companies say. They talked about, the lot of the chemical stuff that the prices on chemical stuff at the moment, which is affecting their company and their stock. So they talked about that. So I think that's been the more fascinating thing. But now we got some big ones. Just to round it out here, we got 20 to 25% of the S&P reporting this week. Microsoft, Google, Meta, Amazon, and Apple. So basically 6 of the Mag 7. And then we got a meeting on Wednesday. So we got a week coming up.
Yeah,
we do have a week coming up. You're right about that for earnings, for sure.
Yeah, it'll be interesting to see where oil goes towards the end of today, because I think that'll, I think we have kind of the ceasefire extension of the extension of the extension is Sunday. Might be the new deadline or whatever it is. I don't even know what to consider it at this point, but it'll be
the new
interesting.
dotted line. We're going to go to the dotted line.
The goalpost. The goalpost is like we're getting closer to
yeah.
it. So it'll be interesting to see what oil does into the end of the day. I think oil and volatility will kind of tell you the sentiment for the weekend here. I don't expect to see either much lower. So we'll see.
And I'm not sure if this is Powell's last meeting or not. I can't remember. I'm not macro enough to know that. But I mean, next month, the next meeting after this is June. So I'm not sure if he does that one or not. But either way, it's winding down.
Yeah.
Very good, sir. All right, I'm going to let you go, my friend. Thank you for exposing Nikki's daddy problems. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell next. Thank you, Jamal.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Diggy, we are back, son. And you know what that means? Got about 2 minutes before the market opens. Let's see what's happened since the last time we've quoted it. Even the S&Ps, well, they're right there. They're up 21 handles, 21 and change, now just 2075. NASDAQ up 296. NASDAQ and even the S&P chart basically look the same. You look at the Russell here, it too looks the same, although it had a little bit more of a hockey stick on the way up 8 right now. Dow down 41. You can see the Dow never making a new high here as the other three indices have. So the Dow has been the underperformer of the group. Volatility in by 6 cents, trading 2060. We've been talking about volatility and talking about volatility a lot as it's been going sideways, but we all feel kind of elevated. But when you look here, it really is in the range that it should be in. Now, it's been staying bid. Yesterday, it was actually up quite nicely until the end of the day when it sold off and became unchanged. Bonds are trading, we're trading 114. That's probably the biggest mover of the day right now so far. Trading 113.21. That's on the low end of its range. The low end of its range.
Oh, wow.
There's your opening bell. What'd you do? What'd you price too aggressively?
No, I didn't price it aggressive enough. The NASDAQ dropped like 50 handles in a split second. I got filled at the 27,200.
That's still low, 27,200. That was a great buy.
Yeah.
Good job out of you.
Thank you. Thank you.
I mean, I know they're 8 handles lower at this moment, but they had never been lower than where you bought them just a moment ago.
Yeah, no, it was a good fill, but you were giving me grief because
I thought it was an option. I thought it was an option trade because it filled so quickly right out of the chute.
Those are the Intel puts. That position is a bloodbath.
Intel INTC.
I'm basically just short stock at this point. I mean, these your chart doesn't do it justice because it's not you're zoomed in, but that stock has gone. It's up over 100% in a week.
I don't know if this makes you feel better. That in August of 2025 it was $20 and now it's up to $84. I don't know if this makes you feel any better.
No, it doesn't.
All right. I'll zoom back in a little bit.
Yeah, no, don't. Like I don't want to see it. I don't want to see it.
I don't blame you. Oil down 34 cents. Gold kind of doing nothing these days, right?
Gold's been weird.
Yeah. Sitting down 14. Silver down 24. Net gas hanging out at 270. Stay low for the summertime so I can heat my pool, please. Let's see what else is going on in the market here. I have the high option volume list. I'm going to click on net change a couple of times, and then I'm going to go from I'll go from the red side to see what the buckers are. Snow down $7. Costco, which you mentioned a moment ago, still over $1,000, 108 or so, 106 now, down $8. Meta down 4.5. Apple a little bit weaker, 270, down $3, just about $3. Google down about $2.50. AXP, which had earnings earlier this week, down $1.50. Some of the oil-related stocks, XOM, Caterpillar down $1 and change. AppLovin down small. Downside seems to be small or muted. Upside, here's your big chip stocks. AMD up 31.
Unbelievable.
SanDisk up 28 or so. They're all trading near their highs. We've only been open for 2 minutes. MU up 25. ARM up 23. These are big moves. 11% move. 3% move for SanDisk, but it's almost $1,000 stock. AMD with a 10 or 11% move. Big moves in here. Intel with a 25% move, up $16.
I mean, some of these stocks are up 100% from 2 weeks ago. Like you look at ARM. ARM is up over 100 or just about 100% in a week and a half.
Do you want me to zoom out on here too?
I mean, we can do the boomer thing, like where you look at 1 week and it's just like I can't tell where.
Well, I look at a month or two because that's where I usually live. I mean, I don't care where it's been or how where it's going to go.
Hey.
It's going to be that kind of. It's going to be that kind of day, huh? It's going to be that kind of day. Yeah, this is definitely a chip-driven market right now, and you can see the Nasdaq up 1%, and the rest of the market basically unchanged here. So, market's reflecting that too.
Just unbelievable.
Just unbelievable is right. Didn't have it in my cards for the day. Although we are. I don't know. Would you say we're unchanged? Like, what do you think about give me something. Tell me something.
I'm keying in on oil and volatility. I think that's going to be, I think if you get a bid in oil and volatility stays right here, I think you have a little bit of weakness into the end of the day. I mean, that's kind of what I'm thinking.
Going into the weekend.
Going into the weekend, you have the uncertainty, you have the ceasefire, this fire, that fire. There's a lot of things going on here over the weekend that I think are kind of looming.
OVX CGI, trading down around $1.77 and change. You can see it here on the right-hand side, lower end of its most recent range here. Hard to do any type of diagonal trade. That's OVX is /CL volatility of the options. Now remember, you can't really take advantage of the volatility skew between the front and the back month, because the oil future that we're trading right now, this M contract, expires in 20 days. You can't do anything diagonalized. So if you're going to do anything, you have to stay inside that 20-day range here, where all these options have the same M that are going to represent the M options in oil. So oil volatility a little bit low relatively speaking.
Yeah, I took off one of my, because I've been doing those butterflies or kind of legging into the butterflies. Started with the Super Bowl, and then I would buy back the put spread, sell out the call spread against it, and make this big wide butterfly. I took off some of the long call spreads yesterday. It hasn't really, it was right around this price. It's not like it's moved all that much, but I've taken a little bit of money off the table there. And I've been scalping out of these USO calls as well. So I've been trading that volatility pretty good.
Good. Dow down 170. I think maybe we could take a quicker look here if I get my list that is just the Dow Jones Industrial, which I will do for you right now, and put that up there, and I will click on the net change and see which ones are moving us lower. Goldman Sachs is moving lower by 6, Caterpillar down by about 5, Amgen down around 3, Apple down around 2 and change. And on the upside, you've got fewer and far in between, only a handful. Procter & Gamble, Amazon both up 5, Microsoft up 4 and change, NVIDIA up 2.5, Boeing up $1 and change. So really a mixed bag of tricks there, but a lot more lower than higher for the Dow, and that's why the Dow is the weakest. Ooh.
I put on a put diagonal in Intel. I think this is just me hate trading this stock, because I'm basically short stock at this point. I have like the 55 strike calls that are 30 points in the money. It's unbelievable into this move. But maybe we'll get the story of everybody that's been holding since the year 2000 that is now at a scratch. This might be what are they called?
Profitable since 2000.
You are or aren't?
I think you are profitable now. Okay. Yeah. With this move up of $16. Well, yeah.
But I could see the headlines being written like, this is a liquidity shelf or something. Right. Like, like you gotta sell here.
I understand. AMD up 33, hanging in there. AMAT up 11, hanging in there too. I know AMD is probably one of your worst. Intel up 16 and change. Probably.
AMD is unbelievable.
Right.
It's unbelievable. I don't even know what you do here if you have short calls. What do you do? What does a trader do here, Dad?
Yeah, it's a great.
You're basically short stock at this point.
Yeah, it's short stock, and if you have the buying power, I'd probably sit.
You just sit? Do you sell a put?
Probably not.
Like you don't go out to June and sell the put, and how do you look at this chart and be like, oh yeah, I'm gonna roll out and sell the 320 put?
Yeah, 320 put trading for around $20 with a break even around 300. The 300 put trading around
yesterday. That was yesterday's price.
Right. If you go out to June, you're looking at around $13. Again, market's a little bit wide there. You'd be doing around 25, 30-ish deltas. That would be the classic mechanics. I would probably wait till the end of the day.
Yeah.
It was my own money and I was trading it.
I agree.
See what happens. Stranger things have happened.
That's true.
Absolutely sucks to be in that situation.
Yes.
Yeah. You want to take a quick you want to take a volatility in by 5 cents. You want to take a quick 90-second break and come back. We can come back with a little bit of fast market where we're looking at 10 trades from our viewers. You want to take a look at that?
Sure.
Your NASDAQ futures are back up to where you sold them when you hated your buy. They're 27.250.
I'm going to take the gift
No, I don't blame you.
I have enough short delta here. I don't need any more.
I don't blame you.
What a unbelievable move we've got.
All right. You ready to take a quick 90-second break?
Sure.
We'll take a quick 90-second break and come back. We got more Tasty Live. That's right, with Fast Market. We're going to go over 10 that you looked at. We'll be back in 90 seconds. Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs. 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live as the E-mini S&Ps hang in there, up 13 handles. NASDAQ hanging in there, up almost 300. That's your leader in the clubhouse. That's a little over 1% move as the Russell is unchanged and the Dow is down 180. So you got a little bit of a mixed bag of tricks with the NASDAQ and the chip stocks holding us higher.
Unbelievable.
Remarkable.
Yes.
Remarkable.
Should we go into it? I thought you were going to tee it up. I thought you were going to say
I was
something
waiting. Are you ready for a little bit of fast market?
Yeah, I am.
Oh, you left me out there hanging.
I know. I'm sorry. I had to do.
Never helped me. Never participated. You're just like your brother.
Yes, I had to do something.
Yes, I had to do something.
I was typing.
I got it. NVIDIA up 260. I don't know if I've mentioned 230 now. I haven't mentioned that. Palantir, we talked a little bit about earlier today. I got a little bit of long delta in there. It's down about 50 cents, 141. I think the trade that I put on yesterday is going to be a small loser. Yes, it's a loser by about 60 cents.
Cool.
All right, you ready?
Sure.
Let's do it.
ARM. Parabolic move probably needs a pause before another leg higher. So it's got to pause after a 100% move, and then it goes up.
Sure.
All right, let's do it. What are we looking at here? An iron condor in May. Oof.
What do you think about this?
I cannot do that. I will. I mean, these
cannot, won't, will not kind of thing.
Yeah. I mean, maybe a broken wing butterfly or a ratio spread. I mean, if you think you're going to take another leg higher,
yeah,
you gotta position yourself for that. I mean, these markets kind of stink too. They probably just it looks like.
No, they've been open.
No, they've been open.
They've been open for a while.
They were just probably penny bid like 3 days ago.
Right, and you got $2 wide markets in here. It's untradeable at this moment. Unfortunately,
yeah, I wanted to do like a call ratio spread or something like that, but when you get out to your 30 delta options, 260, 265, 270, you got $2 or $3 wide bid ask spreads.
Yeah,
I think I got to pass here.
Yeah, I think.
I'm sorry, Jack.
Yeah, I'd love to support you.
Yeah.
But I don't think you can at this moment.
Yeah, I just don't think it's liquid enough. So I'm going to pass on that one, but I don't mind it. I think if you're going to play these stocks, I think you have to look at butterflies, broken wing butterflies, stuff like that.
Mm-hmm.
I don't know if you can go neutral here at these highs, or go bullish. If you're bullish on these, go, just sell the put spread or whatever.
Sure, you bearish, do the opposite, the call side. Sure, do spread.
Well, I think the call ratio / butterfly allows you to be a little bit omnidirectional here. And if you get a pullback, you don't really, it's not going to matter.
Yep.
Whereas you sell the put spread and you top ticket, you'll feel like a giant.
Agreed. Next one, please. What do we got here now? We've got SPX. I'm selling an iron condor and collecting some premium before the weekend. There you go. What do you think? A 0-day SPX trade? We haven't done one in a while.
Well, we've been doing the butterflies. We've hit them.
The butterfly, and you've been hitting them very well.
I think that's the route we're going to go here too, because.
So you've been paying around $2 for these butterflies, right? And you kind of hold them to the end of the day.
Yeah.
And you're looking at, I got $2 worth of risk, and I'm going to try to make, 5 or 10 times that, kind of, not 10 times, but 2 to 7 times what I'm paying for this.
Yeah. All right, I did it right at the expected move. I'm long the 71.35, short the 71.50s, long the 71.70s. I hope I don't make money on this trade.
So if you short the 71.50, that means you did it with a little bit of upside bias.
A call butterfly, broken wing butterfly.
Yep.
I got a couple bucks of risk. I did a $1.70, just taking a shot. A lotto ticket.
Got it. Awesome.
All right. So we're in. 1 for 2, 50%. Back in line for the bats.
All right, let's do it.
XLU. Okay, we're looking at the utilities here. Trading 46 and change. June 44.47 strangle for about 96 cents in credit. This, it makes me sick.
Yeah.
I mean, you do an iron fly.
Oof, you could. What do you think?
I mean, these markets kind of stink too. Is it just like, look, is there just no liquidity right now? Because there's just these bid-ask spreads. I guess we've had such a violent downside move and a violent upside move that if I was making markets, I'd probably widen spreads across the board.
Mm-hmm.
But what do you make of this? Like, we were just looking at ARM, which is, fairly liquid, and you got $3 bid-ask spreads there.
Yeah.
Intel, wide bid-ask spreads. AMD, wide bid-ask spreads. For stocks that are super, super liquid, does that speak to you in any regard?
No, I mean, XLU has never been one of my kind of go-to ETFs. I mean,
I meant just in general. Just looking at bid-ask spreads in the market. I feel like they're.
Yeah, I think what's happening here is Frankie actually just wrote into me. 100,000 SPU options have already traded today. That's about 40 times the normal opening volume for the opening. I think people are just gravitating towards the market itself and not looking at like an XLU.
Yeah.
You know what I mean? I mean, that's what I'm thinking.
I don't know about that because you got these chip names going absolutely.
You do have these chip names, but those are all speculative, right? I mean,
not really, not anymore.
Okay, yeah, you make a good point.
I don't know. I'm gonna pass on this, Zach. I don't. The markets are just junky. I don't know what you can even make on this over the next 40 days. It's just not. I'm not gonna park capital here, so I'm gonna pass. But thank you, I appreciate it.
Okay. Next one, please.
Oh, CRM.
Oof.
I've got a butterfly here right around. So I have the 170 because we did a jade lizard and like kind of a put ratio, and I bought the wing to turn into a butterfly. Slightly bullish here with June jade lizard. I don't think it gives up too much before earnings. So I'm using the 155 put, the 195 200 call spread. Okay. The 155.
What do you think here? CRM.
I don't know if I want the downside.
Up $2.50.
I mean, these stocks are just so left for dead.
Mm-hmm.
I think I'm going to just do it.
This one's on its butt too, right?
When is earnings? We got earnings the 35th. I'm sorry, in the 35-day expiration. There's no 35th day of the month. It's 35 days until expiration, May 29th.
Right.
Even those options are junky. Like, I'm going to look at a diagonal spread here.
Okay.
I just don't want the downside risk in these stocks. I mean, the ServiceNow trade, which it hasn't been a bad trade. I have a butterfly that's like right at the money.
Mm-hmm.
That one spooked me on some of these stocks. I was thinking bad news is baked in. Maybe there's a little bit of a relief rally. You didn't get any of that out of these stocks. So I did a cheapy little $6 diagonal spread. June, May. When we get to the May monthly expiration, I'll have to look to either roll or close this trade going into earnings because you have earnings come in the following week.
Right. Okay.
So I'm in, Jeff. Thank you.
RBLX bullish pre-earnings trade with the May 1, June 62. We'll figure out what that is. 62 price. Price is what he's looking at.
Oh, okay.
Yeah, if the stock runs before earnings, I'll take it off. Otherwise, I can hold to earnings or roll the front month to May. Calendar spreads are probably the slowest moving of all the strategies that we do, and I would have no problem holding this through earnings, right? Unlike a strangle or an iron condor or anything else you might put on a diagonal, right? You probably look at the directional bias of it.
I did the diagonal. I did it a little bit. I did the May 1, which is going into the earnings. I did the 60-65. So I bought June the 60, sold the 65 in the May 1st expiration, 7 days to go till expiration. Did it at 333. Small little trade, playing into earnings here, playing the upside, but defined risk.
Mm-hmm. Mm-hmm. Yeah, okay.
I like it. I don't hate it. I mean, we've sold puts here in the past. Stock is at lows. I if you're bullish here, I would do something like a diagonal so you get a little bit of extra delta there.
Got it.
Cool. Volatility unchanged. It's going to be a weird day.
Yeah, I think so.
I can feel it. Like I don't know if we end the day in the green, but I think some of these the move in these chip stocks.
It's too big right now. Unless you listen, everything's subject to change, but unless you see something completely turn around in these stocks. So if they're up 30 now and they're only up 25, or they're only up 18, is that
then they end the day unchanged,
right?
If they get to that point, because everybody's late here. It feels like.
Yeah.
But I keep saying that, but I have felt that way for 3 or 4 sessions now.
Yeah,
I feel like it's just late.
Yeah.
You should have been buying all these a week ago, and now you're chasing the last couple percent. I don't know.
Mm-hmm.
I don't know if it feels good.
Yep.
Okay. So we did Roblox. Did I get that pushed through for you? I pushed that right now.
Say again?
Did I get that pushed through?
Roblox is the last one you put through. CRM and SPX trade.
Got it. All right. Intel. Oh God. I added the put diagonal, which is actually working a little bit here.
Yes, you did.
This move. I don't think you sell the calls here if you're already sold the calls and you're short the stock. I'm not adding in that direction, but I would consider the put diagonals a cheap way to get, a little bit of extra juice to the downside here. So that's what I'm looking at. I don't think anything above 80 is sustainable. Well, you were right, because if you sold it at the open, you made $5 on that. So I'm thinking of buying the June 75 calendar. I do think that's an interesting way to trade this. The put diagonal that I did, that I'm long the 80 in June and short the 70 in May, is essentially what you're looking at here with a 75 calendar, but it's got a little bit of added delta exposure to it. It's also going to be a little bit more expensive. So I prefer getting a little bit of the delta, but I do like this trade. I'm in it, Ralph. So I'm with you, buddy, but I'm not going to add to it.
Okay. You love them, but you can't support them.
I am supporting him.
Even the S&P's up 2, NASDAQ up 200. NASDAQ being supported by all these chip stocks. Long-term bullish on TLT bonds, even with stagflation. Risk hanging around. Since IVR is low, I'd rather use a poor man's covered call. Long next January, 90 calls. And short June 89 for about $1.35 debit. I'd scale in with multiple tranches. Wants to buy the 90. He's bullish.
I don't know how much this moves. I was
going to say sell the 89. This is
June.
June with 55 days to go.
If you wanted to, then what's the June 90 call trading at? Like
the June 90 call is trading for about 30 cents.
I would just buy the 90 calls, and if you get a move in bonds, you can sell something after that. But to cap your convexity, your tail upside for 30 cents over 55 days, I see this situation where you're like, why did I sell this call?
Sure.
Versus, thank God I sold this call.
Sure. Now they're doing a calendar spread, so they want to use a limited amount of buying power. Your scenario would fit it too. How about just buying, if you have this scenario in June, just buying the 86.90 call spread for like $1.35 as the mid price. The natural offer is $1.36, so you can get filled at probably around $1.35. You definitely get filled. So you're just spending $1.35 over 55 days. Now, what is that? I mean, $3 a day. I mean, it's $2 a day. I mean, it's a small amount of risk. It's about a 60-40 shot against you. Let's just call it that you get the direction right. You got a 50-50 shot over 55 days, and you got a profit of, $270 versus the $130 you're putting in there. You'll feel like you hit a home run.
I did the 85-88 right at the money, 50-50 shot, synthetic, like. It's a 50-50 shot. It's like buying stock here, but using a lot less capital.
We're doing the same thing.
I think you said it perfectly.
Sure, and you do have TLT down ever so slightly 5 cents. You do have bonds trading 113.24.
Cool.
Next one, please. Selling the June Iron Fly at $3, simple and defined in AMD. Well, I like the idea that you're doing simple and defined. Defined would probably be the best word to use there.
You gotta love this. I mean, the 300 mark is exactly where we were yesterday, Todd. and the stock is now at 340. So
I hope you didn't do this.
Yeah, we don't change these or edit these or adjust them. So this just tells you like just how wild this whole thing has been.
Yes.
I think I'm going to do the same thing I did with Intel. I'm going to add a put diagonal spread here, try and make some money back. I did the 320, 300 put diagonal spread June, May. I did it at $15.
Okay.
I mean, I'm speechless.
I know you are.
I'm speechless.
I know. I hear you. Gold catching itself a little bit of a bid here. Gold up $3.50 after being down around $50.
This is, for a market that, Jamal's stat of the 200-point range, it's the first one since March, was a pretty interesting stat because you look underneath the surface, and if you picked out one of these stocks, like you look at AMD or Intel or just SMH, and you said, what did the market do this week? You would think the market as a whole was up 20%. Because some of these stocks are just, the realized volatility has been way bigger to the up, or has been way bigger in individual names versus what you've seen in the equities where, the market's kind of gone nowhere. Interesting.
You're right.
Next one, please.
Nothing here for AMD. Next one, please. IBM dropped way more than I expected today. I'm flipping bullish here and using Nick's favorite diagonal, July against May at the 240. IBM is trading at 226, down $5 today. Hope you waited on this trade. What do you think about this?
They're going July, so they're going a little further out in time.
July's 84 days, right? And you look at July options in here, and you're looking at $1.50 wide markets on this $225 stock. If it was 20-cent wide markets, 30-cent wide markets, I'd say, okay, yeah, $1.50. You got to be very careful here.
Yeah. I'm going to see if I can do like a kind of a smaller one.
Okay.
A little $5 wide, almost like a calendar spread here.
Okay.
I'm going June, May though. July is just a little too much time. It all else being equal, it's not that big of a difference in terms of the delta exposure in the trade itself. It's just a cost situation. Okay. Like if you go out to July, the spread that I'm looking at probably trades at $8-9 versus here it's $5. So it's just a little bit cheaper position because I don't really have a bone to pick here in IBM.
Okay.
All right. I'm in. Little cheapy diagonal spread, June, May. Call diagonal spread.
In AMD?
No, in IBM. I did AMD. That was the other one.
Got it. I got it now. Yeah, $5.43 debit. Got it. Awesome.
Cool.
Last one, son. We'll put you out of your misery. HD. It's boring, but some retail exposure doesn't sound bad in this market. Selling the June 330, 310 put spread in HD.
The June 330, 310. So you're kind of right at the money here.
330, 310. Now he's selling a put spread. He's selling it's neutral. It is a long delta trade.
Yeah, I'm trying.
Money put spread.
And when you're looking at this, the stock was probably a little bit higher. It was down. It was just down about $4. It just caught a little bit of a bid here.
Yeah,
I'm gonna try and route this for $5. See if I get it. I'm moving it to the 320, 300, which
it's got earnings May 19th also. But go ahead. Yes.
Mm-hmm. Similar to what they're looking at, but a little bit less aggressive. I did also do a call diagonal spread there. These markets kind of stink too. I'm telling you, something's funky. Every stock we've looked at has had ridiculous markets, and I don't blame the liquidity providers for.
I do.
No. If I was making markets, Mine would be, they would be retro. They'd be like your old school markets.
I knew there was some way you were going to slap me on this.
No, not slap you. Giving you, it was an ode to a past time.
You know, you got Frankie in the chat room. He can tell you, Bat made great markets. There was probably better markets someplace else, but the Bat made great markets.
I'm sure. I couldn't get filled on this HD trade. I moved it 50 cents, and I'm not going to chase it.
Got it. That's just the wide markets. All right, son.
Really poor performance.
I would say
you were
probably
not much of a help, if I'm completely honest. You know, like my performance was pretty bad. Yours was. We might have to talk about it.
I'm gonna have to talk to my peeps, come up with better ideas. What's our graph of what we did here? I think we did a IBM trade, we did a AMD trade, TLT, Roblox, CRN. Oh, there they go.
Yeah.
EX.
I have an HD position. So it was like net. It was like a 7 out of 10, maybe 6 out of 10. Like, just not a great.
I mean, I can't help you when some of these prices are $50 off.
I know, it's amazing. You see the AMD Iron Phi at 300. It was like, oops.
Let's take a quick 90-second break, but before we do, let's take a look at what's going on in this market real quick here. E-mini S&Ps are up $7.50, Nasdaq up $2.50. Russell's been weak for most of the day with the Dow down 185, Russell down 7 or 8. Volatility up by a nickel, 2071. Bonds 113.27, unchanged at not really at the lower end of their range, probably in the middle of their range for most of the day. Bitcoin unchanged, Ethereum basically unchanged, oil down 77 cents. Gold up $13, flirting with its highs of the day. But as you can see here, gold has been going sideways, not doing too much after trading down to 46.70 and change. Silver up 30 some odd cents.
Sorry.
What you doing?
I'm just closing out of some positions. I closed out of a CCJ. I had a diagonal spread, and I sold some extra calls again. So I made like 30, 40 cents on the calls, a couple that $1, $2 on the diagonal spread. Mm-hmm. I'm just trying to. I have so many positions on right now.
Yeah.
And so I'm looking at stuff that's like, you know, a marginal position in terms of like my overall interest in being in that stock. Marginal positions that are profitable. I can take off some risk, get rid of some stuff. Interesting to see though, AVGO, one of the bigger chip names, down on the session. It's down $5.
After AVGO traded all the way up to around $425. It's $10 off of that high.
I look at this and I think this is like in the realm of possibility for an AMD or an Intel.
Yeah, which was the reason why I say maybe, you know, if you had an existing position, you sit, but it hasn't helped you as it's $2 off of its highs.
No.
All right, you stink, son. We'll take a quick 90-second break and come back. We got more Tasty Live.
I mean, my God, it was yesterday, you know, like I was Wall Street Jesus here.
You were
short, you know, I'm banging out
Wall Street baby cheeses.
Yeah, banging out $2,500 on carb diagonal spreads. What do you want from me? Okay, what do you want from me?
Hitting a butterfly too. By the way, CAR trading down to 224, down $4. Look at this move here, top to bottom. You knew it was going to happen. It was just a matter of when. We said it on the show though. All right, son. Let's take a quick 90-second break. We'll come back. We got more Tasty Live with a nice little market measure for you, and then we got a bunch of people coming in from Tasty Trade. We'll be back in 90 seconds. This is Tasty Live.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nikki, we are back, son. Let's take a look at the market. We haven't had too much movement in the overall market itself. Even the S&Ps are hanging in there up 15 where they've been sitting for most of the day. NASDAQ's caught itself a little bit of a bid here, up 300 and change, although you can see here it's about 100 handles off of its highs, about 300, 250 handles off its lows. Russell's unchanged and the Dow's down 180. The Dow and the Russell have been the weakest of the group. NASDAQ's been the strongest of the group, followed by the E-mini S&Ps. That's been that way all day. Volatility's been sitting right here. We've had very little movement while we've been on this show in volatility, trading at 20.65. Bonds are up 7 ticks now, 114.02. Great job on buying that call spread in TL.
Thank you.
You're welcome. Bitcoin up 200, trading at 78.4 in the middle of its range. Ethereum up $15. Oil down $1.03, maybe giving a little bit of strength to the market here, trading at 94.81, and gold is up $30, flirting with its highs of the day after being lower by about $80. Silver up 60 cents, doing the same as gold. The gold-silver ratio, which we've talked about in passing a little bit, has gone from around $60 to $62. But it's been hanging out between 64 and 60. There's been no capitulation. There's been no frothiness. There's been no nothing in the silver ratio.
Yeah, damn, I was looking at silver earlier this morning. I mean, this moving gold
You traded it yesterday when it was down. You bought it nicely.
Yeah. Well, it's basically a scratch now.
I understand.
But this moving, I'm long the metals net. So this
got it. Yeah.
Okay, cool.
Awesome. Beautiful.
Yeah, I'm looking at my positions. I don't have anything else to do much of here. Should we do it? Should we get into the market measure? I'm sorry.
I'm ready. It's okay.
No need to raise your voice here. My God. Ooh, spooky.
I'm not raising my voice. I just have a loud voice. Matter of fact, if I'm quiet, that's usually when I'm mad.
Oh, ooh. Mad, not disappointed. When you're disappointed, it's a whole different story.
I've been your brother's been trying my patience a little bit. Okay,
shocking.
I'm getting a little older, and he's trying my patience. You know, little kids, little problems; big kids, bigger problems. You know, driving now. You know, a little bit more independence, separating, growing, hormones changing. You know, went through this with you. I'm going through it with him. You remember the McDonald's incident, right? I mean,
yes, of course.
Yeah, he hasn't had that yet, but he's trying to get there.
He'll do. Hey, it's a rite of passage for a Batista to do something really stupid. So he'll have his moment.
You typically learn from your mistakes as a Batista, but you have to make them. You have to feel that sting.
Yes, of course.
And he's doing that a little bit. So I said to him today. We've had about 3 or 4. We got a minute here. He said about 3 or 4. He's been done 3 or 4 kind of borderline dumb things. You know, just not thinking kind of things. Being a little selfish, you know, is really what it comes down to.
Sure. Yeah.
I had a very nice conversation with him, and after I'm done with the conversation, he goes, "Are you disappointed in me?" I said, "No, I'm not disappointed in you." He goes, "All right, well, I just don't want you to be disappointed in me." So I'm like, okay, all right. So now I know his trigger word. So from now on, I'm not going to argue with him, talk with him. I'm just going to say I'm disappointed in you.
There you go. It's always the worst. That's the dagger. That's the dagger. I'm not mad. I'm disappointed. You know.
Yes. It's a killer. I mean, it gets you right in the heart.
Yep. All right. So managing 0DT positions here. We're going beyond puts. We're talking calls. We're talking iron condors. It's a little bit of everything. So let's do it here.
And you put one on today, right?
Yeah. Well, we did the butterfly, so it's not.
Well, it's still a 0-day trade. Is my point? Is all I'm trying to make here.
Sure. That should be.
You paid $1.80 for it. It's trading around 220-ish or so.
All right. Well, we're letting it ride, baby.
Sure, long and strong. Look at you.
So
you got house money. You got house money anyway. Right? No, we've been doing good in SPX. We've been hitting.
Yeah, we've hit like 2 or 3 of them, which has been good.
Right, and you put these on for debits. If you put it on for now, and it's a significant debit, all things being equal, $2. I mean, we just looked at a TLT call spread that you're risking $2 over 55 days. This is $2 over, a couple of hours, a 6-hour day or whatever. So it's significant risk, everything relative, but it is $200 for the whole trade. And again, I'm just rounding things. But if you had done it for a 1 cent credit, it would be something like an 80 or 90% pop. So it's a trade that if you get direction right, and that's a big if because it's a 50-50 shot, it has a high probability trade.
For sure.
Awesome. And with a lot of convexity, which means you can make a lot more than you invested.
0DT options have been more liquid and accessible for the peeps here, increasing popularity among active premium sellers and premium buyers too. We talked about that earlier today. You can do that too. Selling out of the money spreads is one of the strongest inroads for retail traders to get involved, combining a high win rate and limited downside. I think most people are trading SPX either naked long or with spreads. I don't think many people are just selling naked options here. It's just too capital intensive. It's just not something you're going to do on a 0-day time frame. So everything we look at is going to be spreads, stuff like that.
Absolutely.
So selected
in fact, I think you'd be foolish for being naked in SPX just because of the amount of buying power it uses, even if you have it sitting on the sidelines.
No reason to take that sort of tail risk.
Correct.
In any fashion.
Right. And that movement will be huge.
Especially in such a short duration. I mean, you could always buy a wing even, looking at the 0-day today, you pay 10 cents, 15, 20 cents and buy, 200 points out of the money. You avoid the risk of ruin.
100%. Totally agree with you.
So selecting strategies and strikes is only the first step. Once a trade is on, management mechanics take up an active trader's day. So a lot of our focus here is quickly managing these trades, especially the iron condors or put spreads if you're doing one side or the other. We have been pretty aggressive with the management. These butterflies, we've been letting them sit just because a butterfly by nature, very slow moving trade, you kind of need it to be at expiration and it's cash settled. So, it settles to cash and not, there's no shares or anything like that. So we've already examined how different management mechanics affect zero DT short put verticals at the expected move. Today, we extend that investigation to the call side and iron condors for those who want to mix it up with their directional bias.
Take a look at it.
Let's do it.
Beyond puts. I like this.
Yes. Using 3 years of data, so that's what we've got here total, collecting it every 10 minutes. Considered selling $10 wide, zero DT spreads. So we're looking at put spreads, call spreads or iron condors. And we're doing these at 9 a.m. Chicago time, plus or minus 5 minutes, so right around that window. And we're going to do this every day with the short strikes at the expected move. So it's independently put spread, independently call spread, and then the combination together, the iron condor. Trades were monitored every 10 minutes to see if they have surpassed profit targets set at a percentage of the initial credit. So we're looking at different various profit targets as well as time. So we're going to be looking at the time of the day. Trades that did not reach their profit target were either left on through the close or exited at noon. Those are our two timing parameters. And then all trades were assumed to exercise at mid-price. It's as good as we could do. I know there's been discourse about SPX data and just, this looks different here or whatever. You got to assume mid-price is kind of as good as you can get here. Sometimes those spreads widen out, especially when you get craziness in the market. So that's what we use, mid-price.
Yep.
So the first slide here, we're looking at put verticals and our time exit is going to be noon. We have our close at 25% of the max profit. We also look at the 50% and then the time management only. So this is just taking the trades to noon, what your P&L looks like. And so what you can see here is that managing trades in general is going to help you from an average P&L standpoint versus just targeting noon. So 25% and 50% of the max profit had worked out better than just holding it to noon, which tells you that, the middle of the day you've had, maybe you're being tested a little bit more, volatility is changing, et cetera. The one
Markets are moving. What it's telling you here is that pretty much the pricing is spot on, which means that there's a lot of opportunity to make money and there's a lot of opportunity to risk money too, right? So where do you want to put that risk? You really want to put that risk on managing the trade, not putting it to, I hope the market does something. You know what I mean? And not look back at the FOMO of seeing something, that was a loser and you closed it and it becomes a winner, or it was a better winner and now you closed it, or if you sat with it because it was a small winner and you made more money. You can't look at it that way. You can't trade it that way. You got to stay a little bit more mechanical.
For sure. The one interesting part here is the max drawdown. It actually got a little bit lesser.
Yep.
So that's kind of an interesting spot here. Because I guess what you would take from that is some of the trades that you left on became significantly, or at least they came back from being a big loser in the morning.
Mm-hmm. Yeah.
So the next slide here, we're looking at put verticals held through the close. Again, super high probability. Obviously, the numbers get a lot better because the 3 years have been exceptionally bullish. And so, of course, if you had targeted 90% of the max profit or went closer at the money, you're going to have bigger numbers because it's been mostly an up market here. But it is interesting to see that just no management, doing nothing. It's easy to say, looking back at it, that was the thing to do. It's harder in practice, but those are that it's the data set we have. You can't.
Well, it's the only. They've only been around for a limited amount of time.
Yeah. And I mean, looking at the data is not absolute. It just is a look back of what happened in the market. It's not saying that this is going to continue or this is the right way to do it. It's just, we are quantifying what we have, available. That's it, is the last 3 years. So, it's harder to take big conclusions out of it.
That's correct. Although the conclusion you could come up with, and I know we're not anywhere near ending it yet, the conclusion you could come up with is there's some opportunity here.
Oh, for sure.
I mean, you kind of do a good job of skewing the opportunity to your own personal feel on the market, right? Like earlier today, I was saying, let's just take a look at an iron condor. We haven't done one today. And you said, you know what, I'm going to skew it to the upside and do a broken wing butterfly. There's no right or wrong answer until the market cooperates or doesn't in one direction or the other. But the thing here is they're popular for a reason. It's popular because there's a good bang for your buck, everything being relative. And it's a strategy that happens all in a day. And more importantly, or equally important, it's a cash settled product, which means people don't have to worry about stock the next day or assignments or exercises. It all just goes away for cash. It's probably the purest way of trading futures without trading futures. Like you get the directional bang for the market, bullish, bearish, or neutral, and it goes away after a day. Like you like we always talk about futures trading. For most people, futures trading is, the big futures especially, are too big for everyone, and they let it go on for too many days. Here, by default, you're out of it that day. It does guarantee you. It guarantees you a stop order. Like you're going to be out at the end of the day if you're only trading 0 days, whether, you like your position or hate your position. You know what I'm saying? It almost makes you have your own demon.
It's going to get even more liquid with the PDT rule going away, because it's going to allow for people to trade these that weren't able to exit. Like they had to set it and forget it. Now they're going to be able to, trade around this position. But call verticals. I mean, who sells calls? Call verticals have
only dumb money.
Call verticals have not worked. It's been a persistent up move. They haven't been horrible either. When you look at average P&L, I mean, it's not like you're losing a ton here. You do have the tail risk, but to have a negative P&L as well as just the tail risk, it's certainly been a tough trade to be on just that side of the market. There really isn't a positive spin here that I can give you. And the next slide, you'll see like closing at the end of the day, nothing really changes there, just like the put spreads, where it's even better if you just held to the end of the day. That's because the market's gone up. It's even worse if you held to the end of the day with just the call side because the market has gone up. And so, you have some pretty big tail risk here on these positions. Getting over to the iron condors, this is kind of the key here, is that the iron condors did work in some regard. So iron condors exited at noon, closed at 25% and 50%. You have the time management only, managing the trade, positive P&L, your max drawdown is a lot more digestible. It's better when you're looking at iron condors, the key is to manage the trade. I think if you're doing just one side, you're taking your own directional assumption. And if you're doing puts, I think it's a little bit more mechanical thing to do just because naturally over time markets go up, or have gone up over time. So I get that aspect here. If you're doing the call side, it's probably directional trade. If you're doing iron condors, you have to be actively managing them and taking profits because it removes the tail risk and it's a two-sided trade. So you should be looking to manage those a little bit more aggressively.
There's no, very much like your diagonal spreads that you do a lot of. There's no tail risk with a diagonal spread the way we trade them. As a matter of fact, you got the convexity of it, meaning the
convexity.
Convexity, convexity, whatever you're talking about there.
It's just, and I've gotten questions about this, and if you look at a risk profile, you'll see it. So it's literally the same as like what your glasses are. That's convex and concave. Those are the two things. So it's convexity has tail upside. You have a steep upside potential in that direction, where as something
The
that's
opposite of what you have when you're selling premium, if you're selling both
Yes.
sides, kind of thing.
Yes, exactly.
Yeah, but that also uses management too. Like they're not trades that you could just set and forget it. You do need to have some management in there too.
Yes, for sure.
That was the point I was trying to make. Mhm.
Yes. And so Iron Condors held through the close. Again, the same story here. Like with two-sided trades, you have to manage them pretty aggressively. And I think in this market, anything, and I've done this for the most part, some of the tails you couldn't avoid. You couldn't avoid a $20 move in Intel, $40 on top of $40 on top of $40 in AMD. Those are kind of tail risk. But some of these other names, like, we've had strangles in Amazon. We've had strangle where you sell them for $6 or $7 and you take it off for $100. It's not 50%, but if you're getting that stuff quick, you got to take off that risk because you have too much. You can't have too much tail risk on both sides of the market as you've watched this market move. At least not for now. Maybe if we get back to 2018 trading, where it was a nothing, grind every day, maybe it'll come into fashion. But at this point, you got to be a little more aggressive. You see it here. No management. You got kind of whacked at the end of the day.
Very good.
So the study period was broadly bullish. The last 3 years have been, I would call, bullish. More notably, directional neutral iron condors also held up well. The put spreads have been amazing. Iron condors have been pretty solid throughout that period of time. And I think, after looking back, it's hard after 3 years of upside move to be like, okay, I'm going to play this for 3 more years. You have the gambler's fallacy that tells you, you know what, maybe I'm going to do a little neutral trading here. So it's a hard, change of mindset. In a persistently rising market, however, repeated short call exposure meant repeated losses during extended run-ups. The max drawdown, which was the largest peak to trough, got well out of our hands, especially for traders who braved the close. So if you held things to close, you really got killed on those positions. The appeal of short out-of-the-money positions is that you don't need to be right, simply just not wrong, not too wrong. The cushion is what allows directional agnostic structures like iron condors to succeed, provided we identify the right management mechanics. I think you got to manage is basically the key.
Awesome. Good job out of you. Good job out of the market. Even the S&Ps are just hanging out, up 8 and change. Nasdaq's hanging out, up 240. Russell's up 20 cents. It's been unchanged for most of the day. What do you think here in the market? I mean, are we done? We're never done. So it's a trick question.
It is a trick question. I think we're done. I think we're done for that. I think 51.50 on the ES is about as good as we get, unless there's something. I think you have to key in on volatility.
Sure.
I think we're going to chop around here for the rest of the day. The markets in individual equities creep me out. I feel like at the end of the day today, it'll tell you whether there's risk into the weekend or not. You'll either get the move in volatility because volatility has been stubbornly high and you'll finally get it getting smashed, a typical VIX crush Friday, or it'll expand into the weekend. You'll have a bid in oil and it'll be risk on for, whatever craziness happens in the war situation.
Volatility isn't moving. It's going to stay right here or go higher, in my opinion, into the weekend. And I wouldn't be surprised if oil kind of sells off a little bit here.
I think I'm the other side. I think it's going to rally.
But I think it's going to be higher on Monday. So that's my kind of scenario that I see. But we'll see. I mean, again, these are guesses. Oil's down 66 cents as we talk.
Yeah.
All right, my friend. We're going to take a quick 90-second break. We're going to come back. We got Jason and Glenn coming in. Ooh. Tasty Trade World headquarters. We'll be back in
boys.
It was Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. We brought in the cream of the crop. That's right, my man Jason. Give me some sound effects.
Gentlemen.
Jason from Tasty Trade World Headquarters. How are you?
Not bad, not bad. But I want to start off this Friday morning and ask you guys, because, you know, fellow Italians, and first of all, people think I say Italian, it feels sound funny. What's your thought on clams on a pizza?
I love it.
Don't like it.
You don't like it? I got a lot
I'm not for it.
Well, Peter Klink, you know, gracious as he is, held a little draft party. And like, first of all, Klink, I want to grow up to be just like Klink. He's got the smoker. He's got the pizza oven. He's got the balcony. It's great. You know, I strive to be him one day. But anyways, he invited us over to make pizzas. Glenny Boy was here. It was great, and I got a lot of hate on the clams.
Yeah, I don't.
So you added them, or you didn't like them?
No, I love it. Like
I love it too. I think it's great. If you have a sophisticated palate, you can enjoy it.
Exactly.
The Gavones that you were with probably couldn't.
Thank you. I mean, like the first time I ever had a clam pie was in I think was it Lombardi's in New York, and then
you could have. A lot of it is also out in Connecticut.
Yeah,
they do a great job there too
with the Pete's. Oh yeah. With the Pete's, it was wonderful.
Oh, you guys are so cultured. My God.
Well, I mean, look,
I love clams on anything. Clam power.
Clam
power. Oh. I'm surprised he didn't take that one further and get us our HR complaint for the day.
Yeah, I'm trying to be a good boy.
Yeah,
what is Clink's a big Bears guy, season ticket holder. What did he think of the draft? I was talking about him. You know, we wanted a big, just like draft the biggest freaking monster that we could find in the draft. Put him at D tackle, DN. Like that's what we were looking at. What were his thoughts here?
I honestly, I go for the company. I really don't know what's going on. Me watching the draft is like me when I was trying to first learned options trading watching Tasty for the first time. I had no clue what was going on. I just knew that I wanted to do it. So like, yeah. So Glenny boy can definitely. I just know that we got some sort of safety.
Yes. Was Clink happy though? Generally, throughout the night,
he was, according to my sources. Yeah, he was.
Okay, that's good. That's good. All right, that's good. That makes me feel good because he's in the know.
He is. I mean, if you really want to put a nickel in him, just talk about the stadium malarkey going on. And
because he lives right down there, right? I mean, it's going to affect him. So,
and
he's all for it.
And I'm not one. I don't really hang out on X or Twitter, they call it. But apparently, he was viral yesterday for making a bunch of comments. He had over 400. What do they call it? Retweets or something?
Really?
Yeah, likes. I
don't even follow Clink. Can you please get me his?
Somebody give us a Clink track.
I think his handle is, correct me from Peter Clink, right?
It's some auto-generated Clink 1348.
No, it's not.
Like Twitter user 62587. Like one of those.
And .AOL.
Yeah. Oh, that's the number one. You know, you got a real. What do they call it? Dyed in the wool. Dyed in the wool. Is that the phrase? When the
wool. That's correct.
Yeah, dyed in the wool boomer. When they put their AOL handle as their Twitter name, like they just like pasted their email address as a username. If you see one of those, don't mess with that guy. He
will drill you. Oh yeah,
he'll drill you. He'll get you. You got to be careful.
I mean, my favorite would have to be the @sbcglobal.net. I mean, does SBC even exist anymore?
I don't think so.
The old Ameritech for those of you in the Chicagoland area. But yeah.
Tell me you're a boomer without telling me you're a boomer. Yeah, I got it.
Unbelievable.
All right, gentlemen. What
do you got for us?
What do you got for us for a list here? If Intel's not on there, I give up. But go ahead.
Oh, it's gonna be all the chips. You got to have them all. It's like Pokemon. Got to catch them all.
Got to catch them all. Well, starting at 20, SanDisk at 82, TQQQ at 49, Meta at 74, ARM at 120. That means it's testing its new high. GLD 37, PLTR 25, Apple at 51, SOXL at 87, EAT at 85, Procter & Gamble at 42, Netflix at 30, SLV at 37, Microsoft at 99, Amazon at 55, SMH at 74, NVIDIA at 35, last four, Micron at 78, Tesla at 5, AMD at 83, and Intel at 86. Talk about Intel. Holy cow. Man.
I was more surprised by EAT.
Yeah.
I looked at that too. What is that? It was down $3.90 or something. I don't know what it is.
Might be. I'm looking it up right now, but I think Dr. Jim. Right? I know it's Chili's, but I think it's they have Chili's. Is it just Chili's and Maggiano's? Is that it?
Really, Maggiano's, huh?
Yeah, I thought they included Bonefish. So I was going to say Jim might have a position on in there, but I don't know.
I mean, it's a $7 billion stock at market cap.
Yeah, it's just Chili's and Maggiano's. Wow.
Stay away from both of those. So stay away from EAT also, probably, would be my suggestion. There's no clam pizza there.
No, I mean, at a Chili's was the first time I ever had an IBC root beer in the glass bottle.
That's a classic.
Oh yeah,
and I will say, Chili's.
Chili's was the first time I ever ate on at a sit-down restaurant on a plastic dish.
Okay, you must have been in an airport.
Maybe it is Applebee's. Maybe it is. Applebee's.
Yeah. I actually,
it still makes for a good joke.
Chili's is a good one. Chili's gets a lot of flack. Chili's does it right.
Yeah, I think that one episode of The Office with the Dundies didn't do it much help. But if anything, that's great marketing, I would say.
Is the Chili's the one with the extra margarita? Like they shake it up, they pour it in, then they give you the extra too? Is that, or am I at Applebee's again?
I don't know which one that is.
No, I think that is Chili's that you're talking about. I think that is Chili's.
Whatever one that one is, you don't mind eating on the plastic plate.
Yeah.
I'm going to let you go, Jason.
All right. Pleasure. Thank you so much for the time.
Thank you, Jason.
You filling in, coming in. Let's get to my man, Glenn. Give me some noise. Glenn, while you're there, clean up a little bit, okay? I know you're sitting at my desk. You know, you spend some time at somebody's house. You sleep over. This is like sleeping over. Clean up a little bit. Make sure you leave the place the way you found it.
I was gonna say, don't touch anything. Don't move anything.
That was what I was going for.
Anything out of place and
heads will roll. Heads will roll.
I think you've got a silent alarm on this carafe, don't you?
Yeah. Oh yeah. It'll go off if you touch.
No, you can take the carafe and clean it. That would be good for me.
Just watch out because he has that heater plate too for the mug.
Oh,
and,
yeah.
You make sure that it's off for the weekend?
he's losing it a little bit, so he leaves it on a little bit. I think Jenny one time burned her hand on there.
Will you make sure it's off for the weekend, please?
I will. I do that as part of my weekly inspections as part of the fire safety team. So
that's right. You don't have to
worry about a thing. But yeah, Chili's. It's a great solo date spot. The 3 for me, $10.99.
There you go. You sit at the bar. You have you get a little wild. I agree with you.
You have $1 vodka lemonade. Take all the ice out.
It does actually correlate with being down bad as well.
Yeah,
because you do that like when you're really on a cold streak. You're like, you know what? I'm just gonna get lit at Chili's right now. Eat some chicken wings and mozzarella sticks.
Exactly. I continually, I think it's now 4 years it's been, and I have a group of friends that still give me flack for ordering red wine at the Evanston Chili's.
Did you ask them what their house wine was? Did you say, what's the house red here? And they're like,
get out.
Yeah.
No, they have
it's Yellowtail.
They have a great selection of barefoot.
Yeah, barefoot. There you go.
Would you like the barefoot or the Franzia, sir? Man, try.
Yeah,
what year is the Franzia?
Yes, our house wine is bagged. You can get a booze box.
Exactly. No, Clink was very happy with our new safety.
Oh, okay, that's good. That's good to hear. I
didn't think he would drop that low. He's an absolute specimen.
Yeah.
4.3, 540, 41-inch vertical. We'll take it.
Wow.
Yeah, we love it.
Well,
we need that. We need that speed back there. But now we need somebody to rush the passer, which is a bigger problem, I think.
And he's looking at his Twitter, it's replying to a bunch of commentary about the new stadiums. One is no papa, no $850 million in infrastructure for a new stadium.
Yeah.
Next response, no soup for you. He's getting he got 4,000 impressions on the last one.
Wow.
Good job.
Viral.
Taxpayers does not equal McCaskey ATM. Just say no.
I love it.
Awesome.
I love it. We got a local celebrity in our midst.
Exactly right.
Beautiful.
Very good. Where are the fires in your world these days?
No fires. All sunshine and rainbows all the time.
Did you see the news about Powell?
Yes, rejoice. He is.
They're dropping the charges against him. He's not a criminal anymore.
Free J. Powell.
We live in the stupidest freaking timeline of all time. It's the stupidest. You can't even make this.
Sir, he said he won't leave until you drop it. Can he do that? Yes, sir, he can.
That's exactly what happened. That's exactly what happened. Which makes you sick, because if it was actually something criminal, which I don't think it's criminal. I think it's just stupidity of the U.S. government, of just the horrible spending across the board in everything we do. But if it was actually something criminal, it's pretty scary that we could just erase it to push an agenda of getting him out.
Right. Agree with you there.
But for now, no criminal activity at the Fed. Thank goodness.
Thank God.
What that does do, we're not seeing, a huge dollar reaction by any mean on that news. But what it does do is allow these markets to, when the time comes, fully process what a Warsh nomination will mean, or what markets expect it to mean. We had a little bit of a bid earlier this week on his statements of Fed independence. defending himself not as a human sock puppet, but as, his own economist. So we'll see what the actual reaction is there. What we won't get, I believe, is any news before next week's FOMC meeting. But maybe there will be some commentary about Powell's decision with this case being dropped, if he'll stay on at all past May 15th, or if he will ride into the sunset and open, some Powell fund that maybe I could invest $100 into.
That I would be open to that too. I mean, the easier route, like why manage money when you could just do like speaking engagements for like $200,000 a pop?
Sure.
Like just go speak at Harvard, like do the Harvard commencement speech and just bink a couple $100,000. Like I feel like that's an easier, lower profile thing.
For him, yeah. The route I'm taking is taking my hairdryer to O'Hare and trying to find that sensor.
Did you see the video?
Yeah.
That was amazing. They have a video of the guy, and he's just like some Joe Schmo, just like sitting there with just a hair dryer, just like blowing it on the sensor. It's amazing.
Innovation, man, in all corners and pockets of the world.
Oh, yes.
I mean, did you really think they were going to do something with Powell, like really try him or something like that? I mean, was that really on the timeline?
I think what happened is Trump didn't realize that if he put this out there, that Powell would essentially be stuck in his spot until it was resolved. And so,
I mean, give credit to Tom Tillis, a Republican senator, for voicing his stance and willingness to block that into perpetuity. Just saying that the probe was ridiculous and he would not comply in his duties to confirm the next chair until that was out of the way. So, I don't think it was a situation anyone on all sides anticipated how it would play out, but glad that it did not drag on for longer than it had to. The only thing worse than government bureaucracy is adding more bureaucracy there. So they did a good job.
Wow, look at you from a young kid. You're very wise.
Thank you. So wise. It's unbelievable. Educated. We sit together and just like babble like a bunch of idiots. And then you get the one educated kid that comes in, like us two, we sound like morons. And you bring in the kid from, Northwestern, and he's like, oh, yes.
Yeah, but we sound like the people, son.
That I know. That's the appeal.
Right.
It's like you got to bring in the good stuff after.
I'll remember you guys when I'm in the Senate. That's the goal.
Will ya? Yeah. Will you give me the inside info so I could make some money?
Oh yeah, that's the real goal. Okay. There's no reason to be a senator for to do good. It's just to get tips.
Yeah, exactly.
That's not really your goal, is it? Because I got to buy you lunch if that's your goal. I might need you in the future.
Okay, then now it is my goal. I'm always looking for the next meal.
Meet me at Chili's
and not to pay for. Come on, take me to Maggiano's. Some fine.
Meet me at Maggiano's. That's like pseudo Italian food. We can get you there too. That's all you Gavones over there. You without a vowel at the end of your name. You like Maggiano's.
I think Maggiano's is okay. But what do you do? What we're looking at into the weekend, we're seeing a bid out of the U.S. dollar into the weekend. What we saw, interestingly, last weekend was, FX markets perhaps pricing in more uncertainty than equity markets into the weekend. We'll see if that kind of fade happens here. But for now, pretty tight ranges. As you know, not a super exciting week, but we've got a handful, dare I say plethora, of central banks next week that should add some market volatility to these FX markets. Until then, markets respecting recent ranges. Looks like we're holding in above 117 for this euro-dollar market. Similar price action across the board. We're just bouncing off of recent lows or highs, depending on what dollar pair you're looking at. I'd say it respects, not being too greedy, taking a couple pips here and there where you can. Respecting those ranges until we see some, more impactful headline. But of course, weekend gap risk. I think I should do some sort of analysis over the past month or so. I think every week there's been a notable gap in FX markets, at least on that Sunday night open. I'm not sure if there's not in these directional markets, not really a way to play that, because there's been gaps to both sides. And even if you knew there wouldn't be, harder to play, but I'll see what I can come up with.
I would be interested. I actually, I took a couple pips on my USD Canadian dollar position today.
Scoop. Very nice.
Thank you for that one.
All right.
Look at Nick trying to sound educated. Good job.
I'm trying. I'm learning.
Nice.
Very good.
We'll learn a little something from Glenn.
Yeah.
That was a compliment, Glenn.
Thank you. I appreciate
You're welcome.
It. I learned a great deal from you too as well.
S&P, about 20 handles off of their highs from last night, still up $25. NASDAQ up $340, about $80 or $90 off its highs. Russell up 5, and the Dow still down by 140. Volatility in by 11 cents. So far, nothing to do about nothing, but deep inside the market, chip stocks are really...
You had NVIDIA is up $7. I don't know if something happened or if everybody's just piling in on that one, but unbelievable.
They're going to the cream of the crop.
Yep.
All right, let's take a quick 90-second break and come back. We got more Tasty Live, son. Immediately following these messages with Liz and Jenny next. Peace. Good job, Glenn.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
To rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews. How you doing, Jenny?
Oh, Liz, you're in your Kentucky blue. Are you ready for Fraternity Moms Weekend?
I'm wearing a blue cape. That is correct. Fraternity Moms Weekend, here I come. So I was laughing because it's a legit fraternity, and they were he's like, so the schedule is we're gonna go to drink mimosas in the morning, then we're going to a winery, and then you're going to see Greek sing, and then we're going to a bar at 9:00. And I was like, yeah, no, pick one of the three. I don't
I don't roll like that anymore.
Yeah, 9 o'clock, your lights out. Your head's on the pillow by 9:30 every day. So I don't know.
I know. Wish me luck. But you know what? I've been training.
You've been training.
I have been training for this.
Well, you are looking good. Looking good. I'm actually right after the show going up to the lake for the first time. I think my first time in a long time. This is going to be my summer kickoff.
I know. I can't wait. You're going to have fun.
Now that we have our like at home studios as our backgrounds, I've got to go. I'm going to go start setting up a new studio up there.
Well, you are not, you're also not going to be here on Monday. I'm just letting the cat out of the bag. So I've got the amazing, the incomparable TP with me on Monday. So it'll be fun when, with him, but we'll be waiting patiently for you to get back. You will not be filming from the lake on Monday.
No, I'll be back on here. Exciting news. I will be back to see you live at the SIBO on Tuesday. And can we let the cat out of the bag?
Oh yeah, that's that same day. We're that just happened right now. Jenny and I are ringing the closing bell. Ding 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 ding.
Now on the trading floor, the traders, they kind of heckle the bell ringers. I'm not gonna lie.
Yes, you can't ring too much. You can't ring too little. You have to have a Goldilocks ring. It has to be just right. Especially us. They'll never let us live it down.
I mean, I don't know. We're going to actually have to practice and come up with how many times are we going to ring that bell? Because again, so if you watch some videos of people ringing the bell, sometimes it gets crazy. They ring it too many times.
Okay, here's what I think we need. I think we need to do you 3 and me 3. That's perfect because it'll be 6 total.
Yeah, ding. Yeah, that's probably good.
Yeah, you 3, me 3, and then we go like this.
I'm very excited to ring the bell. How many years were we on the SIBO and I've never rung the bell?
Well, at the end, you weren't there at the end. They were letting everybody as they were exiting the floor because people were retiring. Ring the bell. So I think I was up there and I think I rang the bell. But I rang the bell with like a group.
Yeah, but
it wasn't like, and here's Liz Deer King ringing the bell.
Liz and Jenny like gone wild, ringing the bell, out of control. Yep. How many times?
Yep.
That's gonna be Tuesday. So hopefully we can get some of our Tasty team there to get some live footage of us ringing the bell.
Yeah, I would love to get Vanetta down there. Yes, it'll be fun. So yeah, okay. Tuesday we're ringing the bell.
So I don't know what you want to talk about first because there's a lot going on. SPOOs are up, NASDAQ's up, Dow's down. We have a market measure recap to do. We've got some of our earnings trades to look at. We have a lot of tweets coming in, and we have a lot of tweets about Intel.
Yes, we do. Intel can't stop, won't stop. Love that little stock.
Intel. Who knew? Who knew when little Intel was $19 and nobody wanted it?
Yeah. Well, so who said this? It's back to its high of the .com bubble.
Yeah. Yeah. Fine. I mean, okay. Let's go on the platform. We have an Intel trade. We did the Bob on Fire for earnings. We put it in D's. Can we go pop into the platform? And
now.
And into the platform. Here it is. So we have this, we put a December Bob on Fire trade, which is, we did a call spread. Yeah, we put this on yesterday. We bought the 67.595 and we sold 2 puts to pay for it. Now, Intel's up $16. We're not up $1,600. We said usually you make about half on these. It didn't even make half. So instead of being up $1,600, and half of that would be $800. We're up about $700. So not quite half.
I'm surprised by that.
Yeah.
No, You know what though, Jenny? Mine, I did it too. You're looking at 4 wide markets.
Wide markets. What I also think is that these puts are holding more value than you would think they would be holding.
Because Intel still has an 82 rank.
Yeah, because Intel, right, exactly. So Intel's up $16, and this December 45 put only changed by $1.14. So and then this December 47 put only changed by $1.35. So these puts, even though the stock is up $16, these puts barely changed. Basically, pricing in that there's a real possibility that Intel can come back down. That's what this vol is telling you. These puts keeping their value.
Yeah.
So this call spread, 67.95 at 82, almost 83. that call spread's trading 1150. So the call spread, I think, that's not bad, but these puts still have a lot of value.
I know. I mean, I would close it and we can do something else.
I guess so.
Only because we made $626.
Yeah, sure.
I don't mind being in Intel. And I know you kind of switched yours out and just went with like 1 or 2 zebras. How much are the zebras?
No, when I looked at mine and there was still so much in my puts, I just kept mine. I left mine, but I don't.
In this account, let's close it and do something where.
Yeah, because the zebras were way too expensive.
You could also do with 1 put instead of 2, a buffer. Then if it comes down, great.
Yeah, and we don't have to keep chasing it. Like, we're not on a mission. We don't need to be.
Honestly, I wouldn't keep pennying this up. If you get hit, great. If you don't, great.
Right. Yeah.
Yeah.
So I'll leave it. We're trying to close it until I had a big move.
And I know we have some management to do, but to save our production crew some work, do you want to jump into our market movers?
Oh yeah, let's jump into
10-10, Laura, 10-10.
All right, we'll jump into our market movers, and then we'll get back to. I know we had a lot of tweets on Intel. We have a lot of other tweets coming in. Some great tweets. We will be checking Twitter. Put the hashtag LIZJNY. But you're right. 10-10. Here we go. Market measures weekly summary. This is a great one. So we thought we'd push this out to YouTube because there's lots of great info here.
And so Kai puts this together. This is from our amazing research team. And this is what they do during the week, throughout the week. Now, what's great about this is the weekly summary. We got part un and part deux in this because it's great. So we kind of packaged them all nicely together. So we're going to go through this.
All right, here we go. Weekly summary. Should we trade the small caps, part 1? And you don't have to find part 2 because it's going to be in this video.
Yes,
all right, are you ready, Liz?
And when we say small caps, we mean IWM, right? So you see that right there on the side. You can see Qs, SPYs, diamonds, IWM, and that's what these are worth. Okay. Despite its importance, the Russell 2000 has seen less discussion in recent years as other indices have outperformed it since the pandemic. Even the Dow ETF, designed for conservative returns with lower risk, has outperformed the Russell ETF in total return over the past few years. This raises the question, are small companies losing momentum, or is there still an advantage to investing in trading in the Russell?
Okay, great. So you can see the charts and it has underperformed, but is there still value in trading IWM? I think so. Let's see what the research team has to say about it.
I think so too. I do always trade IWM.
Yeah, I do too. And I usually have a lot of products that are in IWM. So let's take a look and see what they have to say. Okay, in comparison, the total market cap of the S&P 500 is around 50 trillion, while the Russell 2000 is less than 1/10 of that. For a perspective, Microsoft alone has a market value of 3.5 trillion, surpassing the entire Russell. That's kind of crazy when you
Wow, that's a crazy statistic.
I know, that's kind of crazy when you think about it.
It is, yes. But I mean, the nature of it, we all know Russells are the small caps, right? So they're the small fish, they're the small fries, they're the underdogs, they're the little guys, they're the ones that...
Yeah. Okay, so moving on. Here you go.
Okay, despite the smaller size of its component companies, the Russell 2000 itself is not insignificant. I like it. The IWM is the 7th most actively traded equity based on options trading notional value, not far behind QQQ, the ETF of the NASDAQ, and this indicates superior liquidity for traders.
And honestly, IWM is one of my favorite ETFs to trade over SPY, over Qs. IWM is one of my favorites for Jade Lizards because it's a lower price product. It seems to be more accessible to a wider range of people. I do like trading IWM.
I mean, I will be totally honest too. In my account, you'll find IWM well before you'll find the other ones because it is more accessible. It's smaller.
Right. Yeah. I'd rather put on a Jade Lizard or I'll do my Iron Condors in SPX and people know that. But if I'm doing a Jade Lizard, I'm going to do it in IWM.
Yeah. Right. It's more accessible to trade naked options in IWM than it is the other ones.
Yeah. Okay. While small caps may have underperformed other indices recently, they have shown better performance over the long run. So here's 2000 to 2025 data. Over the past 25 years, the IWM has outperformed the SPY 14 times, 56%, the Qs 11 times, 44%, and both 10 times, 40%.
That's impressive. So I was kind of glancing over there. IWM is the green bar. So this is not nice for people that are colorblind to be able to look at this. But it's the light green bar is IWM, and you can see it's kind of the little stock that could.
Right.
A little ETF that could. Sorry, I shouldn't call it a stock.
Yeah. Yeah. So just looking at when it yes, again, I don't know. It's interesting that they decided to do this study because you see a million commercials for QQQ, right? Every time I turn on TV, there's a QQQ commercial. I've never seen an IWM commercial.
I've never seen an IWM commercial. But I mean, I would argue, I mean, we know this, it's true because of the billions and billions of dollars. SPY and QQQ are the most common. Like if you ask somebody on the streets, they've probably heard of SPY and QQQ, but you ask them what IWM is, they might not know.
I'm just going to do a quick pop into the platform here and just take a look. So SPY, 13.5 million shares so far have traded.
Okay.
QQQ, we've got 15.9 million shares trading.
Okay.
Now let's go to IWM. 7. So half.
Yeah.
Half. But you know what, Liz? There hasn't been an IWM commercial until now.
This segment's brought to you by IWM.
All right. The median annual return for the IWM is 12.5%, surpassing the SPY's 11.2%.
Interesting. Okay. So the takeaways. The Russell 2000 provides exposure to a broad range of small cap stocks across various industries, offering opportunities for traders seeking growth and diversification.
Although the Russell 2000 hasn't performed well compared to other indices in recent years, over the long term, it still yields great returns, outperforming the SPY in more than 50% of the time. And sometimes when other indices get to all-time highs or just crazy moves, like we're seeing, when the NASDAQ's having crazy moves, or you see the SPY having crazy moves, sometimes I'll switch and be, less tech heavy and move more into something like the Russell, just a way to diversify a little bit.
Right. That is, you can diversify by strategy or by product. Okay. Now this is, should we trade the small caps part 2? Do you think it's going to be dispelled? So I think part 1 said, yes, we should trade the small caps.
Yes, I think part 1 is yes, trade the small caps. We'll see what part 2 is. Traders often point out that small companies and their indices show higher volatility than the S&P 500. This observation is accurate. That tells me use options. If you're going to trade IWM, use options.
That is interesting. Only for funsies. Can you pop into the platform and can we look at the implied volatilities of all three versus each other?
Okay, so we have in IWM, let's say I'm going to go to June with 55 days to go. Okay. We have a 26% implied volatility. I'm not looking at rank.
No, it's not rank. That's versus itself. That's why I think apples to apples would be good with June. Okay.
So 26% volatility in IWM, and SPY is what the VIX is based off of. So it's going to be close to the VIX. So you've got a 20 in SPY. And in Qs, you'll usually see higher than SPY. So you've got 24. So 20 in SPY, 24 in Qs, 26 in IWM.
I mean, honestly, that makes sense, but I'd never realized that.
And then I mentioned earlier, these are really expensive products. So let's say I want to sell a naked put. I'll just go to like a 20 delta. So if I want to sell a 20 delta put in triple Qs, getting $700 using 8,000.
It's expensive.
And in SPY, if I want to sell that same 20 delta put, I'm getting almost $700 using 10,000.
Yeah.
Okay. And then I can go to IWM. And in IWM, it's a lower price product.
With a higher volatility.
And here's the 20 delta. If I want to compare apples to apples, like here I'm getting almost $6. If I wanted to do,
if you're going to do two of them, you're still underneath. You're still under what the cost of the triple Qs was.
Right. So I can do 2 for 6,000. So I can get, $650 or close to $700 for 6,000 instead of 8,000 or 10,000. So for me, it does give you a little more credit for your buying power.
No, I agree. So that was good. That's a good comparison.
Okay. So what do we have here?
This is what we just did. Next slide. Next slide, please. Okay, most of the time their IVs exceed their implied volatilities exceed their historical volatilities. I'm just going to translate that. Among the 500 stocks in the S&P 5 in the SPX, 100 stocks in the Nasdaq, and 2,000 stocks in the RUT, a larger percentage of small cap stocks show more overstated IVs compared to their historical volatilities than those in the SPX and NDX. That makes sense.
And that's good for trading. When the IV is overstated, that's good for trading, right? We're getting more premium and the move is not as much as the move priced in.
Right.
So,
right. That is good for, is good for premium sellers.
okay, so here we have selling options in IWM yields a comparable success rate to its counterparts. It also provides the same, allergy season. My allergy season began yesterday.
Congratulations.
It also provides the same return on capital as the QQQ and is slightly better than SPY. This confirms that despite the seemingly high volatility in the Russell Index and its lower underlying performance in recent years, trading options remains robust. It delivers a performance level similar to other indices.
So there you go. And it's nicer because it's smaller. So you can kind of cut it in half. You can compare apples to apples and get the $7 for the same return on capital. But if you want half of that, you can do it.
And look at this. It shows you, I was pulling up 20 delta put, but here it's showing you 30 delta put, your win rate, similar, slightly lower in the Russell, median return on capital, higher than SPY, same as the NASDAQ.
Yeah. So it's right there.
Yeah.
It's just so forgotten. So the takeaways, the small cap index and its stocks are more volatile than the SPX and the S&P and the NASDAQ.
However, its IV and its component IVs are even higher, offering a strategic advantage when selling options.
Yes, by examining the performance of selling options in IWM, it is comparable to QQQ and slightly better than SPY in terms of return on capital. So that was a good study.
This segment brought to you by IWM. Now, Liz, let's get into the platform and put on a trade in IWM because
I think that sounds like a great idea. So I usually have a trade on an IWM, and I'm going to see what it is. It's been a slow and steady wins the race for me.
I like the idea of a Jade Lizard here. I know we've got $5 wide strikes, but if we have $5 wide strikes,
you can do a $5 wide Jade Lizard.
Yeah, and in IWM, I know it's not super capital heavy, but for us, so here this trade is using. Honestly, that's not even bad. $3,500 to get $500.
It isn't bad, but I think you might be able to do, it's got a 42 rank. It's small cap. I don't know that this isn't a big lizard candidate.
Oh, okay, sure. Now here, the Jade Lizard, our break even is around 248. The big lizard's going to really bring it in.
Oh, it's going to really bring it in.
It's going to really bring it in, but you can.
So, or even that, I'll do it on mine too, just because I don't need to order you around. But if we wanted to use less capital, you could even take that put down farther.
Oh, or we could, you have to bring it up, but you could do like the 2 put spreads. Actually, let's see. Here's what is a $7 wide put spread. And if I do 2 of them.
Your break even's way too high.
It's if you wanted to, if we have to define our risk, it has to be. So 1 call spread to 2 put spreads. You see, like here's 1 $5 wide call spread to 2 put spreads, and it's only $900 in risk, and the break even is.
I like it. It's right where the expected move is for the cycle. It's a high probability trade. You're in IWM. There's no risk to the upside. Well, there's a little risk to the upside, but
little bit,
relatively none.
I mean. I prefer the Jade Lizard with the naked put, but if we need to worry about, if we don't want to use $3,000 on the trade, we want to use $1,000. We have a pretty wide range, very little risk to the upside. If it goes up, we would take this off for a win, unless we let it go till expiration.
Yeah,
and
I would do this.
Only $900 in buying power.
So this is what we have to do sometimes for this account. I agree with you. And I glanced at my account, and I do trade Jade Lizards monthly in there, and it's done pretty well for me. Even, we've been down, we've been up, we've been all around, and that's what you expect to see. So I do have a $5 wide Jade Lizard in there now. You have to get a little bit more creative, and I like this.
I mean, honestly, if I had to pick a trade for IWM, it might be the Spike Lizard, but I don't.
This trade is not part of the YouTube because it just hopefully they clipped it out. But can you price out a Spike Lizard in here? Because that thing's amazing.
It is. It's going to look good. And
now it's very capital intensive. I know she's not going to press the button. No matter what happens, she's not going to press the button. But Spike Lizard gets you to the break even of a Jade Lizard with the profit potential of a big lizard.
So basically what we want to do is set up the big lizard, which is selling the straddle and buying a call, having no upside risk. So you can see this on the analysis page.
Honestly, Jenny, just move it to the 75, the 275, so you have a complete butterfly.
Okay.
Because you're at the 76. I mean, just to keep
the math. Just to keep the math.
Yeah,
simple.
there you go. It's still the same thing.
Okay, so I'm going to go back to the curve view. So this is the big lizard where we sell that straddle by a call, so we have no upside risk. Our risk is that naked put.
Yep.
And our profit potential is, $1,581. That's if we ended up. This is a long time to think, we're going to end up in the middle of that.
It's a long time.
But the spike will just move our break even. It'll move our break even. And
I see why you actually need to bring it back up, because you're going to need to collect more than $15.
Well,
or bring it down to the 85. Bring the 290 down to the 85. There you go.
No, let's just see. Like, this is how we would set up a big lizard, and then the spike lizard is just shifting it to all puts.
Yep.
Shifting it to all puts. So we've got this ratio spread, 1/2 ratio spread.
You're taking in an 80-cent credit. You were 80 cents over on the other side.
And then you complete the butterfly. So you've got 75.90, and then you go 60. So you complete the symmetrical This might sound tricky, but basically you're putting on a symmetrical butterfly, and then you're covering that 360
by selling 2 puts. So when you go down that far, you need 2 puts for like $1.30.
Yeah. Here, $1.70.
I think you can go down farther. Oh no, you can't.
No.
Put it on so you're taking in credit. There you go. You got a 16-cent credit. You're the 242. So our other break even was so high up. This brings your break even on this trade down to 242. And what's great about that, take a look at the buying power. The buying power actually went down. Not down, but it's lower than you think it's going to be.
This spike lizard looks great on paper, but I wouldn't do it unless I was willing to take 200 shares of IWM down here at the 240 level. Our break even is 242. So at 242, we'd get long 200 shares of IWM. But anywhere above it, we don't lose anything, and we have this wide range of making money. We have a lot of viewers who this is their favorite trade, the spike lizard.
A lot of viewers who this is their favorite trade, because it is a very high probability trade, especially when you're taking in a credit, and it moves your break even so far. Now, I want to say, Jenny and I, it's on the website right now, and I don't know if you can do that. If you go to the internet, can you do that?
I don't have that up.
Okay, but you can see our strategy series. There is a spike lizard, and I'm going to see if I can link it somehow into Twitter or the chat or something like that. But what's happening is we're redoing these as well. I do like the spike lizard, and I do like it in IWM.
I do like the spike lizard. IWM would be my stock of choice. We met people on the road who say they do the spike lizard and SPY. Again, you have to be willing to take the 200 shares. If someone said, Jenny, can you afford to take 200 shares of IWM at 242? If I said no, then I should never put this trade on.
No. Okay, in 242, I'm going to go look at the delta real quick on 242. It's pretty far down. So let's talk about this. It's a 12 delta. So this is why this trade looks enticing. But we're putting warning labels on it, because if you sold 2 puts down there, it'd be the same risk anyway. Your risk is as if you sold 2 puts. Where's 2 puts?
It's here. It's where we were at a month
ago.
At the low of this.
Literally a month ago, because today's the 24th. That was March 24th. Your bar was just on. A month ago, we were right there.
We were there.
That doesn't necessarily mean that we're going to go back there, but that's the risk parameters of a spike lizard. It's double the puts with a very far break even.
I'm kind of curious. Now, we do the spike lizard and we follow the monthly close to 45 days. But I'm kind of curious as to how wide this would be, how wide it would be, and how far your break even would be if you went further out in time. Let's say you went to December. Let's say you put this on as your yearly trade, and you left it. So here, how wide can you go? So 305, 275. I'm just going to keep it simple with a $25 wide to keep the math simple. So if you've got 275, 250, 275, 300. There's a $50 wide range, 50-point range, between 250 and 300.
You need like $3 on a put. You need to go to the 200.
You go to the 200. And then you're taking in a small credit. You've got that wide range. I just wanted to see. I wanted to see what this looked like out in time.
I mean, this looks fantastic out in time. And you go look at it on the chart. It hasn't been there in a while.
And you'd get long at 200.
Let me see.
Here.
Yeah. But we were there last year. Do you know what I mean? Like, or I guess that was a year and a half ago.
Oh, it was last May. It was exactly a year ago, right?
Mm-hmm.
So, May of 2025. But then I don't know how long it would take to get paid on something like this. If I go to the trade page, the theta on this is $5.50 a day. That's not bad.
That's not bad for a year.
Not bad.
I've never looked at a leaps spiked lizard using leaps.
And you could do these differently. Like you could put on the butterfly. I was gonna say you could put on the butterfly and then pay for it with a longer dated option, and then get that decay of the butterfly. Like, what if you just keep? I don't know. I'm not sure.
Well, there's lots of ways you can manipulate this or bend it to your own will. It's very similar to the Bob on Fire in the fact that you've got 2 puts. Bob on Fire's risk is 2 puts, but he wants it to go up from where it is. You want it to, you're fine if it stays right here. You've got it. This is almost like a neutral Bob on Fire trade.
But you have room because this, like, don't let this little window deceive you. It's 50 points wide, 250.
Oh no, I know it's 50 points wide. It's pretty good. But where Bob on Fire starts, he starts at the monies, right? So then if it continues to go up, you get it.
So your range is here, 250, and then all the way up to 300.
Yeah.
That would be new all-time highs in IWM. I've never done it that far out in time. I wanted to see how far you could get your short put.
It's not bad to put it in check.
Like to just put it on and leave it and see?
Yeah.
I don't know if it's a good use of capital. I don't know
if it's a good use of capital. If you're using that much, you can make $2,000. It's going to be a long time before you get the $2,000 out of it.
I know.
Yeah.
Because if someone just wants to make $1,000, you could just
sell 220 puts.
Yeah, sell 220 puts. And there's $1,000 using 4,000.
Yeah. And so sometimes I like that you can use these, and I do love layering things on top of each other, but sometimes the simplest is just the easiest.
But that's why I almost wonder, like, go further out with your put and then do these butterflies short term.
It's worth it, but this is still too big for our account, but it was fun to price it out. I say we go back to the big lizard that you had on.
Geez, if I can remember the strikes. It was 260, 253 twice.
Okay.
And then it was like $1 $5 wide. There we go.
There you go. Lock, load, ship.
All right.
Because we've got some management to do and some tweets to get to, because I can't believe what I'm looking at with Fabio.
Oh, I know. I'm going to go. Okay. So, I'll get to it. Because first we've got a lot of intel. So Mikey, this TGIF ladies, Liz, can you do your magic and have Intel close at 80? That's a real possibility. Look at this.
I totally think it's going to work with this outfit on, Mikey. Look, it's like
you've got your gold medallion, you've got your cape on.
It's totally going to work. I've got a cape on.
I think you've got a real chance. And then Jason Rourke, Intel earnings trade, followed Liz and Jenny. I have to give credit to Barbecue Master.
Yep. Bob on Fire. Love it, Jason.
He was up 816 this morning.
That was what mine was too.
Yeah, it's not up. It's not up right now quite as high as it was this morning. And Blue Wackadoo, the market is so wacky. I thought SPX IVR was broken yesterday. I mean, what? From 45 to 10 and back to 45? It could be, sometimes it could be like an...
I agree with you. It was broken. Like that's Blue Wackadoo knows this. Like if it prints that weird, it's...
Yeah, something's off. Like
something's amiss.
But this is what Liz is trying to get to. Oh, let me get back to him. Where is he? Fabio. I love this. No active trading for the next 10 days, but my personal VIX reached 50. Yeah, standing next to that thing for sure.
Love Navia. That's on my bucket list. So I always say that I do want to, I want to scuba dive, but I also have always wanted to go on a safari. Always.
It's being next to those wild animals is not on my bucket list, but Fabio, it looks amazing. And
he is petting a cheetah.
Yeah, never in a million years. Never in a million years. I won't even pet like my neighbor's bulldog.
You were afraid of your son's cat when it first came home.
Yeah, I was afraid of that bunny in the window well. That is crazy. Crazy.
I love it. Thanks for the pictures. We appreciate it. Personal.
So one day, you're inspirational Liz. One day she'll be doing this.
What I do, I would love to go on a safari. The closest thing I've got is Wild Trek Africa.
Hey, I did that. I did that. The safari at Epcot. So you guys like show up early in the morning. They hook you up. You go through. You're walking over the crocodiles. You're sitting in the middle of the safari having lunch.
Serengeti. Yeah, you're in the middle of the Serengeti. It's so funny.
That came close. They came close.
Yeah, it's close.
I think I was that close to the rhino.
You might have been.
All right, Ajit, click below. You'll love it.
Oh, I love it.
Oklo strangle.
Click below. You'll love it. That's fantastic. And Oklo strangle. He's pretty far. Look at that wide range. Oh my goodness.
Yeah.
He's 48 to 105. Is that correct? Yeah.
Yep. Yeah. I mean, there's so much premium in those options. So much. I think we took our put off. What? I thought we had a put and we took it off. What do we have here? We switched it to a bob on fire.
Yeah.
Oh yeah, we took off a put and switched it to a bob on fire. It's down $4 today. But
hold on. Just because we review this every day, it's down $4 today, and this is down $1.50. It's you lose less.
You lose less. You don't make quite as much, but you lose less. Yeah. So he's looking at a strangle. I want to say he was June.
Click on it. And there we go.
All right.
Expected
21 DTE. He's 515, 21 DTE.
515, 21 DTE. Expected move up or down $8. Oh, he's IVR, Delta.
6090.
6090. Okay.
6090 and 515. So 515, he's going through earnings. And he's the 60.
Expected move.
90. Okay.
I like it.
Here's the thing. I will sell calls sometimes mostly in an ETF. Like, we've got a short call. I have a short call on SMH or certain things I will sell a short call in. After listening to Nikki talk about his Intel and how he short calls at 50 or 55 in Intel, all I kept thinking to myself is, this is why I don't like to sell calls in individual products, because you never know what is going to happen.
He's short the 50 calls?
50 or 55, something like that.
That's a tough one.
Yeah, right. So my biggest losses have been from short naked calls. And Ajit, you are
he's a madman.
Certified badass option trader for sure. But there's no chance that I'm going to sell a naked call in Oklo.
Ajit's got these before, but I'm giving him one again.
Yeah. Yeah, I mean, there's a lot of premium, but there's a reason there's a lot of premium.
Yeah, and I'm kind of the same way, especially through earnings. But Ajit, you do you. I love it. And I love that he posts it.
He's a wild man.
He's a wild man. All right, let's pop back into Twitter because I think the next one's up. Yes, this is it. Thank you so much. Okay.
Mind eraser.
No, you gotta read the. It's from Samantha.
I know Spirit Airlines is in the government portfolio. Are you going to get back in? So I know.
Samantha,
how long was I in Spirit Airlines? And it went to the pink sheets and it's save queue. And I don't even know. I saw it in the news and I thought, come on.
Well, that's insane. No, you can't get in.
So it's on the pink sheets. I don't even know. Here we go. Is it coming up?
No.
I thought we would see a price. Even though it's on the pink sheets, I thought we would see a price.
No, you can't see a price. I mean, the options, open the options.
Well, these are just left over.
Yeah, that's what I'm saying. There's nothing there.
Okay, but it does trade on pink sheets. I just want to see save queue price right now.
Right now.
Right now. I think it was like 40 cents yesterday or something like that.
40 cents? I can't believe they took it away from you if it's still 40 cents.
Save queue right now. Price. 40 says 47 cents a share.
Well, wait, what up 7 cents?
Current price 47 cents.
I mean, I wonder if it's going to come back. That's crazy. Samantha, you made my day with that. Number one,
the mind eraser.
The mind eraser. Number two, that you remember that Jenny got taken out by a Spirit Airlines pilot.
I'm going to call the trade desk and tell them to buy my Spirit Airlines back or on the that you could do it.
Did they close it on you, or did you call to have it closed?
No, I remember like I had so much Spirit Airline, it wasn't even crazy. So I remember one day it popped up to like 70 cents or something, or 78 cents. I want to say my print was like 78 cents. One day it popped up to 78 cents and I was like, I'm going to sell it because I had so many thousands of shares of it. It actually made a difference.
That would make a difference.
So, but I'm going to call and get it back.
Yeah, call and get it back. Be like, I want my stock back. Call Quinton.
I want some pink. I want to buy some Save Q on the
$2. I want my $2.
I don't know exactly where it is right now, but I want it back.
Yeah. Yeah. Thank you, Samantha, for bringing that up. Oh, and Uncle B2. Awesome. Click on
there. He did it for us. There it is. The spiked lizard. Thanks, Uncle B2. Spiked lizard strategy.
Yeah.
And Brad, Liz, were you going crazy watching the SPX yesterday with your 0DTE? I was having a heart attack.
It was fine. It was all fine. It all turned out okay. But just like Fabio, I did have a personal VIX of about 50 at the end of the day. I was like, what's happening? But it was fine. Thank you, Brad. I appreciate you having a heart attack for me. But I diamond handsed it and made out okay.
Now, we have this Broken Butterfly we did yesterday.
Yep.
Which this never got pushed out because it must have filled after everything. I think this must have filled later in the day.
Oh, it did?
This must have filled during that fall.
11:04.
11:04. Our trades get pushed out at 11:01, and if this is filled at 11:04, it didn't make it.
It's hilarious that it's 11:04. Like it must have been real late.
Must have been real late because when I pushed the trades out, it wasn't filled. So, like we did yesterday, let's see if we could just butterfly this off for a dime because it's
a dime.
I don't want to pay 15 cents.
You can put it in for 10 cents.
Yeah, I'll put it in for 10 cents.
I mean, look at how far away this is. Once again, famous last words, because yesterday I was having a heart attack because I looked at the market. I was like, what the heck just happened?
So where was yesterday's? Yesterday's, because we butterflied it off, was center strike 70.75. And where did we close yesterday?
You can take a look at it.
Close 70.108.
Yeah. I mean, it went down, but it wasn't, it never really got that tested. So I've got them on today.
Crazy.
Mm-hmm.
Now, remember the study of like you can sell Monday put spreads on Friday, which would be you go to the expected move,
$10 wide,
sell a $10 wide.
It's 170.
But with everything going on in the world, I'm hesitant to do something like.
Oh, I agree. I think sometimes it works. I don't know that I want to get into. I mean, it was a great study. Don't get me wrong, and we're throwing things out there, but I don't know that I want to jump in that.
As far as management, I just want to see: is there anything that's like close to 50%?
And we have to take care of that hood because it's got a little red in the money sign.
Oh yeah.
And
telephone. We added those puts trying to make our money back in telephone. Let's just roll them out to June.
Sure.
We'll take our 60% on those and sell the 26 puts in June.
Perfect.
That's just telephone. Hood, we have a calendar. And it honestly was so far through this, it's come back down towards 80. I think it was, because we were trading in the 90s. So it's actually coming back.
Is there a possibility that we haven't gotten filled on anything yet today? Because I just looked and I don't know if I'm updating or not.
No.
Okay. Then we haven't gotten filled on anything yet today. Gotta go to all
okay. Wait. I was just on Hood. Yeah. Okay. So here, watch. We're gonna get filled on something. We're gonna roll telephone.
Done. Good job.
We are going to. I'm not gonna go up to 15 cents for SPX.
No.
I'm gonna adjust IWM.
Oh yeah, a couple pennies. There you go. That's
2
good.
pennies.
Good job.
Intel. I don't know what to think about Intel.
No, Intel you can leave. That's not something you need to you're working it. I would actually, you can even cancel it because it's so far away.
Yeah.
Okay, you're filled on 2 things. I just want to make sure I wasn't not updating.
Okay. So
we should look at Smash though too, because I think we have a reverse big lizard in it.
We have a reverse jade lizard in Smash.
Yeah.
But that's a May. Okay, let me sort by.
Okay, we got to get out of the hood. So hood, we have to close. You have to take action or you will take ownership because that 80 call is in the money.
No, it's a winner. This is a calendar. We paid $1.83. It's a 35% return. It's an earnings setup calendar. The plan was to actually, I don't know what the plan was in this. We only did one, so it probably wasn't.
We wanted it to it. Like we would be making more money right now if it was at 80. But you made money.
Hey, we got lucky with the recent down move in hood.
Yeah.
So that is off for a little calendar win. And you said Smash, we need to do something.
I mean, I think we should look at just because I know
this is insane. Smash up.
We're filled in SPX.
It's insane that Smash is up so much. The semiconductor index.
Can't stop, won't stop. Intel, all of them, all the semiconductors are up right now.
So we have this spread 500, 525, and we have this put spread. We have a reverse jade lizard. Now, I don't know what to think about this. My first thought would be, so the put spread you could buy back for 42 cents, okay? If we wanted to manage this. The put spread and then the call spread, we could roll out in time. And you can go to June.
Okay, so there's 21 days till expiration as well. So this is the right time to manage it.
So, I mean, going out in time with that call spread, keeping the same exact call spread, gives us a small credit, but then we can add on a new put spread to give us additional credit.
So, clear that out. So we're getting 35-cent credit. And then how much are we getting for the new put spread?
Okay, so here's what I'm going to do. I'm going to close the put spread we have. Okay, that's 45-cent debit.
How much are we taking credit total?
We took in over $5, right? We took in, here, I'm going to close everything else so we could just focus.
We took in $4.91.
All right, $4.91. I'm going to buy back the put spread for 47 cents. I mean, let's see if I get filled. Okay, bought back that put spread. Now, I'm going to roll that call spread out. And I'd love to give ourselves a little more room, but 510, 535.
I don't know. This thing could continue to go up in June.
Well, is moving it. I'm saying this is moving it 10 points. This is moving it up 10 points.
Yeah.
This is moving from 500 to 510. So that's 88 cents to move it up. But we could move the put spread.
All the way up.
Yeah, we could. So here's the $5 wide. That's $1.45. If we move it all the way up.
You're not getting much more, but you're getting, take it down a little bit. 217.
I mean, then we'd have essentially like a reverse big lizard on.
Yeah. There's no risk to the downside.
Right. Yeah, we'd have no risk to the downside. So, and then we're moving everything up. So if I close the 21 day, move it up from the 500 to the 510, 535. Okay, that's 70-cent debit. And I might have to, because before when I looked, it was like 82. The markets are a little wide.
Yeah, Smash. You know how much I love Smash. This is my worst nightmare stock.
Are
you out of the one?
Yeah, I'm out of the put spread. This is just the roll of the call spread.
Oh my God. And the offer is 302. That's very wide markets. Would you ever just want to do a diagonal?
Like a diagonal put spread?
Yeah.
So.
Because we're bearish here. Or you leave it. Or you leave it and say defined risk is defined risk is defined risk.
Well, the 21 day mark, I'm going to say either roll it or change it.
Well, or you roll up the put spread all the way. Like you can sell the 495.
That's true.
It's a Band-Aid over a bullet hole, but it's going to give you another $1.89.
Another tier is $2.
Yeah. Then it gives you more to work with when you roll it the next time.
Okay. We'll keep an eye on this. So now we move the put spread all the way up.
I mean, that's not ideal, but it's that's what you can do with, kind of with a reverse jade lizard or reverse big lizard.
And I'll do like Fazia's trick. So here, I'm going to take my little calculator and I'm going to put this in the notes. So we know
how much we collected. Good job.
Yeah. So let me clear out my calculator. So we took in $491 and we just got $195 for the roll, but we paid 48 cents to buy that spread back. So we took in $638. So $638. So I'm going to highlight this. Group positions. Hold on. Sometimes you have to move this up. Group positions. And then that's.
You can do it. You can do it.
I have to move it up. Here's what I have to do. I have to flip the symbols to get it higher. I just have to get it up here. Group positions, group. I gotta name this thing. Rename.
Yeah, get down there. You're almost there. There you go.
Okay, so what did I say? 638.
638.
638 total credit.
Yeah, I mean, perfect. I actually really like that. Then we don't have to go through that exercise again.
Yeah,
but
so now it's just there. Now we know.
Yeah, I also think this is our only smash trade that we've done.
Right, but
and then we've got one more tweet coming in too, so you've got smash taken care of. And we'll take a look at all that other stuff if anything needs to be closed. Then if you go top down.
From JM, welcome. I think a new tweeter. Check out the June 18, 33.26 strangle on JD. Ooh.
I love a good JD trade. So it's the June 33.26. Now you're going through earnings.
33.26.
It's almost. It's pretty bearish.
Yeah, right. I mean, you're getting you're more aggressive on your call. 33.20. I don't mind it, but you are going through earnings, but it's a short delta, it's a negative 18 delta, so it's a slightly bearish strangle. But again, I just like to give the word of caution with these naked options going through earnings. But JD, who knows? I don't know what will happen, but I don't know that we've ever seen any like real wild earnings moves in JD.
I haven't either, but it doesn't mean they're not coming. I don't even know.
Yeah, so I don't mind it. At least JD has had a nice run back, Liz.
Yeah, kind of. I mean, JD isn't that bad for me. I'm consistently
in it. It's had quite a run back.
You can see even with its down move, it hasn't been that bad.
No. I mean, it's trading 30 now. It was as low as 24, so it's had quite a rally.
Yeah, it has. But all right, let's make sure everything is buttoned up tight in here because we are both leaving right after the show.
Anything else with a red in the money sign? No. I don't know if we have anything else to do. We didn't get out of Intel yet.
Hey, let's close Adobe.
What do we have here? Just a put spread we put on yesterday. Yeah, sure. And we were looking at the naked option. If we would have done the naked option, we bought something because this account had to, but you could see the naked option is up $120.
Yeah,
so
17% instead of 15.
73. So
yeah, 17% instead of 15%. It's fine.
Yeah.
And we're getting back $1,500. We've got lots of powder dry for next week's earnings, Jenny. I can't wait.
Oh, what you and TP? I wonder what you're going to do on Monday.
I don't know. I don't know what the earnings are for next week. I'll have to take a look, but I know the big ones are on tap. So, but look what Intel did. Let's see where Intel is right now. Let's see if it's keeping its wings up.
I'm going to as soon as we get off, I'm going to call the trade desk about Save Q.
So I literally saw it up as high as 87. Let's see, it's high.
85.22, but I saw it there like pre-market.
Yeah.
Pre-market. And sometimes I like to have positions where I could trade stock in the extended hours. And so I thought, should I sell some stock pre-market? But with that Bob on Fire trade, you can't. Like, I can't, because if it kept running, I don't have that one-for-one ability.
So the zebra, you have the ability to manipulate aftermarket. Manipulate's the wrong word, but you have the ability to use the stock in the after hours with a zebra.
With a zebra or a long, like if long call, zebras,
yeah,
whatever. If you wanted to, you could have sold stock in the early morning hours. But with the Bob on Fire trade with that call spread and just the short puts, I didn't feel like I could sell some pre-market, because it did seem, that's when I called you. I was like, did you see Intel 87? That seemed high.
That was awesome. It was the best phone call I've received in weeks. It was. I've been ratcheting. So I know we're out of time, but I've been ratcheting up little baby small zebras, right, in my IRA. So my IRA, I was like, yes, this morning, because the zebras, it's 1-for-1 profit potential to the upside, and I'm ratcheting it up.
I mean, I don't know. My son, when he was 18, started with $5,000. Once I had to deposit money, I think I deposited $1,000 once when he got a margin call. Now he has the problem we have in our house is now he has almost $30,000, and my daughter's turning 18, and she said, when I get my account with $5,000, are you going to be able to turn it into $30,000 by the time I graduate college? And I was like,
were you like, sweetie, that was lightning in a bottle. We're not sure if we can have it again.
Like, between Intel and Oklo, I don't know if I can come up with picks like that again. Like, I don't think so. And that's the hard part. Annabelle and Lily are both getting their $5,000 accounts turning 18, and it's going to be hard to match.
It will be hard to match, but it's okay. It's okay.
I think we're going to do it. Challenge accepted.
JD wasn't nearly as successful because he was years behind Logan.
No, but I think, again, everyone tune in and watch the weekend special that I do with Dan Pazzarelli, because that's the type of trade I think, there's one in there, some low price product with high premium. I think that's where the girls need to start.
Yeah, I think you're probably right. All right, Jenny, we are out of time for right now. Everybody have a wonderful weekend. I will be here with TP on Monday. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. Liz will see you on Monday with TP.
I'll be here Monday.
Have a great weekend, Liz. Have a wonderful time in Kentucky.
Thanks.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. I'm here with Jamal. This is Options Traded Concepts Live, and the chippies are mooning.
Flying.
It's insane. I don't even know. I don't know what to say. Do you know what to say?
I mean, I'd love to tell you I'm surprised, man, but like when I saw that Texan move yesterday, I was like, ooh, this might be the beginning of something. Intel followed suit, made a big move. SMH mooning. Yeah, it's a very strong time period for the chips and the AI trade. It is here to stay, at least for a while.
Yeah, it's nuts. I mean, E-minis and NASDAQ are up. E-minis up 50, NASDAQ up almost 500, up almost 2% the NASDAQ, thanks to the chippies. But I mean, Intel, we played some earnings trades yesterday. This thing blew it out of the water, up $14. I think it was a $6 expected move, so over a 2 standard deviation move to the upside. And AMD is moving just as much, which is kind of crazy. A lot of people saying Intel success, you're going to see that in AMD. And I mean, like, this thing went from 200 to 350 in just a short period of time. And they have earnings coming up in 2 weeks with an implied move of 43 points, which is, even into this rally today, is still well over 10% of the stock price in terms of notional value for earnings week. So this might be the most explosive earnings announcement we have seen in quite some time.
I got another one for you. Qualcomm. Qualcomm has earnings next week, and it's one that's also making a run today as if it has earnings already. So keep an eye on that. Look, I like all these. I think it's possible that they continue to go. However, I do like the idea of some SOXS. I don't typically buy these ETFs, but I think this is an interesting one in this particular time period. If these names don't start going again and then all of a sudden there's a turnaround, I think this is an interesting little counterplay for the time being.
Yeah,
but don't get me wrong. I'm bullish on this whole move. I mean, I'm the guy who was like jumping to Intel, right? Like yesterday, I'm bullish on it. But look, I'm also a trader, man, and I think it's interesting to put it on a little counterplay.
Yeah, and I think this one's interesting because you can buy these you can buy a synthetic stock position with a long call and short put, or you can just buy these out of the money calls. And if you get a reversal, you're risking $100, but you can make 10x on these things. It's kind of crazy.
It's actually cheap enough to buy stock too. Believe it or not, Mikey, I bought stock today. I bought 100 shares. I'm just like, let's just see what happens here. But again, I like the long play. I mean, overall, look, at the end of the day, I'm still long NASDAQ via the short strangle. And I know that sounds weird, but you guys know what I mean. You option traders get it. I mean, we're a little bit in the money, so I'm pro NASDAQ. But this is a hell of a move more recently. Just trying to be a little, I'm trying not to get too carried away is really what I'm trying not to do.
I get it. But like we said, like if we just use vol futures as the source of truth, we're almost in a point of contango now between the K and the M contract, the M and the N, and the N and the Q. So regardless of what's happening in real life, the vol futures market is telling us that everything's going to be just fine and the markets are going to keep ripping higher. So, and that's exactly what's happening. For one reason or another, I think you're going to see this kind of sector growth and sector rotation. But when we see rotation, it might not mean, AMD going back down to 200. I think we see the rip in AMD, it kind of chops around. Then maybe you see the rip in the software stocks. And, that's how you get an E-mini future price of 7,700 in a few months, if it happens.
Yeah, no, for sure. I mean, we always said we needed the big names to participate, and you're seeing NVIDIA with a big participation today. And even though we took a little heat yesterday on Microsoft, that's back in the game. Google's moving higher. And then again, you got these ancillaries. It's hard to call an AMD an ancillary because it's such a big stock, but now those are moving as well, right? AMD and Intel and the like. So yeah, this is quite the bullishness sentiment right now. I'm loving it.
It's wild. It is wild. It looks like you've been pretty wild today. Intel. You bought 100 shares. We talked about that.
Yep, and that's XS. Yep. Intel was just closing out the calendar call. So again, mine were a little deep, and this is sort of the again, calendar calls are nice to find risk trades, but again, when you get the big move, sometimes it doesn't. Well, not sometimes. When you get the big move and you're a little bit in the money, you're not going to make as much money. That's why we do try to play these to the upside. But sometimes upside is not far enough. And so in this case, the 70 and the 72s were basically ran through. I took them off early enough. I think if this thing were to stay at like 84, which it was this morning when I took these off, eventually these are not going to be worth much at all. I paid more than like $2 and change for those two. So I lost a little bit on those two. But the one I was able to close out for a win was the 75 strike when stock pulled back a little bit, and I closed that for $100 gain, so that worked out just fine. And then actually the last thing there is the first thing I did. I was short a put, if you remember going back to last week. I was short a put for like $3 and change. Yeah, dude, for the 55 strike. So I was able to close that thing. That was the immediate win. That was awesome.
And that's in June.
That was in June. Yeah.
This just goes to show, like, even if you're on a further dated cycle, like when you put this on, this was 60 days out. It doesn't matter if you just have the short put. This is what we talk about all the time. Like, instead of selling an iron condor in an earnings name or a strangle in an earnings name, if you just take the one side, if you get a big delta move, you're going to lose value in that option. And this was a great example of that. Yes, they had earnings, which helps contract the value a bit. But even if they didn't have earnings, if they had a move like this, like an AMD, we can look at AMD puts. They're going to be losing a ton of value on this move in the earnings cycle, of course. Yeah, all these options have lost more than 50% just today. So yeah, great trades out of you.
Thank you,
and
sir.
Yeah,
I'm hoping people kind of de-risked a little bit. Those trades that we were looking at yesterday, those who were short the straddle, short the strangle, I'm hoping they protected themselves a little bit because this was the kind of move that was possible. I know it wasn't possible by options. I get that. But sometimes things are just a little bit, the time period is a little bit different. And I think as soon as you saw that Texan move, you see what's going on right now in semis in general and the bullishness of the market, this is the kind of thing that can happen.
Yeah, for sure. My only trade today so far has been Intel as well. So I had a call diagonal spread, bought June 65, sold the 1 day 74. That was deep in the money with zero extrinsic value. So we got all that extrinsic and just closed this for 1083. But this was so far in the money that it was basically trading for close to extrinsic or intrinsic value by itself. But still a nice win, taking it off here. And then really, I think exactly. The only other thing I want to do today is manipulate this short option again. So if we look at my order chains here, I sold this call initially 1 day out, and then Microsoft rallied up to 425. So I bought it back, moved it a week out, up to the 435 strike for a 50-cent credit. Then Microsoft sold off a couple days ago, moved it back down from 435 to 425, and picked up $2 and change, and now this option's worthless. So been doing really good with these kind of short-term manipulations. And the reason why we have so much flexibility is because even if I went out to the 7-day cycle, now I'm in the earnings cycle, and you have way more premium in the earnings cycle, especially on a day like today where the market's ripping higher. We can sell any of these options and pick up a credit. So I think I'm going to roll this to Monday and just sell the 425 again, because again, even if Microsoft rips 7 points, 8 points, 9 points higher and this option goes in the money on Monday, I know for a fact I can roll it to the May 1st cycle and move it to the 435, the 440, anywhere up here, and I'll be able to collect credit. So there's really no reason for me to not sell this option. The only thing that will hurt me is if Microsoft has a 20-point gap higher over the weekend and this is deep in the money and the position's basically done. But I'm not worried about that. So I'm going to make this move now and give myself that extra $1.30 if we just chop around here.
Yeah, I mean, you're just playing this thing like a harp, man. It is kind of fun, too, to have it doesn't really seem to make it that huge of a difference for this week, but just those Monday, Wednesday, and obviously Friday expirations now are going to be key, I think, in some of these earnings.
Yeah. Like literally the fact that there is a Monday option for Microsoft is the only reason I can pick up another $1.30. Otherwise, I would have to just go straight to the earnings cycle, which would be totally fine too. But I like the fact that we have this extra flexibility of collecting a little more premium before the earnings announcement. And if it does rally, I can then roll to the earnings announcement and move it 10, 15 points higher for credit.
And as we see that, it does seem as though they're not going to, well, at least in this case, they don't have the Wednesday. So that's interesting, right? Even though earnings are Wednesday after the close, but they don't have the Wednesday. That would have been fun. Why not?
Yeah.
Wait, is that the case for like the others, like Google, etc.? Huh.
Guess so.
They don't have the Wednesday.
Maybe it looks like Apple has the Wednesday, but Apple is actually April 30th later.
Is that a Thursday? That's a Thursday, right? Yeah. So that makes sense. They don't have the Thursday.
Yeah.
That sucks. So like, do you play Apple on a Wednesday earnings for the others? But then again, they're Wednesday after they close, so it doesn't really matter. But that's kind of funny.
Yeah. I would assume it's probably because they wanted to push the liquidity into the earnings cycle versus the Wednesday before. I don't know.
Yeah.
Who knows?
Yeah.
But yeah, Apple's down today. The only stock in the entire world that's down today. What a wild time. But yeah, rest of this position in portfolios doing okay. And SPX, I'm leaning short. 7,100 in the money, Iron Condor, 2 butterflies here that are just chopping around. But these are the butterflies I want if we were to reverse and have a big sell-off. These are going to come into play really quickly. So I feel good about this portfolio.
I feel good about mine too. Yeah.
Yeah.
I know. I'm like,
Fun
what am
time.
I missing?
Yeah.
I feel
Fun
really
time
good
to
about
be
it.
alive.
You know?
Yeah.
Like I
It's
could
like, why?
short, like I got good short vol plays. I got, like a downside play in the SPX Super Bear. I got upside plays. I feel good about it.
Yeah. Strange. Very strange. But yeah, if you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live, throw in your trade ideas, questions along the right-hand side chat, and we'll get to them right now. UAL.
Come on, people. What you got?
UAL. We have some positions in here.
Yeah, short fall.
Short putty. We've got Neil with a May 15th 90 strike short put and down $130. 90 strike short put, down $130 today. $190 overall, 40 delta. Roll down the same strike for more credit or down and out to prioritize strike or strike probability. That is up to you, my friend. I would say you don't need to do anything yet. If you want to stay in the near term, it's going to create a more volatile option price for you on upside moves and downside moves. But to your point, if you wanted to keep the 90 strike and move to June, you can pick up $2.50. Or you can give up some of that credit and move it down to the 85 strike or the 87.5. I would say, given this scenario, I wouldn't move it further down than the 85 strike because there's just no reason to pay a debit to move it further down and reduce your max profit. I think going to the 90, more bullish, going to the 85, more conservative, but you're still picking up a credit, and you would keep your original credit, add on 63 cents, and then that would be your new break even below the 85 strike if you moved there. So up to you.
Yeah, you can see vol is still a little elevated in the May cycle too compared to June. I'm short June. I know you are too, but there's that elevation. And I mean, if I had to guess, it's still it has a lot to do with what's going on with oil prices.
Yeah. So I mean, if you're comfortable with this risk and you plan on holding these 100 shares of risk anyways, I would probably just stay in May. Because of that heightened implied volatility relative to time. You can always roll to June and further as they open up more expirations. How would you trade Rocket Labs? What say you, Jamal?
I wouldn't. No. I mean, look, this, I just, I don't mean it like that. I just mean like I used to love trading names like this. I just feel like when you can trade Intel, when you can trade AMD, when you can trade Oracle, when you can trade like those really, really super liquid names, this is definitely higher beta than those, if you can believe it. So that's the only thing about it. That being said, I mean, I'd play it to the upside in the near term. I don't necessarily know if I'd do anything centered around earnings here. I think we're in a crazy time period. I mean, when you're seeing some of these massive names that are, the big names that we're talking about move the way that they move, this name will probably do a similar thing. I would probably be more risk. I don't even know if I'd be risk defined. I'd be like, if you're bullish in it, for example, this is where you really gotta start looking at. Again, I don't know their lean. I really don't. Like, I don't know how bullish they are in it. When I look at the way that some of these names are moving, I'm thinking like, why wouldn't Rocket Labs be at 100 and plus at this point? Like, why is that not a possibility? Or, this vol is a little bit high. I would probably sell downside, I guess. And that's more than I know this is a long-winded answer. I don't know. Again, I said at the outset I wouldn't, but I would probably sell downside, I guess, in the near term. I'm assuming they're bullish on it. Most people seem to be bullish on Rocket Lab. I've yet heard anybody say that they're bearish on it. Have you?
I don't think so, yeah. I agree with you. I think you can use the same logic as Microsoft. If you are bullish on Rocket Labs, you can sell this really heightened implied volatility in the 7-day. You know earnings are coming up in the 14-day. You could sell, let's say, the 73 put for $1. This gives you $100 next week if Rocket Lab stays above 73. If it doesn't, you can buy back the 73, roll it into the earnings cycle or even into the May monthly. Let's just look at the earnings cycle and look at all this premium down here. Like, you can buy back the 73 and you can move it down to the 70 for another $1 credit. So you have a lot of flexibility here in terms of strike manipulation. If you go into the earning cycle and you want to be undefined risk, even more so if you go into the May cycle. Look at that. You can go from 73 to 65. If you had this put on right now for another 50 cents and give yourself 8 more points of downside protection. So plenty of flexibility if you have undefined risk. If you don't, I would just keep it simple. I would go to June or July. If you're bullish, I would buy a diagonal spread or calendar spread. June is 85. The 85 strikes $10. July, the 85 strikes $12. Pay an extra couple $100 for another month. I think it's worth it if you can afford it. But if not, don't mind June. And then you just sell the expected move against it in the 14-day, which happens to be way up here where you still pick up $2. So like you could do a 10-point wide diagonal spread for $760. Okay. If you get the upside move, you're making $400 or $500 on this trade. So I think if you want to trade it, plenty of flexibility, but it's definitely volatile.
Yeah, that's probably again, if you're bullish, that's probably the best one to do, that diagonal. I just don't want to be short any puts heading into earnings. I really don't. This name that makes me nervous. I don't know enough about it.
Yeah.
That's probably my biggest caveat.
Yeah. Fair. But yeah, plenty of flexibility there, especially with the ability to sell the 7-day, go into the 14-day, or just stay defined risk and pick up that premium that's juiced up for earnings. Griffin Jones, holding my NVIDIA 200 short puts. Don't blame you.
Don't blame me at all.
Don't blame you. Yeah. I would say, like, today's a great move for you. If you're in May, I don't know where you are, but if you're in May, you're making $300 today. But if you get another move like this, up $10 on Monday, and this 385 goes to like $1.80, like you're seeing here, now all of a sudden you're holding risk. You don't have that much more to make. So if you get another move like this and you get $1.80 debit cost, maybe you consider closing it, especially if you sold this for $600.
Yeah, we get another move. I'm closing my diagonal. I still have the June 205, May 220 diagonal in there. So yeah, we get another move. Actually, I have the May 22nd cycle. So if we get another move, yeah, I'm out.
Love it. Jamal, this is a pat on the back for you. Vol for Life says, thank you. I bought a 1-day call in Intel and it hedged all of the losses on the in-money straddle.
Good.
Remember talking about that? Yeah.
Oh yeah.
I think it was the 70, maybe. I think it was the 70 we were talking about.
Yeah,
it was like $1.
67 yesterday. Yeah. Again, I mean, who gives a damn if it's implied vol is high? That's $1. $1 versus like the whatever you were short strikes for the downside. I mean, that's an easy call.
Yeah. Yeah, especially because
got you vol for life.
Yeah. That was a great call too, because the downside straddle, if Intel went down $6-7, you would lose your $100, but you'd make back $6 on your straddle. So it was a win-win situation in terms of hedging your losses to the upside and then being profitable if it reversed. Now you just need this thing to really reverse, or maybe you exit the position. If this was your kind of white flag maneuver, if it went higher, now you exit and at least this didn't hurt you.
Mm-hmm.
The move in chips caught me with a short AMD 240 call. I have to believe I'm at risk of assignment. How would you address this? Sell a 350 straddle in June? Yeah, this is tough for sure. AMD 240 call.
What expiration?
If you're in May, you still have about $1 of extrinsic value here. So I would say you're not at risk of assignment yet. If you're in May, if you're in June, you're definitely not, because this will have more extrinsic value. Mm-hmm. But yeah, this one's tough because it's just mooning, and now you have a high delta short in the money option. A 350 straddle in June gives you $7,000 in premium. So, I mean, it's kind of a similar situation as Intel, right? I mean, if you have a straddle and you take on some downside risk in the straddle, you are making back a lot in your short put or your short call here that's in the money. If it rallies, you have risk on both sides. So you're doubling your risk into this move. So I don't know. Maybe you do like an upside butterfly instead. Something like that. Like, what is a 7-day upside butterfly?
Yeah, it's a tough one.
Because really, you don't want to add more risk into this kind of move, because this move can just continue. It seems hard to believe, but like, we're getting into stratospheric prices here.
Yeah.
355, 390, and 435, 440. Is this right? Yeah, this is 40 points wide. This is 45 points wide for $6. Maybe something like this.
Yeah.
Because you're basically putting on, what am I doing wrong here? 355, 390.
Yeah, they're just not giving you the $50 strike. They're going up 10 points each after a while.
Oh, there you go.
Sucks. Yeah.
Yeah. So, oh, there you go. 35 points wide. So 35 points wide, put on $600 of risk. You can make $3,000 if you get a rally up to 390. But this is another scenario where, like, you have a small debit relative to your short call value. If AMD reverses, you will make back way more on your short call that's in the money losing value than this debit paid here. But if it rallies up to 390, which is another 40 points, and at the expected move now on the 7-day, you can offset a lot of those losses. So I might consider something like this against your short call that's in the money versus having a straddle that could just be blown out on either side if this thing moves in a big way.
Yeah, no, that's good. I mean, that you're not paying too much. I like that.
Yeah, especially with the 240, it's trading for $11,000. So
yeah,
if you get a reversal of this move, you would make back $5,000. You'd lose $600 on your straddle, or you're not your straddle, your butterfly, but you still have it on. So if it reverses and then rallies again, like maybe you pin it or you get lucky, but like that's how I would approach it. Missed the adjustment in MNQ earlier this week. If I adjust now to the 27,750, 27,800, it will be a debit. Are there other strikes to consider?
Tickety look. What they have on?
I think they might have had your previous
27K. Yeah.
Yeah. Were you in May and then you went to June?
No, I've been in June.
Okay.
The last 2 rolls.
Cool. So you had this 27,000 straddle?
Correct.
Yeah. So the whole thesis with these trades, Jamal has the MNQ, I have the MES, is like just not having upside risk. You're not too crazy in the money here. I mean, you're in the money by 300-400 points, but you're basically flat delta. I mean, this is nothing. So if you wanted to lean a little bit short, that's totally fine. But if you wanted to stick to what we've been doing, it looks like something like this, like moving to a 2820, 28,200 straddle, or, you're basically just shifting your downside to upside and picking up more premium here. So like it looks like something like this, shifting your 27,000 to the 28.5 for a small credit, and you're shifting your bearish delta to bullish delta. You could go inverted, something like that. But let's look at your 27,750, 27,800.
Mm-hmm.
Yeah, cost a debit, but the debit's only $170. So even if you move to this, like $170 isn't the end of the world, especially when you consider you're going to be in this trade for a long period of time.
Yeah, I'm trying to think where it was when I did that. Was it still under? I think it was just under 27, 20. Yeah, I think it might have been just under 27K. I'm trying to see.
Yeah, it was at 26,828.
Okay, yeah. Wow, it's been a week, huh?
Crazy. But yeah, I mean, that's it. Like when I made my adjustment, I moved the 6,700 straddle to a 74. No, I had a 7,100 straddle.
Yeah.
That I moved to the 7,400 straddle. And I was like, okay, I'll just be in this for a couple months because we won't get up to 74 anytime soon. And now here we are, 2 trading days away from 7,400. It's literally insane. But I mean, it's been like the whole idea is not taking bearish delta in the S&P 500 and the NASDAQ. And it's worked out well so far with the credit we've received and just adjusting delta along the way. How would you manage the short 65 straddle now? Yeah. It's tough. I think
short 65 straddle for
the one that where he bought the call against the 65 straddle.
Oh,
so now you're just deep in the money. Out in June. So yeah, you just have bearish delta here now. You still have $500 of extrinsic value. I think if you were to hedge, net credit's 1153. So you could do this. You could go to a 75 inversion, 65, 75 inversion. If you want to keep it on, you'd pick up another $300. You'd be at $1,500 in premium. And well, actually, you'd be at $1,500 in premium for this straddle, plus whatever you would sell your long call out for, because that is included in this now too. So the 70 call, like if you had this for, if you bought this for $1 and it's $1,100 now, you would have the 65.75 for $2,500 of credit. And this is where your expiration risk graph would be. So I actually don't mind that move, 65.75, or because now you have $2,500 in credit, you could go all the way up to 80 and do a 15-point wide inversion and pick up a little bit more credit. You probably end up with like $28 in premium, and now you're here. But eventually you need Intel to stop rallying. You need it to come back down in this range, and then you'll be good. But that 70 strike call that you bought does get added to this net credit received because you paid a dollar debit, you sold it for $1,100. It's all part of this process here.
I mean, this fall is exploding. Like this fall was like, I feel like it was like 62 to 65 when I sold that put to the downside the other day. Mm-hmm. Now it's like 70s. Yeah.
It's been wild. Same with AMD. AMD's vol is up 13%, 14% in 5 days. So this is actually, the increasing vol is good for management of a position like this. Because it gives you more flexibility than if you were dealing with like 25% vol into a 14-point move.
Mm-hmm.
What new SPX butterfly trades can we get into for the downside? Good question. We've just been doing 100-point wide, 20 days out, 30 days out, something like that. End of month. Like, what does this look like? A retreat to 7K? Is it possible?
Is it?
Yeah, $6 for a down 100-point wide. Not too bad. Within the expected move. But yeah, I think if you wanted to go near term, you could do that. We've been doing 100-point, 50-point wide butterflies near the expected move or at the expected move with the short options. That's all you can really do.
7K. I mean, again, my Super Bears, I find it interesting to organize these things around big round strikes, big round numbers, whether it's 7,100, whether it's 7K. I mean, I think when you get to those areas, you can see a flush. We literally saw that yesterday. I mean, we got to 7,100 and we had a little flush and then it bounced back.
Yeah. Yeah. The round numbers are certainly magnetized. At least it seems. When we get to them,
there's usually a lot of volume centered around them.
Yeah, for sure.
Option volume, that is.
Nice Boy has 2 SPX butterflies for August 31st. 66.8, 67.7, 68.50. And then another one that's 100 points wide. So yeah, going out further just makes it cheaper, but it will desensitize the movement of them because there's a lot more extrinsic value in these cycles. But they're still viable downside hedges. You can still make a couple $100 out of them if we get a move down there.
For sure. Nobody knows where things are going. I mean, hell, we could keep mooning through this current situation. We could be up at 7,500 through summer and then all of a sudden break down in August. I mean, we've seen crazier things happen before. 2015, that happened. We were moving really well. And then August came and then boom, we just dropped big. So you just never know.
Yeah. This market is crazy.
Yeah.
80-50, 90-40, Iron Condor, and SEI. Getting the heebie-jeebies. It could burn past 80 after earnings. Any management ideas? Thinking of taking some credit off, rolling the put side. Yeah, the put side's worthless. You're almost at zero bid here, but this bid-ask spread is going to be problematic for you in terms of getting out of it. You might have to give up some premium to close it. And I don't love the idea of moving this put spread up because you're not going to really pick up too much premium. Like if you buy this back for, let's call it 25 cents, I think you might have to move it higher because this is a $1.20 wide bid-ask spread. But let's just say you buy it back for 20 cents and you move it up to the 65.55. You do pick up $2.40, but now you have a butterfly because this is a $16 implied move and you'd be at 65.80 short, which is right there. So you would need this to chop around post earnings in a couple days here. But yeah, I think at the very least, if you have this 80-90 on, like this is where your premium is right now, I would get rid of that 50-40 put spread just in case the floor drops out of this thing. There's no reason to have that on if you can close it for a decent value.
Mm-hmm.
Deep in the money on a AMD 300 strike call.
Oh boy.
What are my options? 5:15 expiration. Yeah. Same story here. If you just have the short call, you could throw in a short put, pick up $600. It's not going to hurt you if you get a downside move because your call's 10 times more valuable than your put. It's just really tough. Really tough. Because these options are super expensive too. Like I think really it's a similar story. Like maybe you throw on a butterfly, 7-day butterfly, 360, 380, 400. And why? What do I have here? Here we go. Yeah, $300, 7-day butterfly at the expected move, $1,600 in hedgeability. But if it reverses, you got your short call that's losing a ton of value. This won't even matter if that happens. Anything else?
No, I mean, that's kind of the same. You guys got balls, man, going short calls in these names. I mean, man.
Yeah. I mean, nobody can see these moves coming, but these moves don't happen in ETFs. At least like the E-minis NASDAQ. SMH, Big move. Big move. But at least with SMH, like this is a 5% move. AMD, this is a 15% move. So in SMH, if you had a short call in SMH, you have more flexibility because the gap isn't as strong. So you wouldn't have gone so far in the money. You could buy back the 500 in May, move it out to the 520 in June, or the 530 for scratch. Like you just have a lot more flexibility when the moves aren't so drastic pre-market. But yeah, I think in terms of AMD hedging, the butterfly makes a lot of sense with such a valuable short call that's in the money. But yeah, it's certainly tough.
Indeed.
Could also buy shares. It's another way to do it.
In AMD?
Yeah, maybe not 100, but you could buy like 50 shares, something that just gives you that static delta. Yeah.
Yep.
Let's see. Roll to spy, short call spread up and out from May to June. 7:15, 7:30 for small debit. Should I be running an audible here, punt, or just sit and wait? Let's take a look. 7:15, 7:30. 7:15, 7:30 for $8. Currently trading for. Good question. It's basically a risk one to make one. I think selling downside here, you're not going to pick up that much premium for a 15-point wide. You pick up $2 to add risk to the downside, which I don't necessarily love. But the good thing is this spread isn't going to really move, even if it goes in the money. It's trading for $8 now at the money. If it goes in the money, it's still going to be trading for a similar value. We can see this here. The 700, 715 is trading for 1040. So you'll lose a couple $100, but you're not going to lose the full max value because you have a ton of extrinsic value here preventing you from losing full intrinsic value. So maybe you wait. These are all tough trades. You guys have the tough questions for us today.
You know, I kind of like that actually.
Yeah.
That 7:15, 7:30 call spread. I feel like I'm just somehow accumulating more and more long deltas. And I like that risk reward actually. I'm going to throw that on just for the hell of it. 820.
Yeah. Not too bad. Not too shabby. AMD 360, 220 strangle. Close the put. Short call now hurts. Earnings. Don't want a short exposure for earnings. Prefer long stock. Wait to sell a put on a down move or buy the stock. Good question.
Wait, what is that again? What is it? Say that again.
They had a strangle.
I was in the middle of trading something.
They had a strangle. They got rid of the put. They just have the 360 call now in May.
Okay.
I assume. Oh, 55 days. They have it in June.
Okay.
360 call. For $3,000. So
that's it. Okay.
Yeah, if you don't want short exposure, you want to buy stock, buying stock now is totally fine. Selling a put into a move like this only hedges you a little bit. If you have 100 shares against your call, you have no risk to the upside. So if you've got a larger account and you're comfortable buying 100 shares and you want the shares anyways, you'll still have a 10% cost basis reduction just with this call alone, even if AMD drops significantly. So yeah, I think the conservative, if you have a larger account, the conservative move is buy 100 shares to offset all of your upside risk here. But yeah, that's pretty much it. I don't know what else
These are tough questions for my clients. We don't love selling upside.
Yeah.
I mean, I just feel like you got to have a plan if you sell upside. I just feel like you got to have a little bit of long that you're willing to lose on to be able to sell that upside because, look, man, stocks do this. Mm-hmm. I know we just came out of a real big downturn, but stocks do this. When they do, it feels relentless.
Yeah. There's no escaping it. It will happen eventually. 350, 330, 310. Here's another idea. So we talked about butterflies to the upside. Let's say you buy 100 shares in AMD. You've got your short call that's worth $3,000. You could buy a 7-day put butterfly 20 points wide for $400. This would protect you on any of these like minimal downside moves over the week, and then that would be a nice cost basis reduction on your shares if you bought 100 shares. So I like that too. Like if you're worried about buying shares now and then seeing this thing reverse, just throw on a little bit more for some more protection. And you can make this wider too. You could go 350, 320, 290. This really gives you a wide range. But yeah, all these are tough. But I kind of like this. If you're buying 100 shares, throwing on a little bit more cheddar for some more downside protection against your shares doesn't hurt.
Yeah.
Where are we? Is this true? Fair value rolls are P&L neutral. The real cost is slippage, not the roll itself. I never heard it phrased like that, but it's simple and I think it's true. Yeah, sure. So I think what you're saying is if I have a short put in AMD for $3.30 and I buy back and I roll it out to May and down to a 292.5 or whatever for a scratch, the cost is slippage, which is the bid-ask spread, if it applies, where you're losing fair value because of whatever, markets are wider. But yeah, I mean the whole thing is true where you're just shifting the value of the option. You're going from a 7-day 320 option for 330 to a 14-day 290 option for 330. But the background risk effect is that you're reducing your risk by 30 points. You're not collecting premium to reduce your cost basis with premium. You're reducing your risk with strike movement and giving up the premium. So I think that's what you're talking about, but let us know if we're off base there.
Yeah.
Google. Okay, let's go to a different product here. Google.
Earnings on Wednesday night.
290 calendar. 290 calendar. Call calendar? Either way. June, May, 290 call calendar, we'll call it. Trading for $3. It's around a scratch now. What would you do?
What would you do?
Well, you've got it just depends what you want to do. If you want bearish delta in Google, then you keep it. If you don't, then you close it. You could always shift it. Like if you don't want bearish delta or you want more neutral delta, you could just close this and then open a new one near the current stock price. I think it's it's just whatever you want your delta to be. ARM? Have you traded ARM recently?
I have not. I've been watching it all day though, but I have not. I feel like this is usually kind of wide. I haven't even looked at the options yet today, but in the past.
Yeah, they're pretty wide. Some of these are much wider than others, and this is a good example of like why we choose round numbers. 225 has a 1920, 2040 bid-ask spread, $1.20 wide. The 222.5 has a $2 bid-ask spread almost. So a lot of these have varying bid-ask spreads, which is why we choose these round numbers to give ourselves more liquidity, more open interest, more volume. But covered call, 100 shares of ARM at 166, covered call at 170. With this move, what would you recommend? Thanks, chaps. Cheerio. Not much to do here. Nope. You still have some value. $300 in extrinsic value that could be masked by the wide bid-ask spread. But yeah, it's a profitable trade. There's nothing you can really do unless, and the problem is that you're so far in the money, you have a $7,000 option. You're going to have a hard time like rolling this up. So if you were to try and buy back May and roll it to June, you can only move it up to the 175 for a scratch, which gives you another $500 of profit potential because you're able to move it up 5 points. But it's kind of done at this point. Unless you just,
because if it pulls back, then you're just kind of exposed on stock, and you can't really roll up any strikes. I don't know. You're right. Yeah. It's kind of done.
Crazy move. Oh man. Short iron condor and A-net.
Everything all right back there? Somebody doesn't sound happy.
Oh yeah, it's my girlfriend's cat screaming. I can't believe you can hear that. It's so good. It's unbelievable. Literally just sitting outside the door, just yelling. Like, what do you want from me? I'm doing a show. Oh my God. That's great. A-net, short iron condor, 150, 140, 185, 195. 21 days. I mean, you're still out of the money on the call side. That's really what matters here. Should I roll up because vol's testing my short side? It's up to you. I mean, but you still have another 10 points, almost 6 points. I can't believe that's picking that up. It's so good.
I do have headphones on, so maybe that's why.
Oh yeah, you're picking up the micro sounds, the faint yelling.
Oh good.
Long June 60 call on Intel. Close it out or turn into a poor man's covered call. Nice job.
Yeah.
Nice work.
Nice work.
So the nice thing about this move is it's pumping up the IV in these near-term cycles, almost 100% IV for 7 days. So if you're willing to take the risk, you could sell something like a 7-day for $400 almost. And if it keeps rallying, you make another $400. The caveat is if it keeps rallying, your long option is going to lose extrinsic value too. So you're going to lose some of this $1.80 in extrinsic value. So it's not a perfect 340 collection. But Intel could also reverse, and now all of a sudden the 340 is not enough to offset your losses that you're seeing now on the call. So I would just close it personally. Mm-hmm. Just close it and set something else up.
Yeah.
Like if you're still bullish, right?
Yeah.
If you're still bullish,
this thing could, as crazy as it looks, this thing could still make a run at 100. And I say that full well looking at AMD and all these names we've been looking at today. Like it's not entirely out of the question.
Yeah, I totally agree, and we're in crazy mode. Like all these stocks are just going nuts. So there's no ceiling in sight, it seems. So we have to prepare for that. But I do like this kind of adjustment where you go and you buy July, you sell the June. 105 is the highest strike available. I kind of like selling the highest strike available in these situations because you can see this premium kind of flattens out a little bit. Because this is the highest strike available, and you might be able to see, the most open interest on this highest strike available. So people speculating, you can sell that option against your call. But basically what you do is you take your $2,200 of risk, which is on the table, profitable trade, but you take your $2,200 of risk, you cut it down to $850, and you still have plenty of upside profit potential here if you get a move to 105. So that's what
you're playing with house money.
Yeah, exactly. Let's see. I'm at a 500 straddle in June 18th with a credit of $44 going bonkers. SMH.
Oh gosh.
SMH, 500 straddle. credit of $44. So you're down a couple grand, but still not too bad, all things considered. You've managed it well if you've gotten it back up here or up here. And you've got, 540 and 460, decent range here. And it almost covers the expected move in June. So not too bad.
Yeah, I mean, it's scary to be short a straddle in something that's moving like this, but that implied vol is pretty high. And as long as this thing doesn't, drop, I don't know, what's the chart looking like here?
Moon.
Yeah. I mean, $60. I mean, as long as this thing, as long as this thing doesn't drop to 440 next week, which again is, I think you're okay in the meantime. And I mean, I don't think that's quite the possibility, but who knows? I think you're okay in the meantime. It's a little scary, I'm sure. That's a meaty straddle. I mean,
yeah, it is. I think like these are the times where these we keep talking about these butterflies, but I might consider doing 2 different 7-day butterflies, 20 points wide at the expected move, 500, 480, 460, $300 here, and then the upside, 510, 530, 550. They don't have a 550. Are you kidding me?
They don't have a 550.
Okay, so we'll go to 560 then.
Yeah.
And 20 points wide by 30. So, I mean, you could do something like this.
You could do a 15-point wide, 520,
515,
right?
Yeah. 535, 560, 520. Something like this where like you're putting up some value, but at least you have some profit potential here. This is wrong. $1.27. What am I doing? 520, 530. No, 515. 530.
Well, you had it right the first time, actually. I thought 530. No, it wasn't. No, yeah, that wasn't. Yeah, you're right. No, it wasn't.
Yeah. Well,
gosh, they're messing us up with these lack of strikes.
I know. It's crazy. But yeah, like another 10-point wide butterfly, 7 days out, $100. Like this at least helps you, if it continues higher or lower, it helps you potentially get some asymmetry on that butterfly. You can then sell out of it, add more credit received to your straddle, and work from there. But yeah.
And so having both of those is like a total of what, like $300 in premium, right? Versus $4,000, right? So you got to think about risking that way.
Yep. But that's it. We almost got to the bottom of the chat. We appreciate all your questions. Hopefully that deep analysis was helpful. But yeah, if you have any further questions, you can reach out to us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler there. And we'll see who else the Bears get. That kid they got seems like a speedy player. Have you seen him?
He's an athletic freak, man. I mean, 6 foot tall, like 200 pounds, but runs a 4.35 and 41-inch vertical leap. You love that, especially as a safety.
Yeah. What else could you want?
Flying all over. He'd be flying all over the field.
Yeah.
It's going to be dope.
I think we have 2 second-round picks right next to each other, so that could be valuable. We'll see who we get. But yeah.
People mess with Ryan Poles a lot, but he's done a great job, I thought.
Yeah. I'm very excited this year. I think the Bears offense is going to be unstoppable between Loveland, Burden, and Odunze. That's all you need. Just stack the defensive and offensive lines. We'll be golden. All right. Have a great weekend, everyone. We'll see you same time, same place, 11 a.m. Central on Monday. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Okay, well, this is me. Thank you so much for tonight. I've never been to the Hard Rock Cafe before. That was really fun.
Bow, bow.
Okay, well,
This is a song for the broken hearted. Bow, bow.
Okay.
Hey.
All right.
Why don't we get up there and you can lay some hands on me, and I'll see if you're slippery when wet.
That's really inappropriate for a second.
I want to lay you down on a bed of roses and send you off to Slumber Town in a blaze of glory.
No, don't say things like that because my boyfriend was an aerial artist and he used to do things like that.
I might be Monday now, but someday I'll be Saturday night. You give life a bad name. Whoa, shake it up just like bad medicine. Bad medicine is what I need. I'm going out in a blaze of glory. Take me now, but know the truth. 'Cause I'm going down in a blaze of glory. Lord, I never
What is going on, everybody? Happy Friday. Welcome back to Risk and Reward, and happy new all-time highs. Why not 8,000, Errol? Why not 8,000?
I thought we talked about 10,000.
I guess we did. 11. Let's do 11.5. Just something reasonable. 11,500.
It's not looking too far-fetched. I mean, another all-time highs. I know we spoke about, statistically speaking, whenever the market puts in an all-time high, it's more likely to put in another all-time high, but it's doing it pretty aggressively. So another day in the office, all-time high. So how are we doing today?
Yeah, that it is. And I mentioned on maybe Tuesday or Wednesday that I was very interested to see what the market would do into this Friday, as you know, there is still some prevailing headline risk, and the weekends increased the surface area for that. And the past few weeks before we began running back to all-time highs, the Fridays were always sort of a bleed day as people began to dump any long sentiment they had in the middle of the week, as it's a lot of risk to hold through the weekend in this environment. But that does not seem to be the case today whatsoever. Up almost a full percent across the board. SPX at 7160 as we speak right now. So
we're booming.
We spent all those months just toying with 7,000 and not ever quite being able to get there, and then we just ripped straight through, and we're testing 7,200 now. So quite the activity we got.
Oh yeah, and not to mention, we're scraping another all-time high, and I mean VIX isn't chilling at 12 or 13 or 14 like we were used to over the last couple of years. So I mean, volatility is still a little bit elevated. I hope this is kind of the new normal. I'll take a 16, 17, 18 VIX any day of the week. Especially once you're presented with the VIX that you kind of took for granted, right? After coming out of 2020 and 2021, getting more familiar with the options market, I'll take a 17, 18 any day of the week.
Yeah, absolutely. Yeah, VIX, compressed, but still relatively elevated. Not at all what we were seeing like late in December last year or anything down below 50.
Yeah, I thought it would have been killed a little bit more, just based off of how aggressive we've been to the highs. But we'll see what we get.
Yeah, I would have thought the same, but I mean, It's just, yeah, I mean, it's like how I've been talking about, oil is kind of being a vehicle to, properly price in the uncertainty. The broader market seems
more rational,
seems done and moving on. But yeah, oil and VIX, oil especially, but VIX continuing to remain a little elevated and sort of express that uncertainty a little bit. Oil is hurting today, but after the run that it had throughout the week this week, we're not even anywhere near the levels that we were at just this past Monday. Still, yeah, just basically coming back off the highs right now. So oil not necessarily correlated with the broader market. The defense contractors continue to slide. Bad day to be a Lockheed Martin shareholder looking to get back to those pre-war
that's levels. A tough one, yeah.
Yeah, pre-war levels. It looks like it's true across the board with the defense contractors. Raytheon, what's the other one? L3 Harris, which is, I don't even know. LHX, there you go. Holding its gains a little bit better, but yeah, similar.
Taking a hit, yeah.
Across the board and all those. The metals, haven't actually looked at all today. Silver trending up a little bit, 1.25%.
Yeah, they've been quiet, huh?
Yeah, gold lagging a little bit behind, but moving up also. Obviously, very similar action on both of those.
Yeah.
On my end, only real exciting thing I got going on is, I've had some strange realignment or, strange spread stuff happening on AB here to make my position look a little better than it is, but it's not really that great. But Meta is logging a good day, up 3% right now. Trending up with the chip stocks, which took a massive jump. But I'm happy with this because Meta likes to do the Rivian thing, like as you can see here and, basically here in the macro, where it'll take these big gaps up and then it's too much momentum and it has to give it all right back. So when we started sliding off these highs, I thought for sure we were going to slide all the way down and gap fill here below 600 and was starting to feel a little bearish, but catching a nice jump there. Then, of course, the star of the show today is Intel, who had a remarkably good earnings call. Something like a 1,300% beat on EPS expectations, raised guidance, all that good stuff. Intel flying and the entire chip sector flying along with it. AMD and NVIDIA catching nice sentiment moves there.
Huh, interesting. What's going on, Brett? What's going on, Ranch?
It's just 2023 again, man.
Yeah, no.
We're just talking about all-time highs. We're talking about AI. We're talking about chips.
We're slowly getting to see more cycles in the market. As we get a little bit older, we're starting to see these cycles, trading more all-time highs. But wow. Intel, really the star of the show in my eyes. A gap up that large at all-time highs and even pulling back and still having such a massive gap. I think that one's taking the cake for the day.
Yeah. It's quite something. This Intel, I don't know. It's the devil on my shoulder is saying, let's get short this thing, man.
I think it's got to be on the radar.
There's this big gap to fill to the downside, but at the same time, the momentum these chip stocks are catching right now.
Yeah.
What I'm actually going to look to do, I think, is not get short Intel in the immediate right now, but I'm going to wait for like AMD earnings, for instance. It took this giant gap just based on Intel, so now it's like AMD has already priced in a really, really good earnings call for themselves that has not happened yet. So if anything short of that does happen, we're going to see a big correction here. So I think that's going to be the angle that I choose to attack. What's going on, everybody in the chat? Ranch, Anta, Brett, Grumpy Mike. Good to see all of you. BDH. Happy to see you here. Thank you for the kind words, Anta. Sergio, greetings to you as well. I don't get the defense stocks being back at February levels. Will we not need to replace all the crap we dropped on Iranian schools? That's I suppose that's a good point about the having to replace things, but I don't know. But is it replacement or did they run initially because we're buying all that stuff as we're using it? In any case, it feels like the defense contractors should still have a little bit more money. Why drop all the way to pre-war levels? Seems like you should make a little leg up if you've got some extra capital laying around. I agree with your sentiment there, BDH, but I'm also not gonna get long and hope that the market acts rationally on those.
So Ranch caught a little bit of the long delta on INTC. Already cashed in there first thing in the morning. INTC maybe a reload. I mean, yeah, especially if we get a little bit of a pullback. I mean, I know a lot of short sellers really love to try and figure out, okay, is this a top? Maybe they get in prematurely. Maybe you catch a little bit more of a scoopy based off of the profits that you've already kind of realized inside of INTC. But I think since I'm not a part of INTC, I'll be a little bit more patient. Maybe try and get some short delta. So we'll probably work against those positions a little bit, Ranch. But
yeah, I would say if you already caught the majority of this move or really any part of this giant move to the upside in Intel, I would take my ball and go home.
Take your ball, go home.
That's a good day. No need to reload on the exact same asset. But yeah, as I said, I will be eyeing like AMD. Not as confident to do it with NVIDIA. But yeah, AMD has put itself AMD has put itself in a weird spot here now because it's
what markets are we in right now? That's a crazy move.
Yeah, like I said,
that's a crazier move than I think INTC actually.
Yeah, I agree. I mean, yeah, Intel is up 20% right now. It has given some of those back, but AMD is up 14% on its side.
Okay. Earnings May 5th, right around the corner.
Yes, right around the corner on earnings. What's that? Like 15 days.
What are we? What is today? 24th.
Yeah.
Okay.
10 days. April has 30. So yeah. 11 days, final answer.
I'm not even opposed. I don't want it to pull an INTC on me, but I wouldn't be opposed to getting on some short delta, even ahead of the earnings on AMD. I know it's ahead of earnings. Volatility is expanding a little bit. We just saw INTC give no mercy to any of those short sellers for earnings, but AMD is looking more attractive based off of that parabolic looking kind of move it's putting in.
Yeah, obviously going to be very good call side premium here as well. Something to maybe look to take advantage of. Because I mean, yeah, what levels do we just rip straight through here? Like this 340 level seems pretty reasonable to retest, and I'm sure you could get some very attractive risk premium on that for something post earnings right now.
That's a crazy move.
Yeah, I mean, pretty much 1-to-1. I kind of like where you're coming from though. I am tempted to fire on one of these right now if I can find something with the liquidity to go for.
I wouldn't even mind buying a cheap put, but everything's pretty juiced right now. You know, headed up to that binary event.
Yeah.
Ranch is just chilling, walking his dog right now. So he's like, I took the profits on INTC. I'm good. You know, I'm not double dipping right now. Yo, that was kind of scary.
That was scary. That scared the crap out of me. I'm not going to lie to you. I don't know what that was. Yeah, I think I'm going to fire on this 342.5, 340 short call vertical. Just catch some of that call side premium. Slightly better than 1-to-1 risk profile here. See if we can get a fill. Actually, I'm willing to get filled all the way down to the 1-to-1 risk profile. So I'll just go ahead and let myself get slipped now, and we get the worst end of the number. So it's all right. Yeah, just look for that to return below 340 because, like I said, it's this now has put themselves in a position. It's the same thing we've talked about with Micron and SanDisk in the past, where AMD has now fully priced in Intel's 1,300% EPS beat. It's like, what could AMD possibly do to drive this higher at this juncture? And I don't know that it's wrong to try to price those things in early. Obviously, these things do bleed through the entire sector. But I just don't see what AMD could do to really push this insanely higher and burn me too bad there. So willing to get involved in some small capacity. $120 notional is fairly managed risk. And then should we move any higher, I leave myself in a good position to restructure headed into that earnings call.
Nice. Yeah, I'm looking to sell the 370s. I may just go maybe 55 days out. I think it'll be interesting to see how AMD acts, headed up into its earnings. So it'd be nice to get a little bit of pullback before that. If we get a pullback before the earnings, maybe we take a little bit of the profits off the table, then get back in afterwards. But it'll be really impressive if it can hold these gains up until its earnings. So might try and put some delta on in there as well. $10 wides on all the spreads, getting about 345. So we'll take it. See if we can get a fill.
Is double dip a scalper term?
No, I got that one from. I guess that was coming from the Scooby, but a double dip is, I guess you could use it in any terms. So I guess you could say so. Big deal. Since you're a little bit more active on that end.
Hey, the last guy, Mike, had animals. Do you guys have any animals? No animals in the studio here today.
None in the studio.
Only animal I got is the one sitting across from me.
That's my dog. It's a dog. Yeah, that was good. No, do you have any? You don't have any personal pets, though, do you?
No, I don't.
No,
been shopping around, considering some cats for a little while. Okay. Love cats. Apartment's small space, so it's
I think Julia has like 9, so she might lend you one.
She does. Yeah, maybe I could just borrow, do a little test run. Yeah. But yeah, I would want to get 2. I want to do like a bonded pair together because I like cats because of the freedom it offers. If you need to like go out of town for the weekend, the cats are self-sufficient as long as you got feeder and all that good stuff set up. Mm-hmm. But because I do often go out of town for the weekend, I don't want to leave one cat alone. I would feel bad. I'd like to have a friend, and the bonded pairs are hard for the shelters to get out. It makes so much sense. So it's on my mind. The answer to the question is no animals here right now, unfortunately.
Does that part of the thought process come from the fact that you were only child?
That's interesting. We're gonna do a whole psychological deep dive here.
I was just curious. Okay, because I say that because I vibe with you back and forth. I grew up with a brother. You know what I'm saying?
Sure. Yeah, no, I don't think I would. I don't think I would say so. I just it just stems from the idea that a large part of the basis for a cat is because of how self-sufficient they are, because it's, you don't have to, not worried about leaving a party early because you got to get home and let them out or anything like that. Like a lot of the things that come with dogs. And I love dogs. I'm not bad-mouthing dogs, but it's
because you're responsible.
It's a large responsibility to own a dog, especially in the city.
A responsible owner, and also you think about that perspective. A lot of people are like, "Oh, it's a dog to get. They'll be fine when I get back," but that's real.
Yeah,
you know what I mean?
yeah. So so the cats just make a lot of sense. And I'm at work for a long time every day. I travel a fair amount. I like the cat to have a buddy. Be able to keep themselves occupied.
I'm kind of in the same boat too. I'm not a big pet person. I'm actually allergic, but I know I'm gonna have to get a pet because I can't be selfish. So I know I'm gonna have to get one, and it's probably gonna be a cat. And if it maximum, probably two. So I'm kind of in a similar boat there. I'll let you know if that happens.
For sure. Yeah, they got hypoallergenic everything now.
I know.
You'll be fine. I have a fake fish tank. I like the sound, but don't want to take care of it. You know what? I like that. that's a good way to do it.
I love a good
responsibility.
Fish tank.
Just the vibes.
I feel like fish tanks went out of style a little bit, but shout out to the parents that had put fish tanks in their homes growing up. Every time I went to somebody's house, they had one, or especially the really cool ones. If you had a little bit more money, you could put it in the wall. I think it's a lost art. Love a fish tank. The maintenance on it, though, probably not the best to deal with.
Yeah, if this is the last comment I'll make on this, is when we get back into the market. But
100%.
if I had more money than I know what to do with, I want some jellyfish. I want.
Are those pretty expensive?
I think they're expensive. The main thing is just that you have to have a really special tank because they don't actually swim. They need the water to move for them so that they can move. So you have to do like a big cylindrical tank that has water that flows through it so that they can stay in the middle.
Right, and then that's the electricity. Right? It's probably got some type of motor it's using.
Oh yeah, it's just a whole expensive and spacious setup.
I will say the jellyfish is dope though.
Yeah, it's like a chill little thing. Be able to just sit, vibe, look at the jellyfish. They're real. I like the way they move.
Yeah, the fake tanks that people create, like you can win these tanks things or whatever. They have the fake jellyfish in them, and it looks awesome. So if somebody had a real one.
Yeah, I think there's a whole like somebody tell me there's a whole reality show about a fish tank installation company, right? Somebody's seen it. I think it might be called Tanks. I recall seeing this on just like in waiting rooms and stuff. I do think that's a show that exists.
The cats are the parents of the pets, I guess.
Yeah,
that's hilarious.
It's true. Our cats take care of our dogs when we're gone for the day. LOL. Okay, we got a real question from Shaw here. What's the best way to manage a covered call? QQQ ACB. I'm confused. Are there two tickers happening here? 605, May 22, 605, 2026, 605. It's better to always keep rolling out and be OTM. I can roll for March 27, 670 and still get a bit of credit.
If you can roll for a credit, I mean.
If you can roll for a credit,
right?
Yes, I would jump to that. March 2027, 670. Yeah, I would say if you can roll for a credit with the March 2027 670, that's probably the way to attack this. Gives you a ton more runway as well. Then yeah, I'm a fan of the roll option in that situation. The roll choice, shall I say? Let me choose my words carefully.
The rolling with the options is very attractive, and also as the younger generation gets more into the options realm, I think once you become a little bit more well versed, like futures are super popular right now with the youngins, and stock equities because they seem a little bit more straightforward. But I think the younger generation will find rolling these options really attractive. You're like, you mean I can roll for a credit, widen my break evens a little bit because I can't time this perfectly, and I think that's always an attractive choice. So like even when you give yourself a lot of times on the contracts, I think that's something that people would find really attractive.
I totally agree. Tanked. Thank you, Lifton Like Link. Oh, adjusted cost base. Duh. I'm out here thinking about Aurora Cannabis. That's ACB, right? We were just talking about cannabis stocks the other day. It's fresh on my mind here. But yes, I would say roll for the credit is how I would choose to proceed. Though I don't do covered calls very often.
Yeah, I mean, that's pretty cool, right? I mean, if that's something you want to hold in the portfolio a little bit longer, I know you're getting down to 21 days, but I mean, if that call expires out of the money, you keep the entire credit that you sold it for. So, but I know some people, when it comes down to the covered calls, they want to just be able to roll it forever. I mean, you can bankroll it, but I mean, if the position reverses on you, so I mean, how far has it been running? I don't know.
Yeah, but I mean, giving yourself the runway until March 2027 is
2027.
Yeah, March 2027 would be the roll, and that's 670 in March of 2027. seems like a foregone conclusion at this point. You never know. You never know in this market. Nothing's ever a foregone conclusion. But
No, I mean, personally, I'm even confused with all. I know we keep talking about headline risk, but honestly, all the back and forth. I don't know if that was a strategy, but I'm starting to get very confused. It's actually started to be very difficult to keep up with. Like, wait, where are we at with the straight? Is it closed or is it not? I thought they were adding more mines. Now it's like, I don't know if the strategy is just to make the waters a little bit more murky for whatever reason, but if that was the goal, they have achieved it. You can roll up and out for a credit. That's great. Yeah, 100%.
Yeah, exactly.
Up and out for a credit. More room and a wider break even. I'll take it.
Happy to have started the fish discussion we have going on. Apple and Google running since 2020. Now on covered call January 2020 hate strike for 280. Just bought. Like it. I love it. Yeah, that's kind of the beauty of covered calls is as long as your time horizons are long enough, it's increasingly likely you're going to be right over and over, and you kind of just can churn it all the way up like that.
280. You bought a 280 call on Goog.
I assume Goog is what he means. Yeah.
Oh, slight flex. Okay.
Yeah, no kidding.
Filtration is tough with the jellyfish. They tend to drift into the intake. Oof, that's like some Finding Nemo stuff right there. Someone used to make specialized jelly tanks. I also thought an octopus would be fun, but got out of the hobby. Yeah, octopus probably would have been out the tank by the time you woke up. Probably would have been sleeping right next to you. I hear octopus or octopi are some of the most intelligent species.
Oh yeah.
And they can like almost slither through and get out almost anything if it's not secure.
Oh yeah,
properly.
they're like aliens.
They're interesting.
Yeah,
they're interestingly weird.
Yeah, they can open jars and they can do all kinds.
It's nuts. Yeah, it's nuts.
Octopi, very very cool creatures. But yeah, it's a good note on the jellyfish filtration. I'll have to keep that in mind in my fantasy situation here, where I have a mansion with a floor to ceiling jellyfish tank.
That, you know what that reminds me of, and then I promise I'll get off the topic. But Shark Tales Shark Tales with Will Smith. In the movie, they have the entire from ceiling to floor. So, anyways, that's what comes to mind.
Yeah, I'm thinking like a Vector, Despicable Me sort of situation.
Oh, that's
got the big wall to wall tank.
That's nice. That's nice.
Octopus probably plotting.
100%.
If you treat them well enough, it's like
no, they're still plotting.
How smart are they? Because it's like intelligence is this rolling thing. What if they're smart enough to comprehend that you're keeping them away from the predators and giving them a nice, easy life? It's like
that is true.
Where does it stop?
Yeah.
How old does a human have to be before it's smarter than an octopus? Somebody ask AI and get back to me. Are we talking like a 2-year-old, like a 4-year-old? At what age does human intelligence pass adult octopus intelligence?
You see, Shaw Paul right there is spitting some wisdom from the future for us. My son and wife got a tank with guppies to feed fish every morning. Guess what? I'm the caretaker now. I already know I'm going to be the cat dad. I'm going to be the primary cat dad. I already know it. I already know it.
I just automate everything. I'm sure they got automated fish feeders. We can figure this out. Oh my goodness.
Jokes aside, I'm still trying to.
Who's got a fish stock?
Yeah, I don't know. I'm still looking to get filled on AMD. I'm selling the 370s, buying the 380s. It's $10 wide. Trying to get filled for $345.
On trying to use?
No, AMD.
AMD.
I'm still trying to get a fill on it. 55 days out, $10 wide. Markets are a little bit wide, but the buying power is what, $650 on it. So we'll try to get a fill there, and I think that's going to be the one move we're going to make for the entire week for the most part. I think that's the only change to the portfolio.
Yeah. I like it. Yeah, I got my shorts on as well. Core weave down a good amount. Good shot. Good shout. Big deal. I'm buying it. Say no more. Oh. Well, I was thinking like more sustained drawdown, not like it's just getting whacked today. Do they have bad earnings?
Just go to the 1 minute chart. It looks more attractive.
I hadn't caught this move. Yeah, probably does. We go hours. Yeah, that's already looking better. It looks like we're starting to find a bottom on the 1 hour as well. Core weave. I really like CoreWeave's prospects moving forward. I like GPU as a service in this industry that they're in. I don't like that Allbirds is trying to get into it, but I've said my piece there.
So don't get me started again.
But I am a proponent of CoreWeave in the long term. I don't know if I'm going to get long quite at these levels, but pretty much any time CoreWeave starts to get back below 100, I'm looking to get long. So I'll definitely keep this one on the watch list. Massive GEX positioning will make it very hard to sustain a move above SPX 7175. More likely scenario is a slow fade or pin near 7160, 7170 into this close. It's very good intel, Zenveg. Thank you. What are we at right now? 7152. So already starting to reject off that 7160 level a little bit.
Sale rocking down. Buy to close short calls. Sell short puts. Buy underlying. You're looking to get long. You're looking to get long oil. Long oil. What you expecting? Maybe a pullback over the weekend. A little bit more headline risk. Is that what you're looking at, Griffin? Netflix short 84, 86, 80, 88 wings.
Let's see.
Yeah, what has Netflix been up to? I know it was taking some pain a little bit recently.
Yeah, it has gotten hit. I have a long on here at a little ladder at 84, 85 is the closer dated, and then 88, 90 is the slightly longer dated. Pretty much well safe on those levels. 90 level maybe starting to look a little bit sketchy, but being able to sustain this kind of down move and still have it where I need to be is always a good feeling. But Netflix quickie, 84, 86, 80, 88 wings. The risk. Should probably just go feed the chickens and chill for a bit instead. Yeah, I mean I don't know. That would be quite the. Oh, I see. But I see what you're saying. Short the 84, 86. So just I don't know. I mean that's fairly. I mean it's fairly risky, but also the levels aren't that far out of the equation. I don't know exactly what time horizon you're talking about with quickie. If you mean a 0 day, it might not be too bad. Take a big down move to beat you. Comcast. I haven't heard Comcast mentioned in a little while. My Poet is crazy up again. Yeah, Poet has been a really trending name this entire week. This is incredible. This is unsustainable is what it is. If you have the ability to scale out a little bit, media might be a wise call to do so. But also, when things, as we just saw with Avis Rent-A-Car, when things start to get into this type of situation, you never know how high it could go before it has to.
What is Car up to? Oh, that was okay.
Happening again.
Yeah.
Are we pressing something?
No, I don't think so.
I don't know what's making that happen. I think Car is pretty much giving it all back by this point. Yeah. Look at that.
Oh. Yeah, that's fire.
Yeah.
I mean, we all knew it was coming.
Yeah. I mean, yeah. The IVR was like 270. It's absurd.
Good Lord. Most of those gains went through yesterday. Man, they really dumped that and sent it to the floor. I'm surprised there wasn't more halts on the way down, to be honest.
Yeah, I did get halted once on the way up. What's this Atom ticker? Atom. Come on, Gus. Atomera Incorporated. I have no idea. That's my answer to this question. I wish I was involved with it at the beginning of March.
I'm just really looking forward to next week. Again, here chilling at all-time highs. I pretty much have nothing on the table. I'm sitting on the sidelines until we get some type of pullback, maybe some consolidation. But on a straight uptrend, there's really not much to do. I'm gonna keep it a buck. There's really not too much to do.
Yeah, I'm inclined to agree. Just gradually starting to look for some short opportunities here. Just keeping the portfolio delta relatively neutral.
It's nice if you're riding like some long delta, right? You got in your portfolio, you got a good handful of some long delta. So it's nice if you're already long and you're trimming and you're managing. But I think if you're a little bit short biased, and we haven't got the short really, for the most part, I think it's going to be you leaning on that patience. Let the market show its hand a little bit more. Yeah. That's why I'm looking forward to the weekend though. Maybe more headline risk. Who knows what we're going to get? I don't know. Anything else you're looking forward to as we head into the weekend?
No, nothing really for me. Just hoping we can hold these highs, honestly. For a few more weeks would put me in a good position to rotate out and really start to be able to move into some short portfolio delta. But just hoping we hold strong and why not 8,000? I say.
Why not? 8,500, 9,000? We'll see what we get. That's gonna be it for me on my end. Nothing else top of mind. We'll see what we get.
That'll put us at our time today. Nothing else top of mind for me either.
No, sir.
That's all we got. Thanks so much, everybody, for watching. We really appreciate you taking the time out of your day. We never take it for granted. And I'll be right back here next week, same time, same place, Monday, 12 o'clock noon Central Standard Time. Be sure to come hang out with us. Stay tuned for Futures Power Hour coming up next. Everybody have a great weekend. See you guys next time.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. That was
this was
awesome.
not a paid, you're not getting paid
Right.
for this advertisement.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
We're back. It's still Friday, April 24th, 2026. This is Futures Power Hour sponsored by CME Group. I'm your host, Chris Vecchio. He's your host, Thomas Westwater. Thomas, pretty incredible run that we're seeing in the tech sector here, even with the backdrop of this war.
Yeah, I mean, it's like there's no war at all.
No war at all is one way to put it. It's 18 in a row for the Philadelphia Semiconductors Index, the SOX. Semis themselves are up over 30% this month, while the SOX is up over 40%. It's building on top of the earnings that we've seen this week from companies like Texas Instruments and Intel. Intel had great earnings yesterday, Thomas. The headlines are fantastic. The numbers are good. The guidance is great. It's basically everything that everyone's been hoping for through the earnings season amidst this end of Iran war relief rally we've been experiencing.
Yeah, I mean, we also got some good headlines, I think, out of Pakistan again, that kind of, Kushner headed over, setting the tone. It's Friday and we're up. So, I mean, we're not seeing de-risking going into the weekend. There's optimism. I have an MES long call spread that I'm holding on to, and, a couple short puts and things like Microsoft and that.
I'm very much in the same position here, at least in the short term, with the market looking like it's breaking out above 71.85 in the S&P 500. That warrants a consideration of whether or not that's a top or a bull flag. And I think the latter seems to be playing out here. But Thomas, 18 in a row for SOX. That's where we start today's show. It's an impressive run for the semiconductors, heading into a week where there's all of a sudden a lot of macro risks to pay attention to. We've had a bit of a reprieve here in recent days where the data releases have been minimal at best. PMI, of course, is interesting. The retail sales earlier this week were interesting, but nothing on the scale of a FOMC, a Fed, or a CPI. That does change over the coming days, where we're going to have rate decisions from the BOJ. We're going to have rate decisions from the Bank of Canada. We're going to have a Fed rate decision on Wednesday. And we go to Thursday morning. We're going to have the Bank of England. We're going to have the European Central Bank. So all of a sudden, the coming day is not just about the United States and the wall of data that's due out, but globally, central banks who are all planning to cut rates by the middle of this year, they'll now be taking the podium again and giving us their latest assessments on inflation. So Thomas, broadly speaking, no policy changes are expected at any of these meetings, but the tone may vary depending upon where they're coming from. As US-based traders, we care most about the Fed. So Thomas, what should we be thinking about with respect to the Fed next week at their April 29th meeting?
I mean, I think they're going to punt the ball pretty much. We're in the middle of a supply shock on energy. They don't like to, I don't even think they like to clearly choreograph where they're going if we're in the middle of something like this. So they're going to try to project some, holding steady, waiting for things to develop, waiting for more data, things like that. I'm not sure the market is going to care too much unless we get something out of left field. So I'm going to be watching it, of course. I know everyone else will be. I think this market is more concerned on forward-looking, AI investment. It's still scaling up. Most projections are putting us 2026 spending double of what it was last year. I mean, I think, it doesn't even change that much from where we were before. We were still kind of in an uncertain spot. If we get something that pushes back the rate cuts substantially, I think the market might care a little bit, but I don't think it's going to put us into a correction or anything like that.
We did get the news today that the DC district judge, or rather should say the Attorney General of DC, Jeanine Pirro, is no longer pursuing these charges against Powell. So the investigation into the Fed and Powell on the cost overruns has been dropped. Tom Tillis, the senator on the Senate Banking Committee, insisted that he's not getting off of his pedestal about blocking Warsh's ascent to Fed chair until that happens. And it looks like it's happening, which sets up an interesting dynamic, Thomas, because all of a sudden, if Powell wants to leave now, he could, and Mirren would have the ability to perhaps stick around. Warsh could come into a role. And all of a sudden you have a few more people who are prone to thinking about rate cuts that are sitting on the Fed. 2-year yields, they fell today. We'll talk about that in a minute, but we're going to talk about stocks first here which are sitting up near their highs thanks to semis. We can just go to SMH here real quick, which tracking the broader semiconductor index, and SMH should be going on there momentarily. Thomas, and that's great timing. Not sure why that'd be happening now. Thomas, semis making the move that they've made here today is really driving the entire market right now. But this isn't just about the AI names. I think what we really need to be paying attention to in this market is the fact that we also got a DeepSeek headline today, that DeepSeek has a new chatbot out there. And unlike what we saw on that DeepSeek Monday in January 25, when the market freaked out that there was this competitor abroad able to do more with less, the market doesn't care here today. The story's clearly moved on from the headlines of which has the fanciest LLM, and it's more about what companies are making money on this sort of activity. So if it's power supply, if it's chips, if it's storage, data centers, I mean, pick something out of a hat. The AI flywheel is flying. Go ahead.
It isn't competition good for investment? I think the market misread that at first. It's going to drive more competition, which means more spending.
More competition, more spending. A NASDAQ here, Thomas, which the past several days, it was hovering above those former highs, but it had not given up that 1 week moving average. The key characteristic of the trend here in this market since March 31st, we have closed above our 1 week moving average every single session, and we have basically treated it as support. We weren't able to get below the high that we had back in January, Thomas. And so with those things in place, the bull trend was intact here. Still intact here in the S&P 500, where maybe not breaking out quite just yet. But given the fact that we didn't get below the highs that we had in January 2026, right? Given the fact that we held our 1 week moving average, it was not right to call it a head and shoulders pattern. So here we are now starting to poke above that. It gives the bull flag argument more credence, which means looking for exposure for a simple extension of this measured move up towards, say, 72.85 or so should be very much in the question.
Yeah, and we do have a little more volume coming in, which, a vote of confidence.
Great spend, low volume all week. We've been complaining on the show all week how you've been looking at, 800,000, 900,000 contracts traded, much lower than we usually see. And granted, 1.02 million at this time of day isn't the greatest either, but it's certainly an improvement. So days where the market's breaking out on the NASDAQ, moving up to a new high, you're getting a little bit more activity in the market. As you say, a vote of confidence here. The Russell, too, up by 0.5%. It's lagging a little bit. The Dow's lagging a little bit here. But you can see how across the board, Thomas, you do have this setup right now where these former highs are being respected as support. And without a significant breakdown, without any closes below those former highs, there's really no reason to get too worked up if you're going to try to short this thing, because the technicals are continuing to point higher in the short term. We may be getting confirmation of that breakout today across the board.
Yeah, I see this as semiconductors, like you mentioned. This is really driving market sentiment, keeping us up. If one of the golden children is still well and alive, that's going to help drag up everything. You can't get a bear market or a correction when such an important sector of the market has still such an optimistic view.
The growth names are leading this thing to the upside. If it's not just semis, right? You take a look at telecom, which took a brief pause this week, but again, holding its 1 week moving average there, Thomas, and treating it as support. You have consumer discretionary, which has joined in a little bit more. Again, it fell back in recent days, but holding back above its 1 week moving average today. We could go over to retail, which has been sensitive here. So this is off the lows. It's really the AI, Thomas. It's not just a consistent growth story throughout the market right now. It's those things that are related to this AI move where, the Mag 7, all of a sudden, we were talking about a Mag 7 that was trading at 55 or so a few weeks ago. It's now back to 66.5 by the ETF, and very well could be looking at a meaningful breakout up into, open air territory and into new highs. It'd be nice if there's more participation, is the point I'm getting at. If we were to look at QQEW here, for example, it's up 1.24% today. it has not taken out the highs that we had back in January thus far. It's actually a good deal away from them still, about 5 or 6% or so. It's not the healthiest market rally in the short term, Thomas. It does have a particular flavor to it again. Does that concern you right now as we're looking at this move to all-time highs in the NASDAQ?
I mean, is that concerning a little bit? But if you're trading the names where the growth is, then not so much. I mean, because the things I'm trading, I'm not trading the equal weighted. So yeah, it's concerning if you're looking into the inner workings of the market. It's something you can put in the bearish side of your pros and cons, but we're still going up. The NASDAQ's still going up. The S&P 500 is still going up amid an energy shock. So I mean, it's still. I'm back on the bullish. I'm back on trading the trend. I mean that's how I'm trading it. If the trades itself stop working, then I stop doing that.
So this great stat earlier about the semis and the run that they're on right now. Per BTIG's Jonathan Krinsky, the Goldman Sachs High Beta Momentum Long Index is having its second biggest 18-day run in history, which is only exceeded by June 2000, which came after the initial 60% crash off the March 2000 peak. Much of this can be attributed to semis, but there are also electronic components, optical, data center, and infrastructure. So in other words, a pretty broad-based AI basket. The only other times when high beta momentum had a 30-plus gain over 18 days into a 52-week high was November 1999 when it rallied 34%, and February 2000 when it rallied 33%. So this is now the largest 18-day gain on record into a new high. Of course, the index has doubled, or it did double from the November 1999 to the final peak in March 2000, but that was a generational top in tech and momentum. It's a very small sample size, Thomas. I'm not using any of that to point out that we're looking at a market that's in the final throes of the bull. But this is not something we've been going through now the past few weeks. Some really interesting, dare I say, unique market behavior where this hasn't happened that often. And you are in uncharted territory here right now, in a certain sense. So with that, it's why I think paying attention to the structure and the character of these markets and the charts right now is just the most important thing you can do. We have our 1 week moving average for this run. It's holding as support. The run is not over until that simple trait is eliminated or at least negated. The momentum's here. You have to enjoy it while you've got it.
Yeah. I'm in no way trying to even call tops here and do something like that. There is some people that are expressing a bearish view saying how can equities go higher when we have an energy shock, things like that. But if you're trading and you're like the meme quote of stocks always go up, it's pretty much true. You look at a chart and you think if you were trading this long versus short, if you're trading it short, you have to be very precise in where you're calling tops. Whereas you're getting long, you have a lot more forgiveness, especially if you give yourself, duration.
That's really all there is to it, Thomas. 71.91 right now. The topside highs was about 71.85. A measured target on the breakout here gets you to about 72.85. Thomas, when we started pushing higher here earlier, up at the 10 days, thinking about the scope and scale of this range, it's been a week-long consolidation here, 5 trading sessions. Thinking about our Druckenmiller rule, where we typically look for a resolution. Sometimes we'll call it like an 8 to 20 times multiplier, depending upon what you're looking at. If we have a 4-day scale or 4-hour scale, we should see a move up towards 7250, 7300 in the coming days. The breakout is here. So I put on the long 7300, 7350 call spread right now to take advantage of what's been a low volume, falling volatility, positive technical drift environment in a seasonally bullish time of year, which I don't really think matters right now, because do seasonal matters in a market like this? But if we are getting away from the war, and if the headlines about what's happening with the Iran war to be believed, we can shrug this off as a catalyst to be concerned with, not just for the short term, but for many years. Then you're talking about earnings, and you're talking about this upside momentum in the market. And those aren't bad things right now.
Yeah, we got plenty more earnings coming in the next 2 weeks.
Plenty more. Speaking of those earnings that are coming out over the next 2 weeks, I'm looking at the calendar for at least Monday, Thomas, going into next week. Verizon is perhaps the only one of note, unless you care about cadence systems, which I don't think anyone does. Tuesday, Visa, Coca-Cola, Novartis, Corning, GLW, which I know someone like Nick Teese has been playing, and this has been a significant beneficiary of the AI trade recently. But then you go to Wednesday, and I think Wednesday is the day where not just with the Fed meeting, Thomas, we have the stocks that we pay attention to: Google, Alphabet, Microsoft, Amazon, Meta. We get 4 of the Mag 7 names in one session after the Fed. How do you think that's going to change people's perception of the market? It feels like that could be a day that defines whether or not the uptrend continues.
Yeah, I'd say that basket of earnings is probably going to be more impactful to the market than the Fed, just because we are concentrated in high beta tech names right now for the market. So as long as, the majority of those do well, I mean, I think it's a green light to go higher.
And you can see next week, right? The market, looking at the Fed meeting here, there's a little bit of a bump in vol. You go from Tuesday into, or we'll say Monday into Tuesday, you're going up by 13 points. You go from Tuesday into Wednesday up by 14 points. But then Wednesday into Thursday, you're going up by 20 points. The market cares more about the Thursday close because you have Google, Microsoft, Amazon, and Meta after the bell, and you have the Fed before the bell. The market's clearly more worried about these earnings than the Fed next week. And in fairness, it's a meeting where the Fed is not going to have a new summary of economic projections. It may be the last meeting that Fed Chair Powell participates in. So he could say, now that the investigation's been dropped, I'm going to retire. I'm going to give up my term, as is customary for exiting Fed chairs. He could also tell us that he's sticking around until something is known or worse is confirmed officially. I mean, but the odds that they announce a policy change that's not in the market's purview, with the 1.3% chance that the Fed hikes rates next week, according to the CME FedWatch tool, it's earnings all the way. And it's Wednesday after the bell. So Thursday is the day where you're going to really probably see that big candlestick when everything is settled, Thomas.
Yeah, exactly. It's all about the earnings. It's going to be, like you said, no SEP. There's nothing, unless they do something crazy, which 1.3%, nothing's happening.
Nothing's happening. But rates are relieved by the Powell news today with respect to this particular investigation. Just taking a look at the 2-year yield, which is where, if you're looking to see how the market is trading around Fed expectations outside of, say, Fed funds futures or the SR3 contract, we get that news today right around 10 o'clock in the morning. And 2-year notes, they jump from about 103 and 21 and a half ticks up to 103 and 24 and a half ticks. It's only 3 ticks, but that's the market leaning into the idea that, okay, this is now an overhang that's gone. We don't need to be concerned with this anymore. And at the margin, it might also mean that the Fed is able to cut rates sooner than we otherwise expect. For the big picture, for the long end of the curve, which are the more tradable products, particularly here on Futures Power Hour, Thomas, we're still kind of stuck where it looked like we were breaking a trend high or a bounce yesterday. Today, there's no follow through, but we are still pinned below the 1 week, the 1 month, the 50-day. It's a very familiar level. I feel like we've traded at this 111, 6.5, 7 for 10 straight days, maybe longer than that. What do you do here? I know you're not really a bond guy right now. Do you see anything that makes you want to be more or less of a bond person?
No, I'm still not trading these. I mean, I think the bond market is still probably a little more sensitive to oil than what's happening in the stock market, whereas you've tech stocks, semiconductors that are, doing their own thing, their own sector of the economy, bonds more towards how is energy going to affect Fed and other central bank policies. But still, we've seen a decoupling in the correlation between energy and bonds to a bigger degree than when this conflict started in the first few weeks. So, if the war escalates again, then I think bonds become more interesting. But that's not what it looks like here. It looks like they're starting to more gently drift away from the impacts of the war.
Well, you see that dynamic in play today, talking about this being a single trade kind of market where yesterday oil was up, so stocks were down, gold was down, treasuries were down, the dollar was trading higher. Today, oil right now sitting near session lows, stocks on the highs, notes are given a little bit more breathing room, kind of in the sweet spot. Powell case gone and oil lower. That's nice to keep a floor under things, but not a lot of directional progress. You were where we were yesterday at the open, or where we were 2 days ago at the lows and Tuesday. And this is where we closed just a few days ago, Thomas. I can go back to here. What is this? The 14th, 13th of April, we were there. And we were also here on the 1st of April. So this thing is not moving at all. Directional neutrality has worked best. It's not a ton of volatility on the board right now, 21.2 IVR. But rates are really going nowhere fast. Fed can't cut. And the economy is holding up. Why would there be a big recovery or a big sell-off unless oil goes back past 100 or absolutely collapses again into the 70s, which seems unlikely? It feels stuck in the mud for the foreseeable future.
Yeah, we're almost nowhere from where we opened the month, and it's just doing nothing.
Just doing nothing. I'm going to go out taking a look at 63 days here in ZB, Thomas. 108, 109, 119, 120. That's where the one standard deviation move sits. If you try to bracket that right now in ZB, tough. That's not a great trade, under 4-1. But if you were to pinch a little bit more here, however, and bring it in by just a point, you can get inside. It's going to be just under 50, or call it 60%, 59% there. But it's just a little bit better than a 3-1 risk to reward. On the charts, getting up to those levels, just keeping those levels here, that would be moving through the highs that we had when the war broke out. It would likewise mean moving through the lows that we've had when the war was in its midst. Is oil going to jump back above 100 or 120 anytime soon? I don't think so, given what we know at present time. And therefore, I'm not really worried about bonds breaking down to 111 in the next, say, 45 and 21 out, and vice versa. So I think there is something to work with here. I know it's not the highest volatility in the market right now, and a lot could change over 63 days. Fortunately, there's not a better strike available. But 3-1 and the max profit potential above the buying power required is reasonable enough for me that as a Friday trade, expecting really, again, no movement here. We might as well just take advantage of what we got. Although I understand why bonds are something that you have been more or less ignoring until, well, you're still ignoring.
I'll get back one day.
One day. Let's talk about oil, Thomas. What have we learned this week? I saw that we had a bunch of oil inventory numbers out recently. We likewise had the Baker Hughes rig count come out today. Oil prices are in as it feels like the headlines are driving the ship, with various Iranian negotiators heading over to Islamabad. On our side, we have Witkoff and Kushner heading over there, and JD Vance is standing by to join them if the negotiations deem it necessary. So we have that little bit of good news going into the weekend, Thomas. But let's stay away from that for now. What did the Baker Hughes, what did the oil inventory numbers this week tell us about the state of supply and demand here, especially for us domestic consumers?
Well, the crude oil inventory is actually increased. It's the fuel products that decreased here. Exports higher, so I think that makes sense with the Middle Eastern oil being less flows. You got tankers coming over to America now more and more, and there's still a lot on the way. So those export numbers are going to remain high. They're taking fuel products more than they're taking just crude oil. That makes sense. So it's also there's so many question marks right now, and there's two schools of thought that we're going to get a ceasefire or negotiation agreed to, and the market's going to normalize for pretty quickly. And then you have people more of a doomsday scenario, which isn't out of reality right here with what's happening. a lot of shut-ins are about to start occurring, especially Iran. They're running out of storage space. So when you run out of storage space, you have to, start shutting down production. That could lead to more lasting damage. So there's, I think, a good case to say that oil is going to stay somewhere above 80 for, the foreseeable future, the next 2-3 months at least. And that's the way I'm trading it, selling put spreads, in various expirations. I still have one call spread on in the, what is it now? The 20 DTE. The 20 DTE for CLM6. I have a short call spread at 110. I don't think we're going over that either. So I still got those positions on. I'll probably take them off very soon and start to concentrate more in the N6 contract. But yeah, I think you're going to see exports continue to accelerate out of America. Fuel stocks decline. We still have to take barrels out of the SPR, and then eventually you got to refill those barrels. So this, even if it ends today, you're going to see the impacts last, at least through the end of the summer. That means higher gas prices, higher fuel prices. So, it's not like we get back to normal right away. And then on the other side, you have, if we escalate again, Iran has already announced a set of targets that heavily focus on energy infrastructure in the Gulf states. So, if the war did resume, you start seeing targeting again on those oil and energy facilities. Then you start to get, more towards that doomsday scenario. You got more damaged infrastructure. This gets pushed out more and more. Oil prices would undoubtedly probably go higher. I mean, I don't want to say 100% that's what's going to happen, but, logically speaking, the way I'm playing it is oil above 80 for sure, or as certain as I could be to make a trade on that, and likely staying under 110 also. So that's the way I'm trading it. There's still volatility in there, to be had to make trades to sell premium. And that's mostly what I'm doing, trading oil the past few weeks, especially.
You mentioned gas prices here. While there aren't listed options on gas futures, just as a point of reference for those at home, a month ago, the national average on gas was $3.97. Okay. The closing price on March 24th for gas futures was $2.99. So the gas average 98 cents higher nationally than where the closing price in the futures were. If we're going to use, we'll just call it $1 for the sake. That means in a month from now, we should be looking at maybe $4.30 a gallon national average. And, we, in the past two sessions, Thomas, we have hit new highs in this futures contract, 337.10 yesterday, just a hair under that at 336.80 today. The point that you're getting to is that even if oil prices are down, the way that we're responding to this crisis right now is filling the gap in terms of those exports. And it's not just oil itself, it's a lot of fuel products. So we are drawing down our domestic inventories of our domestic fuel product to sell them abroad to fill that global demand gap. But in turn, it means that domestic inventories for the fuel products are lower. So this may be one of the wrinkles here where oil prices just continue to chop sideways and gas doesn't get a relief just yet. And something for your people to consider if they are a consumer out there of gas, which I think many of us are. And in any event, Thomas, 93.73, you and I are on the exact same page about how we're treating oil here. When provided the opportunity, when it dips, looking to sell put spreads. When it rallies a little bit, selling some call spreads. If it rallies a little bit too much, selling even farther out of the money call spreads. I see no reason to change this. Unfortunately, we really haven't seen a move towards the midpoint of the range recently or towards the high near 100. It's kind of just been stuck in the middle. So I haven't felt compelled to add any new exposure playing this ping pong where oil stays elevated but doesn't freak out anymore. Nevertheless, it continues to work. So if we do get a little bit more upside towards 100, maybe we get some frustrating headlines over the weekend. Oil gaps open higher, stocks gap open lower, as is a typical Sunday open, as it seems. And then we could use that opportunity to maybe sell some upside calls. But I really like to see like a 99, 100 print in CLM6 before I think about going out and selling those calls again, Thomas. Right here, too close to the midpoint of the recent range.
Yeah, exactly. You get to high 80s selling puts. You get to 100 around there selling calls. Start operating in the Q6 contract next week. So I'll wait for the weekend, see what news is digested, comes out, and then Monday or Tuesday I'll start trading in the Q6 contract, operating pretty much the same way I just talked about.
It's so interesting because when you get away from the short end or the front end of the oil curve right now in this market, the technical setups look completely different. CLM6, you can make the argument, ignoring this wick here, it's starting to feel a little bit more heads and shouldery, right? I have seen plenty of people make that discussion, and it could work. I see it. But when you go out to something like Q6 or Z6, for example, it doesn't really have that feel. It feels more flaggy, if you will. You said Q6 here, so I'll pull that up on the screen. That doesn't look head and shoulders-y. That doesn't look like this is a market that's telling you that it's going to have a significant breakdown in any meaningful fashion, Thomas. So if we can get long exposure here still, and that flag after a run higher, bouncing off the 50-day, I don't know. Do you really want to short that? I don't think so. Still, though, short put spreads feels better than long call spreads because the market feels like it's contained as long as we're in a ceasefire. So I don't see a reason to adjust our approach right now. Oil trading is one of the few bright spots, I think, for both of us consistently since the war started.
Yeah, and I mean, you are seeing, demand destruction is talked about a lot when this started the first few weeks. You are seeing that. You're seeing it in Asia. You're seeing it in emerging markets where, a developed country is going to get oil easier than most emerging markets are. And emerging markets, a lot of Asian countries are doing a lot to kind of cool demand as much as they can. If we start, I don't think right here is where we see demand destruction in the United States, Europe, really. But the longer you stay suspended up here, and even if you go higher, especially, you start to see that more with discretionary spending, especially things like travel, airplane tickets, things like that, jet fuel. So I mean, it's really hard to calculate the demand side versus the supply side in the oil market. But both of these, the demand side is going to start coming more and more into play as we go through this conflict, especially if it doesn't, if we don't reach a resolution soon. But you got natural gas up on the screen. This thing just keeps making new lows. You finally had it where, earlier this week we were making some ground higher. I had a short put spread that was in the money, and it just wasn't doing it. And then yesterday we got the drop. I got rid of it. I got out of it. Now I don't want to trade natural gas anymore. An IVR of 13, it's not giving us much of anything to work with here. The weather is not giving us much of anything to work with. It's giving us no prospects of a bounce, and that's why we're seeing prices come down more. It's just looking really nice weather-wise the next few weeks, especially the East Coast, things like that. I think you're going to continue to see inventories build. They were already building when they should have been dropping still last month.
That's one of the, if you thought that we'd have supply tightness here, that is just not occurring. And the weather's been milder than people assume. I mean, I'm looking at the weather for here, the Northeast, right? We're less than 50 miles north of the city. Next 2 weeks, between 42 and 68. That's the low-high range for the next 2 weeks. That's incredibly mild. So not exactly a lot of demand for turning on those air conditioners, or the furnaces aren't going to be pumping either. Thomas, one of the many reasons why I like to use technical analysis, again, staying away from bad trades as a filtering system. Not to say that yours was a bad trade, but we had discussed what would it take for me to get back into natural gas on an episode earlier this week. And I pointed out that we had the swing low here from January. and we hadn't been able to climb back above it. And, the 1 month moving average had come into play. So let's see what happened if we can get north of 290. And if we can get north of 290, then maybe we're starting to turn a corner, because then the downtrend from the high that we had here in January and off the March high, that would likewise be broken. We'd have a few things to work with and say that maybe we've turned a corner. I didn't want to do the short put spread at the time, because until we did those things with, as you pointed out, the low IVR, was there a ton of juice to squeeze? So it didn't happen. Obviously, good job cutting bait there, because today would have been much worse. I think that's why you just have to have some sort of filtering system. If you're a trader trying to get into any market, find out or figure out what works for you. This is what works for me in this particular scenario. It's not going to work every time. And in natural gas, it doesn't work as well as it does in equities or even crypto, for example. Natural gas is the honey badger of sorts. But Thomas, I think you're right. A 12 IVR in natural gas when everything else is 30s and 40s and 50s here, until there's something super compelling, it kind of feels like how it is in silver. Volatility's coming in. The technicals don't look good. Like, do we really want to put longs on right now? So I'm with you. I'm staying away still. I want to call a low here at some point, but I think we just need a little bit more. But for every natural gas trade, Thomas, you bring me a copper one, which has been working out just swimmingly here the last few days. The market may not be going up, but it's not going down. And that matters just as much as anything, because when you're short put spreads and rolling them up, you don't need a rally. You just need the thing not to fall. So you've been the sensei, my Sherpa here, guiding us into the copper mountains, Thomas. Where do we go from next? Is it still worth retaining that long delta bias vis-a-vis short put spreads?
I mean, that's what I'm doing. We have consolidated here a little bit, kind of see it as a flag pattern if we're speaking technicals. The demand for copper is still, it's not degraded to any significant extent by the energy crisis, right? There's still demand for electrification going forward, maybe even more so with accelerated CapEx spending for AI. So, I mean, this is something like, there's a lot of stories out there. China's centered to a lot of it. They stopped exports on copper. Smelters still running hot, some pullback here and there. But yeah, I'm still in the 32-day out contract, 5.6, 5.57. I've tried to roll it a couple times this week. I haven't gotten fills on that. So I'm going to try again on Monday, start to do that, go out into the next contract, and go out to the 62-day. Plenty of time there. It'll be at 58, 59 days on Monday. So that's where I'd like to operate going forward. And, we're trading at about 6 and 8 cents there. I'm going to keep my short put spread around 5.9, 5.95. If you get a break under 6, I think, that's technical signal to take it off for a little bit if you want to stay tight with protecting, your position. But still, this is an uptrend. We get some consolidation. And naturally, out of a flag pattern comes an extension of the preceding trend. So I'm fine here with keeping the position on. Copper, like I said, it's not the easiest thing to get in and out of. It's not as liquid as gold, but it's still tradable, and it's trending here. I mean, despite the consolidation lately. I'm in the camp that we're going to move higher, especially through the later parts of this year. There's still, if you look at the mining picture, there's still constraints on supply and output. So as long as demand holds up, I think
that's what stuck out to me in the latest update from the International Copper Study Group, which is the industry standard, I guess, for miners. Thomas, in their report yesterday, which was released yesterday, by the way, April 23rd, okay, they noted specifically that they're now changing their forecast. For 2026, a surplus of about 96,000 tons is anticipated. That compares to a deficit of 150,000 tons in the October forecast. And they're expecting a higher surplus of 377,000 tons in 2027 here. But they note that given what's happening because of the Middle East, this could alter production and usage here. I didn't see copper respond to this report yesterday the way that it has in the past, perhaps because of those exogenous war concerns. Do you think that right now, as long as there are supply chain issues in the system, the market's going to discount any forecasts of surplus production? Whereas if maybe the war ends and the straits reopen and some of these supply constraints, like around sulfur, for example, maybe the market begins to take another examination at these surplus forecasts and go, hey, copper at $6 might be a little long in the tooth, might be a little expensive.
Yeah, I mean, the market didn't really respond to that report. And the thing about forecasting is when there's such a dynamic situation like the war that's affecting supply chains, it makes your forecast more uncertain, right? It's harder to predict because there's just so many variables attributed to this war. So, I don't know if that's why the market is, not reacting how you would expect to that report. So the report before the last one, they were forecasting a deficit or a surplus, and then last month it went to a deficit, and now they're back to a surplus. So there's also variation, I think, reflecting the uncertainty in their forecast that this is something that's kind of hard to get a read on. And I'm going to pretty much write off that report as well. It's month to month. I'm still going to stay long. I think, my signal to get out of the trade is going to be the price itself. What happens with the price, so if it breaks this flag, this consolidation pattern, I'll have no problem getting out. I'm not like married to this position. I'll cut it, like I said, if it drops under a certain level and go on with my life.
Thomas, there's a Bank of America report making the rounds today where they have outlined a price target for silver up to $309 per ounce before the end of 2026.
Wow. Yeah.
Should we go through the math?
Sure.
This is incredibly frustrating. This is based on the historical gold to silver ratio. Assuming gold stays at $5,000 an ounce and the historical gold silver ratio low of 14 is reached, Thomas, then that could get silver trading at $309. And they would argue that if they get back only to the 2011 rule of 32 to 1, that gives silver a price of 135. So this report I've seen it in the metal circles on Twitter. Bank of America outlines 135 to $309 figure.
I mean, okay. 135, it's that's high. Definitely. It's not out of possibility from what we saw, recently with how silver's trading. I mean, if it gets back into where, back in early 2026.
I'm trying to conceive of a scenario where gold just sits at $5,000 and silver makes a move from 76 to 309. In what world is gold not moving that entire time? It's a fun exercise, but it's not, you're not trading off of something like that, Thomas, is the point I'm getting at. I don't think we should be out here looking up, let's go out to 168 days or 186 days. And, the 120, 125 call spread is only trading at, it's got to do this over because there's a futures contract in here, which we definitely don't want as part of that. But at 120, 125, let's put down $1,700 for a max profit of $23,300. I suppose you could trade like that. I'm not trading it like that.
Yeah, I'm not either.
Look, I think if you believe this analysis that the gold silver ratio has a long way to compress and silver's undervalued relative to gold by the physical. I mean, that's all there is to it. Just trading this through options, it would be ridiculous. Anyway, Thomas, have we made a corner turn here in silver? The metals are still slogging. We're not cracking through that 78.5 zone. Silver has still lost and not able to get back into the uptrend off the lows that we had here in March and through April thus far. Gold prices, likewise, they're up today, but they're up small. They can't climb back above the trend line from the October, November, and February swing lows. They're still pinned below that 1 week, 1 month, 50-day moving average envelope and not able to make the progress. I think Ilya has it right when he says that if, the only way to trade this directionally right now is short. We got continued vol compression here, a 36 IVR in gold, a 36.3 IVR in silver. Thomas, we've seen it play out over the past few months. Volatility compresses, prices go in. Metals want the higher vol. They're just not getting it. So maybe it's cheap to express a view on a longer term basis, right? But in terms of saying this is the optimal point of entry, given everything that we know and given how the charts look, if you've avoided trading these for the past few weeks on the long side, you're feeling pretty good because the setup hasn't been there and the market hasn't gone higher. So it's not like you've missed anything. I still nothing to do at all.
Do you think that, it's the energy crisis weighing on central bank outlooks where we don't know when we're getting the rate cuts? Do you think that's what's holding the precious metals back?
It's hard for me to say yes. It's hard for me to say yes because I had this up on my screen earlier, Thomas, which is coincidental. But I'm looking at like the 10-year real interest rate. Gold and silver tend to suffer when real rates rise. From the start of 2025 through the end of last year, real rates were falling. The 10-year real rate was 2.05%. It ends the year at 1.45. Here it's now 1.58%. So have real yields gone up on a longer term basis? I mean, slightly, and that doesn't help gold or silver, but they're not skyrocketing higher throughout this whole thing. And if real yields aren't going to skyrocket higher, then what's the long-term perspective on a pullback in gold and silver? So I want to get long again. I don't see a market here that's shown significant signs of dislocation. It's just central banks and sovereigns had to raise money to pay for higher energy imports. And as long as that happens, they can't start reallocating profits, excess reserve, surplus funds garnered from trade into gold again as a reserve vehicle. So I'm not worried about the yields for gold right now. They're up from where we started the year. They're going to help explain why it's not such a hot market, but it's not deleterious territory by any stretch of the imagination.
Yeah, I would love to get long again too. I mean, this was just such a fun trade to do. Back in November, December, January, just kept going up. Free hit back there, and you could put on a long call spread where vol's expanding and you're just getting a great trade out of that.
We'll see. We have some corners to turn here in the metals, Thomas, before we make any further, at least for me on that side. The copper thing is working out well enough. But gold and silver, those charts just don't look like copper does. The dollar reversing lower here today. Vote of confidence right now in what we're seeing here in this market, Thomas, in terms of risk on type of move. S&P still at 71.87. NASDAQ still up 1.7%, 27,394. Aussie here has been hugging its 1 week moving average for the past several days, not really edging below there. It's holding. I'm still leaning long vis-a-vis a short put spread put on a while back. 69.68.5, small little guy here, but 69.68.5 basically means we're not going to clear out the lows that we had at the end of March, which is unless the war resumes at the full pitch with no chance of an off ramp. Probably not. Although we'll find out this weekend, I guess. Canadian dollar, Thomas, this has been a little bit more range bound, and that's exactly what I was hoping for here, because I do have a short iron condor position on that still has 42 days to expiration, and we're sitting right in the midpoint of those strikes, which is exactly how you want it to work out. There's a good deal of vol in FX right now, which the IVR is 84 for the British pound, 60 for Aussie, 54 here for the Canadian dollar. We can take advantage of it. It's one of the things that I prefer to trade over natural gas right now, Thomas, because of all things considered. These are smaller products, and they're not honey badgers like natural gas, which can really hurt you if you get caught in a vol swell on a wrong directional move. Do you think that the dollar breaking down is still the path of least resistance in this market? We can't ignore the fact that we just got to move back to the 50-day and the 1 month and immediately reversed off there. It's almost to say the correction's over.
Yeah, I do think the dollar is still going to go longer. I've had an order in for a short put spread on the British pound, 69 days out at 133, 132. I think the max profit's only like 132, but it's a little higher than the buying power. So it's just a trade I put on to express the view that the dollar is going to weaken here a bit. If the negotiations go well, I think the dollar goes down. If the negotiations go bad, then how much upside is there for the dollar?
Exactly.
With what we've seen.
Right. If we get bad negotiations, dollar probably rallies, but then you have a chance to sell that rally, assuming that we're still going to be negotiating.
Yeah.
Thomas, British Palantir, I think this is a good call out. We have this resistance around 134.5, 134.75. We break through it here on the 13th of April. We pull back into it, support, catch our 1 month, catch our 50-day, bounce back above the 1 week. I would go so far to argue that the bullish engulfing bar low of 133.78 is something that we could operate around. So if we wanted to go 134, 133.5 to get a little bit better risk to reward where it's closer to 2-to-1, I think that's just swell at 70% probability of profit. And I think that's worth firing off onto itself. And then for the euro here, again, very similar type of setup. And as the euro goes, so too does the broader dollar index. It's 57.6% of Dixie. We have that swing level around 117, resistance, breakthrough, become support, catching the 1 month, the 50-day, bouncing here. So alongside that, what does that look like then? Low 116.985 in the euro. We can go to 116.5, 116. 71% probability of profit, risking 450 to make 175. A little bit worse than a 2-to-1, but still very much within inside the 3-to-1. There are ways to get the exposure to the dollar here. If we're wrong, we're going to know in a few. We'll know quickly. We'll know in less than 100 pips, Thomas, 50 pips away, if we cycle into new lows here relative to where we were this week in the euro and the pound. But if not, this is where a trend has turned and we're breakout, return to the breakout point and trying to get long at the breakout point again, catching the momentum on the way back. And if we're right, Thomas, we're going to be looking at a 119 in the euro. We'll be looking at a 137 or so in the British pound. The Aussie will cycle up into new highs. But that's the trade setup right now, and you have to respect it. So weak dollar, lower oil, probably going to be good for equity markets, which are holding just right around what would be all-time closing highs here as we wrap up this Futures Power Hour. What's your broad view on the dollar, though, here? Can I entice you to take any of these trades with me?
I mean, I'm getting in a similar trade in the pound. So, I mean, that's my view on the dollar is it's gonna weaken a little bit. But like you said, if we're wrong, we'll know it pretty quickly.
We'll know soon. We will know soon. What's next on the calendar? And, by the way, if I'm going to play a market that's really close like that, 50 pips away, give yourself a little bit more duration, because if you're wrong, it's not going to work against you so quick. If you're doing something like a 0 DT on that, Thomas, you're out, screwed right off the bat. So yeah. Duration is your friend. If you're going to play it really tight like that, 45 plus, if you're going to give yourself more breathing room, which is obviously a worse risk to reward, then shorter duration is feasible. That's not the right calendar for today, because that's the calendar for, well, not the calendar for Monday. That's the calendar for today. Calendar for Monday, Thomas, as it were, thinking about what happens when the market opens on the 27th. There's not much by way in terms of the medium rank data, but I will say that we're looking at that BOJ rate decision. We're going to cover that more with First Call on Sunday and Monday over the course of the show. So nothing really to be worried about. Thomas, we're done here. I'm back in an hour or so, I believe, with Jamal for last call today, or Nick Batista. I'm going to find out. It's going to be a little mystery box. So see you in about an hour time, folk. Until then, good luck trading. You're watching Tasty Live. Dr. Jim Schultz coming up next.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us
at Rising Stars at tastylive.com if you would like the chance to share your trading journey and inspire others.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Friday edition of what it is that we were trying to do. Welcome to the Victory Lap edition. Again, the encore Victory Lap edition of what it is that we are trying to do. A little Procter & Gamble went our way this morning. So, of course, we will spend no less, and by no less, I mean no more, and by no more, I mean no less than 19 minutes on this Procter & Gamble closing trade. Don't you worry about it. But, man, I appreciate you guys. I appreciate you guys so very much. If you are watching over on the Tasty Live Network, now we're actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show right now. Man, you can celebrate if you are a bull. We are back, baby. You can commiserate if you are indeed a bear, but it will be a good time had by most. And don't forget, drop a question for me in the chat. I'll try to get to as many as I can. Right around the halfway mark of the show, I typically get to the questions. The expected move on the number of questions I get to per show is somewhere between 0.007 and 0.0075. So I would get it in the chat. The earlier the better, the higher the delta. That will get to your question, and yeah, we'll see where the wind blows us. Josh, bring us into the market. Man, we are back, baby. E-mini S&Ps up 43 on the day. You've got the risk-free instrument, also known as the NASDAQ futures, up 457. You got the boomers getting smacked around a little bit, but they've already shut it down. I mean, the boomers, they shut this thing down on Wednesday afternoon, right? Like, they've already mailed it in this week. We'll see those guys back, on the construction site on Monday. So boomers down 145. That makes a little bit of sense. But you got the Russell 2000 Futures Index up 13 on the day. You got bonds up 3. You got notes up 4. You got oil down $1. Then you've got, man, I see people trolling me in the chat. Man, it's nothing like having your coworkers troll you, like while you're live, like on the network. Like it's nothing. There's nothing better than having your colleagues troll you, like while you're trying to do your job to the best of your ability. Now, everybody knows that we max out right around B-, but with the trolls coming into play, we might even tick it up to a little bit of a B. And so I appreciate you there, Laura, Paul, James. I see all you guys in there. Josh, of course, the ringleader of it all. Oil down $1.40. You got UB40 down a tick. You got gold up 12. The shifty is a little bit of celebrating. I wouldn't say it's anything crazy, but it's, I mean, it's half a bonefish, maybe, right? A third of a bonefish. But hey, I mean, the longest journey begins with a single step. Right? Like you want to get to a full bonefish meal, you can't do all that in one day. You got to break that thing up into some pieces. And so gold up 12, and then you got silver up 89 cents on the day. You've got, the K cycle is about to be no more. We're kind of rolling into the N cycle. The N cycle, I think technically as of right now, the N cycle is the active month. And so, you can see there's a little bit of contango in the silver markets, which makes sense. There's typically contango in the futures markets pretty much across the board. I'd have to think about, there might be like, I don't know exactly what lean hogs might be doing when it comes to the futures curve, or I haven't looked at the soybean, futures pricing in quite some time. So maybe soybeans are in backwardation, but that wouldn't make any sense because you got to store them. You got to put them somewhere. Like you just going to put them in the pantry? Like next to the molasses and next to the Bush's baked beans? Like, I don't think so. Like you need a warehouse. You need climate control for those soybeans, man. So yeah, the futures curve on soybeans got to be contango, I would imagine. But silver in contango, we can see it right here. Got about 50 cents of contango. So I believe on Monday we'll start taking a look at that end contract when we start looking at silver and taking a wee little gander at what the Hunt brothers might be up to. British pound is up, euro is up. Everything is up. Volatility probably down today. Yeah, volatility unchanged. Okay, all right. Volatility futures down a penny today. Doesn't really make any sense. Doesn't make any sense at all. But yeah, markets moving, things change. So volatility futures down a penny. And then you've got spot volatility. The old VIX, cash index volatility down 76 cents. So the cash is getting smoked. The futures are basically remaining bid. That's kind of interesting. But I will leave it to all the volatility bros and bro sets out there to give you guys some more insight around that because I am not a direct volatility futures curve trader myself. I do it indirectly through equity options, selling IVR, things of that nature. So volatility, VIX down to 1850 on the day. But let's turn to the portfolio. So we'll go to the portfolio. We'll see what's going on. We'll see what's what. We'll see where the wind blows us. Then, of course, I want to see where you guys are at. Man, look at you guys in the chat, just putting in work, man. I mean, you guys are just doing work. And by work, I mean, you look like you're a little off your game, but you guys are in that chat. You're getting something done. Joel James is here. Point B is here. Banana Clips in the house. Ranch Trader Scotty S is here. Not to be mistaken for Big Boy Scotty S. I'm assuming those are different people, but maybe not. Mr. Pillows in the house. Ranch is here. Man, Sam L, BBB Fine, Bread Munn, my Mount Clemens, Michigan brother from another mother, from another mother, actually, quite literally. And so there you go. I see Brian Ratkin is here. Man, DMZ is here. Every time I see DMZ, I think of DMX. And I'm like, is that really DMX? I'm like, no, it's DMZ. And so all we need is a DMY, and then we will have completed the trifecta. But I digress. And so let's go ahead and... Man, it's off the rails. Don't worry, guys. It'll be over in like 39 minutes. 37 minutes, we'll have you out the door, and you guys can get on with your weekend. I know I'm the only thing standing in the way between, the weekend and you guys is just me. Sorry, so what are we going to do first? Well, obviously, the low-hanging fruit is Procter & Gamble, but let's leg that out just a wee little bit. Like you can see right now, I mean, we've got a few bonefishes in our back pocket from this Procter & Gamble trade. And so there you go. Looking pretty nice indeed. But before we get to that, I would like to pour out a little banana natty for MES. Man, look at this thing. I didn't even want to do this trade. Like, go back, check the tapes. I'm not making this up. Like, your boy's not misremembering. Like, I am on point. The blueberries were back in the mix. We are 100% on point. Go back. If I check out my chains here, look at my Allison chains. You could do a little rooster. You could do a little man in the box. You could do some I stay away. You can even go rain when I die if you're kind of in that type of mood, which we all get in that type of mood from time to time. But if you look at the 6,800 call, where did I do the 6,800 call? Oh, wait, was it this one that I ended up rolling down? Yeah, it was this one. Look at this. Man, that is terrible. Look at that. We did that on March 19th. Now, that's when, the four horsemen of the apocalypse were like right there on the horizon. Like they had arrived, they were coming, like they were knocking on everybody's door, and it was about to be over. We all actually felt, we felt it like viscerally, like, wow, is he really not going to taco? Like, are we really going to miss this taco buffet that we've become so accustomed to? And lo and behold, obviously 12 hours later, 24 hours later, maybe 36 hours later, there were tacos everywhere. Like it was taco buffet left, taco buffet right, and then the market was obviously rip-roaring back. So the short call, not in the best spot of all time. But, it could be worse. Maybe not. I don't know. This is about as bad as I could get, I think, actually, for for an in the money short call in the indexes. But I think for my purposes here, what I want to do, let's hang on to it, right? What could possibly go wrong, right? Let's just think, what could possibly go wrong, right? Another 100 points to the upside, sure. Another 200 points to the upside, of course, right? But we have an in the money short call in an index. Now, all kidding aside, if I'm gonna hold an in the money short call and I'm gonna battle it out, I feel much better holding an in the money short call in the indexes as opposed to like an individual stock, as opposed to, like an Oracle, as opposed to like a Dell, right? These are all just hypothetical examples, as opposed to like an Avis, like a CAR. What is Avis doing today? Did they finally go bankrupt? CAR down another $11. Well, that's a pretty muted day for Avis. I mean, look at this chart, man. I've seen what Avis has been doing kind of through the grapevine. Look at this daily chart. And look at that, man. That's some crazy stuff. Right? So they ran it all the way up to what, 800, 850 or so? And then a couple days ago, they sent it down. Well, a couple days ago, it had a 400-point range. That's not an $800 stock. I mean, this really is some GameStop stuff. Like, this really is some 2021 Wall Street Bets Bros. Like, we're doing it again. So it's going to be crazy if they rip it back, next week or whatever. But yeah, it was up to 850 or so. And then it just crashed, boom, banged all the way down to 443. And then they gapped it and crapped it. Like, they did the gap and crap. Like, you don't see that too often. But here it is, man. And so then the next day, they opened it at 402 after having closed it the previous day at 443. So that's just a quiet little 10% gap down. Like, you don't even notice it. It's just a blip on the radar screen. Don't worry about it. But then they sent it down another, 175 points or so? I mean, that's some wild stuff, man. And so now today, I think, is this an abandoned baby? Man, somebody check for me. Is this an abandoned baby? Because that looks like an abandoned baby. That looks like a baby that everybody has forgotten about. Like, that looks like a baby that is looking for its parents. This guy right here. That has to be an abandoned baby. Somebody please help me out. Gotta be. If I've ever seen an abandoned baby, it's gotta be that guy, or maybe that guy. Those two guys together, they are looking for mama and dada. And so let's help them out. And you guys help me out. Is that an abandoned baby? Because I genuinely don't know. But I'm very curious. And so Avis, there's your Avis commentary for the day. Is it going to help you become a better trader? Absolutely not. But is it going to potentially steer you away from using Avis as your rental car company of choice? I sure hope so. Because it is really, really, really bad. And so, all right, there is Avis, some Avis commentary. And yeah, MES, I'm going to sit tight. But I mean, all jokes aside, in the money short calls, it's an acquired taste, right? I mean, it's not exactly something that's going to make a lot of sense to a lot of people. I don't do it that often myself. Now, again, I don't include a strangle and like a standalone in the money short call the same, because I feel like when you sell the put and you're bringing in all that premium, it just changes the dynamic of the situation so significantly that it's not one and the same. It's not the same type of strategy. Now, you may be left with an in the money short call like we have here with MES, but if you start off with an in the money short call, like, you're sending a message to the world. Like, you're sending a message to that stock. Like, hey, I'm playing you to the downside, and this is just how we're doing it. Now, that almost never ends well for you, but at least you plant your flag in the ground and you're like, hey, this is what I'm going to do. When you do a strangle, it's neutral. You're making adjustments. You're playing time and volatility. It's not really a directional play. But yeah, standalone short call from the beginning is very much a standalone play. And so all that to say, MES, I'm not going to do anything. Let's just let's sit down. There's actually going to be a lot of do nothing commentary today, as if you ever doubted that. I mean, was there ever a doubt? We're going to pretty much do nothing across the board, except for the one thing I want to make sure we do something on, and that, of course, is Procter & Gamble. And so here you go, man. We did it yesterday, just bringing it up, the activity tab. We could do the chains, or you can do the activity tab. It kind of depends on if you're kind of old school or new school. I mean, they both make sense. And so you can see we put this guy on at the end of the show yesterday, and we did it for $1.18. We just went with the tried and true, like nothing crazy, nothing fancy. We're doing the oatmeal and the peanut butter, right? We're doing the buys and the tries superset. And of course, we're doing the tuna fish. We're doing the applesauce. Not reinventing the wheel. We're not splitting the atom. This is very, very basic stuff. And so love the Thursday and Friday butterflies, because again, if you get the move that you want, which we kind of got here in Procter & Gamble, I think it was actually even better this morning. In fact, I'm almost positive it was, because I did take a quick peek at the market open, but I was busy doing other things, so I couldn't close it. But I was like, well, even if I miss this, I mean, it's Procter and Gamble, right? To get Procter and Gamble to move $3 in a single day, I mean, you have to have a binary event. Like you have to have some type of, kind of bifurcated, news event that's going to cause Procter & Gamble to move $3. It normally takes Procter & Gamble 17 years to move $3. And so I looked at that and I'm like, all right, it's probably just going to sit here. Now, as as luck would have it, I was correct. And it didn't really move around too much. And we were able to take it off now. But I did take a quick little gander at this on the open. And I think it would open around 150, did it not? Actually, no, I'm completely wrong. It opened, it opened around 152. Maybe it was shortly after the open. I feel like I looked at this. It was before 10 o'clock. Let me get my, my 2. Let's do a 3-minute chart. I don't know if Arrow gets royalties on the 3-minute chart. I know he worked out the 1 minute and I know he worked out the 2 minute. And I'm also pretty confident he has renegotiated his contract to now also have the 15-second chart, sending him some royalties. And so when on a 3-minute chart, I'm not sure that we're helping our boy out. But if we go to 3 minutes here, you can see that, it only took a few, just a little. I mean, that's right. 15 or 20 minutes after the open, it was meandering right around 150, which of course, on a butterfly, the 150 strike is the perfect strike. So that would be great for us. But unfortunately, Procter & Gamble did sell off a little bit, kind of, in the few hours after that and right before the show. And so right now, we're only going to be able to take it off for a $2.50 winner. But man, that's pretty good. Pretty good indeed. Now, again, when I think about my butterflies, just to give you guys some type of, because we do butterflies a lot on the show, right? If you're brand new to the show, welcome aboard. If you stick around, you will become comfortable with butterflies. I can promise you that. I can promise you nothing else. I give you and I present to you nothing else of value that might help you become a better trader, but you will learn and understand the butterfly. Well, one of the things I love to do is butterflies on earnings weeks where the stock is obviously going to be reporting earnings, that week. And I'm using the front week because we don't have the 0 DTEs on, individual stocks. Some of the stocks have like the Monday, Wednesday, Friday deal, but that's about the best that we've got. When I'm in a final week, if I'm doing a Monday or Tuesday butterfly, that's very different than doing a Wednesday or Thursday butterfly for a Friday expiration. Because Monday, Tuesday butterfly, even if you get the move right, you're not going to get a huge payoff. So you just have to understand, like, all right, even if I nail the short strike on the opening bell the following day, I'm not going to get a huge payoff because there's too much time left. And in order to get that maximum payout on a butterfly, you need there to be really no extrinsic value left in the short options. But that's okay because, that's my gotcha. Where is my gimme? My gimme is I do a butterfly on Monday. I've got 4 chances to ring the register on that guy. I've got Tuesday. I've got Wednesday. I've got Thursday. I've got Friday. Right? So I'm no Julius Spina, but I'm pretty sure that was 4. Right? Okay. I got 4 chances at a small to modest profit. Okay. If I do a Wednesday or Thursday butterfly, now I only have 1 or 2 chances at potentially a bigger profit. And so, when you think about butterflies on like a weekly cycle for earnings or even like FOMC or NFP or whatever, just understand, if you do it early in the week, that's a very different trade than if you do it later in the week. When I do a butterfly early in the week, my profit target, generally speaking, if I can get 1x of my debit paid, I'm very happy with that. If I get 1x of my debit paid, then I'm like, all right, like let's take it off. This is probably the best case scenario for me. Of course, if I hold it and I get the perfect outcome, I'm going to make more money than that. But I don't know if you guys know this, but markets move and things change. And so you may have the perfect move now. Like you may have the absolute perfect price right now, but it may not stay that way. And the markets may move off of that price. And so understanding that, if I get 1x of debit paid, I'm usually pretty happy with that. Later in the week though, like Procter & Gamble is a perfect example of this. If I'm doing, especially a Thursday and a Friday deal. If I'm doing a Thursday and a Friday, so maybe I'm doing it for Procter & Gamble earnings. Maybe I'm doing it for like NFP. Which, wait, am I going to miss NFP next week? No. NFP is the next week, right? Is that right? So next week, Friday is the 1st. The 1st of the month. Wow, happy month anniversary to you guys. So Josh says it's on the 8th, so thank you. Okay, so it's next week. Okay, so I shouldn't miss it. But happy month anniversary to you guys. Have I told you guys the story of how I met my wife? I don't think I have. But we don't have time for it. Maybe tomorrow we'll get into that story. I'd really love to share that story with you guys because it's a big part of my personal life and even my professional life in a lot of ways. She makes me say that. It's really only personal. But either way, maybe we'll share that story another time. But if I'm doing, something for Friday and it's Thursday, If I get the perfect move, now all of a sudden I'm thinking about a bigger profit. Now all of a sudden I'm thinking about maybe 2x, maybe 2.5x, maybe even 3x of credit received if I get like the perfect move. And so when I look at Procter & Gamble right here, you can see I'm right at about almost 2x of credit collected, right? Or I'm sorry, a 2x of debit paid. I'm so used to saying credit collected, I just kind of default to that. But 2x of debit paid on my profit for this strategy. And we are literally at the very end of the day. Now, I could hold it and hope for a little rally in Procter & Gamble to go into the close, but that doesn't make any sense to me. It's already a nice trade. That's 5 bonefishes in the back pocket, maybe 4.5, depending on if I go filet, or if I go like filet, chicken, filet. Like that would probably leg out 5 bonefishes. But $2.28 on the profit is a really nice trade, in my opinion. And so I'm going to go ahead and close this guy down. Let's close this guy down and then we can be done with it. And I see you guys in the chat, man. You guys are doing work. Man, I appreciate you guys so much. Let's go ahead. Let's go for 346. That's fine. All right, we got filled at 346. Okay, so we're in. We're out of Procter & Gamble. That's even better, I guess. In and out. I mean, that's what we're trying to do, I think, right? I think. I'll have to check my records on that one. But, okay, so we're out of Procter & Gamble. Now, let's scan, because I want to get to you guys, man. It's a Friday. I know 20% of you already have the Banana Natty cracked open, right? Now, you're a couple steps ahead of me down the road, so good for you there, sir or madam. But I want to get to you guys and see where you guys are at. And so, a couple of things, though. Number one, we talked about MES. Let's talk about Starbucks for a second. I'm trying, man. I'm trying so hard for this short call to be in the money, right? So we have to deal with that. But again, I mean, I can only do what I can do. I can only do so much. I'm only one man with an intern. That's all I got. That's all we got. Like we are a team of 2. It's more like 1 1/4. But we're only, we're a team. That's all you guys got is me and her. That's it. And so, hopefully Starbucks gets a rally next week. I would imagine the month anniversary of profits will help boost the stock at least 50, 60 basis points. And so with Starbucks here, we sit tight, we do nothing. But man, look at all that extrinsic value. That's a lot of extrinsic value that's sitting in there. And so that's obviously really, really good. And so don't forget, I mean, the do nothing strategy is it's the default setting for a reason. So right now we sit tight, we do nothing with Starbucks. The other one I wanted to make sure I mentioned was UAL, simply because, hang on a second, UAL. So, we did our skewed strangle to the downside, and you can see we're up a little over $1 on the trade, and UAL is between the short strikes. I just wanted to offer up a quick little reminder, just a quick little refresher, nothing crazy. But if you've seen the show for any length of time, you've already heard me go through this dialogue and this monologue many, many times before. But I think it's really, really helpful. Not only for the people that have heard it before, because I truly believe repetition really is the key to mastery. But if you are brand new, this is something that I think could be a big unlock for you in terms of understanding options and moneyness, and is my strategy working? Is it not working? Should I do anything? Like all those kinds of things. If you have a strangle on, like you see with UAL, you see I circled it on the screen there. If you have a strangle on and the stock is between your short strikes, I don't care where it is to begin with. If it's between your short strikes, the strategy is working. Doesn't matter what your P&L says. Doesn't matter if you might be hemorrhaging cash that day. In my humble opinion, if the stock is between your short strikes, the strategy is working. You don't necessarily have to do anything. You can sit tight. You can lean on the DNS. Now, if it's too far to one side, it's getting close to being tested, could you adjust? Can you balance deltas? Of course you can. As some of my own brethren on the network, that's how they like to manage their strangles. They're more aggressive and what have you. That's totally fine. But I just want to make sure we're all in agreement. The strategy is working. It doesn't necessarily require you to do anything. When it gets outside of the boundaries, when it gets outside of your strikes, it's off the reservation. Now it's like, okay, maybe it's time to do something, right? And so I just want to make sure we're all very clear on kind of the lines of demarcation on a short strangle. It's basically the strikes themselves. And so as long as you're inside the lines and you're coloring inside those lines, then I think you're in a pretty good spot. And so for UAL here, we are clearly inside those lines. You got the stock at 92 and some change, and we have an 80 put and a 110 call. And so doing nothing is definitely the default setting here. But another thing I want to point out is we did this for earnings, and we've gotten a nice little boost on the trade already. We're already up a little bit over $1 on the trade. I think we did this trade. Did we do this trade this week? I think it was maybe like Tuesday or something. Like it was very recent. 421. Yeah, that was Tuesday. See, I'm telling you guys, man. I mean, I'm doing fresh blueberries and frozen blueberries because it's a very different experience. You do the fresh, I mean, you better be ready, man, because that tartness, it's gonna hit you. Like you don't think it's gonna hit you, but you take a bite, you get a couple chews in there, and it's like, man, that's pretty tart. I mean, I love it, but it's pretty tart. But you go frozen blueberries, I mean, you don't even need Splenda, which again, we've already talked about this. One of the greatest inventions, if not the greatest invention in the last century, bar none. But you don't even need it. Like if you just go straight frozen blueberries, they're already a little bit sweeter. And so I'm doing both. And so the fact that I pulled that right out of thin air like that, I'm not surprised. But UAL, we did this guy on Tuesday. We did it for 641, and it is now marking at 519. And so we're up a little bit over $1 on the trade. That's obviously really good, but I'm going to sit tight. Let's sit tight. It's working. Let's take it into the weekend. Let's take out the weekend theta. Like whether or not that's a thing or not, it feels right to say right now. So let's just pretend like that is indeed a thing. And it's like, man, let's just go into the weekend just riding high. Like we're riding high. We got the Procter & Gamble profits. Starbucks is looking good. UAL is looking good. MES, we're obviously hemorrhaging some cash, but that's okay, right? You got to stew in the fill somewhere along the way. So there you go. There's UAL. There's Starbucks. And man, I'm halfway done with the show, man. Let's get to you guys. Man, I appreciate you guys so much. And so I'm gonna surprise and delight some people. So Josh Amazon Prime to me is surprise and delight, and now I'm seeing all the trolls that are coming at me. Because I don't look at it when I'm in the show, but now I see it. I appreciate you guys. You guys were maybe talking about something else. That's pretty funny. And so I thought you guys were throwing shade at me. That's even funnier in my opinion. But hold on, I'm gonna surprise and delight somebody before the Amazon Prime surprise and delight because this caught my eye and this is really funny. So at the very end, Latter Day Crossroads. What's going on there, Latter Day Crossroads? I appreciate you so very much. I don't recall you having been here before in the chat. Or no, you've been here, I think. Yeah, you've been here, but you're still maybe a fairly new person, right? I mean, you got the crusty old people like Sam L and like Ranch. Right. And like Griffin Jones, like those are the old, I mean, those are the get off my lawn people. Like, man, get off my lawn. I've been telling you every day for the last month, get off my lawn. That's your Griffin Jones. That's your Ranch. That's your Sam L. That's your Ash Finn, right? You're not quite in that camp yet. And so I appreciate you there, Latter Day Crossroads. But Latter Day says, I got my final exam for my advanced managerial accounting class that opens today. Thank you, Dr. Jim, for being so distracting. Man, I don't think you want to be distracted right now. I think you need to be locking it in, dude. Like, do we need to send you a ghost? Like, somebody send Latter Day a ghost. I mean, send him a Banana Natty too for after, but he needs ghost right now. He's got to go either ghost, obviously sour pink lemonade, or sour green apple, both amazing choices, or you got to go oat milk latte at Starbucks. And so if we can't FedEx Latter Day ghost, we got to get my man an oat milk latte. And so, but I appreciate you there, Latter Day. And then Josh, Amazon Prime to me, a surprise and delight. And Josh said, first Josh says, what are the go-to drinks for the month anniversary? Again, Josh, come on, man. I know that you don't miss the show. I know that you rewatch it at night with your kids. And so I'm actually shocked that you don't remember this, but it's an oat milk latte. Oat milk latte, always hot, of course. Doesn't matter what temperature is outside. You always have to go hot. And 3 Splenda, and it's absolutely amazing. We go grande, we go venti, and that's the way that it is. But Josh says, so Reba Meyer, what's going on there, Reba? Which, of course, every time I see that, I think of Reba McEntire. And so Reba says, is there any evidence that Gex Charm pinning for SPX 0DT is an accurate way to predict where the market will end the day, or is it all speculation and witchcraft? This is a great question. So I did that interview with Brent from Spot Gamma. It was about a month ago now, maybe 6 weeks ago. It's on the YouTube channel. It was amazing, right? So like Gex and Dex and Gamma flips and all that kind of stuff, that's really interesting to me. It's been interesting to me now for a couple of years, actually. I haven't really gotten around to digging into it because there's so many other things going on with calculated risk, and now I've got where do I start and even other things happening, behind the scenes that you guys will know more about, as time unfolds. But I want to learn more about all those things. It's probably somewhere between those two endpoints because you picked like the two, furthest possible endpoints from one another. Like number one, like where pin and strikes, like it has to happen, like foregone conclusion, it is written, like boom. And then the other end is this is total witchcraft. Like this is all astrology. Apologies to my astrology majors that might be out there. But yeah, these are the two ends of the spectrum, and I think it's probably somewhere in the middle. Could it be a useful tool? I think maybe, possibly. I don't know enough about it yet to say either way. I know that obviously going to Spot Gamma, I mean, they've got a ton of free resources, I believe. They've got premium products and stuff too. But the free stuff I think they have there is pretty solid, if I'm not mistaken. I could be wrong about that, but I think I'm right. And so there you go. And so and Josh is hitting me back pretty hard. Josh says, it's amazing I can watch it yet not pay attention. That's how you know I'm a dad. Well, that's absolutely true. I know all about that, but I appreciate you, Josh, in a not really kind of way. So let's go all the way back. Man, I'm gonna go all the way back to the beginning. I see you guys, man. You guys are really doing some work today. I see Kimberly Thomas is here. What's going on there, Kimberly? It's been a minute for you popping in the chat. Thank you so much for being here there, Kimberly. Let me see. Let me go all the way back to the beginning. I can't even find the beginning. Look at all this work you guys are putting in. Man, the algorithm is going to be so confused today. Again, it's pretty sure on any given day or any given Sunday for my Willie Beeman fans that might be watching the show, they can skip right over this 45-minute block. Like the Dr. Jim power 3/4 of an hour, like, nope, like that's not going to be quality stuff. We can find something else to kind of spread out to the masses. But today, man, they may have to give it a second look or a second listen or something. But SC Golfer is in the house. What's going on there, SC Golfer? With the original comment, the initial comment. Man, look at you, SC Golfer. I appreciate you. I didn't follow you on the Procter & Gamble trade because we know that doesn't work. I agree. I mean, this is not a pattern, guys. I would not read too much into this. Like, don't think. I mean, I'm going to be gone next week anyway, which is crazy. Right? Like the Microsofts and the Metas and the Apples and whatever, like I'm not even going to be around to help you guys out. You guys are going to have to fend for yourselves. And so, I mean, I'll give you my picks beforehand, but I don't know that it's going to have quite the same chutzpah that it would have if I gave you the feelings like in the moment. And typically my intern doesn't give me the trade analyses until, 20 to 30 minutes before I'm live. And again, oftentimes it's in crayon. It's in pictures, and so I kind of have to interpret what it might be anyway, and I have a feeling that some things are lost in interpretation. But yes, I would not assume that my earnings trades are going to work anyway, so this could be an uptick for you guys. But anyway, Shane goes on to say, I did fade the Dr. Jim faders. There you go. I went all 3D chess on the issue. Winner, bonefish dinner. Have a great weekend, Dr. Jim. Okay, so I'm not sure what that means that you did, but it sounds like you did something good. And if it leads to a bonefish dinner, like we all know that is a high quality problem to have, right? We all know that if you find yourself in a bonefish anywhere across America, and there's no fewer than 500 of them, so you can find one within a 10 square mile radius of where you are right now. If you find yourself in a bonefish, only good things are going to happen. And by good, I mean they're going to be very, very below average. But you're there. You're doing it. And so I appreciate you. A. Wills is here. What's going on there, A. Wills? Man, give my best to Mrs. A. Wills, of course. Another victory lap on Procter & Gamble. Let's go. Thankfully, we didn't play Intel. Yeah, what's Intel doing today? It's got to be up, right? I mean, it's just a little Trump darling, right? Oh, yeah. Look at Intel up 14, baby. I mean, I don't know that I would have played it higher. I really, truly had no thoughts. And so I can't, could we take a victory lap? Of course. Am I kind of indirectly taking one? Sure. But I don't know how I would have played it exactly. And so we can leave that up for interpretation. N1C is here. What's up there, N1C? Wolf is here. Doc, stocks are going up. Banana natties are going down, my man. And my Braves are the best team in baseball. Life is good. Have a great weekend. Yeah, you have a great weekend too, my friend. Baseball season's over. Like, it doesn't usually happen this early, but we're usually able to shut it down by Memorial Day at the latest. And so it's kind of good because it frees me up. Like, now I can do other things. I can focus on you guys. I can focus on my work. I can focus on my family. I can focus on, walking lunges, like things like that. And so baseball season's over, my friend. Orgdenu is in the house. What's going on there, Orgdenu? Orgdenu says, hello, Dr. Jim. Every gimme comes with a complimentary gotcha. Have a great weekend. Yeah, I don't know if it's complimentary. It's definitely coming, though. They do come in pairs. They do tend to travel in packs. And by packs, I mean just twos, right? Little couplets, right? You've got gimmies and gotchas, right? You got gimme, gotcha. No, it's not always like a 1-for-1. Sometimes we ratio it off. Sometimes it's a 1x2. Sometimes it's a 2x5, right? But you've always got some semblance of gimmies on one side and gotchas on the other side. That is what we should all expect in every scenario from now until the end of time. So RML is in the house. RML says, no questions, Doc. I just want to say thanks. The information you've taught me has truly changed my family's life. Man, thank you. Man, thank you for saying that. And then RML goes on to say for the algo, man, I appreciate you, RML. And like you did it, man. Like we had the agreement and you put it right there in the chat at this very time, the exact time that we agreed upon. And I'm going to send you that cash that we talked about. And so I thank you, my friend. Thank you so much for holding up your end of the bargain, because some people just aren't reliable. Some people just aren't dependable, but you came through, man. So I'm going to send you that $8 that we talked about. And so anyone see, I thought about the doc and the guys here when I saw the Procter & Gamble results, 100%. Definitely. I mean, was there ever a doubt? I mean, it felt pretty 50-50 last night, but we pulled through. So Sam L's in the house. Doc, I survived another week somehow. Appreciate you keeping us somewhat on track. Enjoy the weekend. You do the same, my friend. Yeah, I don't know what I'm doing. I don't know if I'm able to do that, but look at the market catching a bid going into the close. Even S&P's up 50. Right, NASDAQ almost up 5 honeys going into the close. Got the metals catching a bid. Got the Russell catching a bid. Even, UB40's up a few ticks. Man, that's some good stuff. Sam L goes on to say, you nailed the CAR top. Well, I don't know about that either, but I'll take another victory lap, sure. Meanwhile, I'm just trying to keep up with what we were even doing here. Yeah, again, I don't know, man. I do not know. I don't think I'm gonna figure it out today in the next 10 minutes. And then Sam says, I'll go run a post-trade analysis. The doc is right. The system is confused. It's very confused. I can assure you of that. That is for sure. The Preston's in the house. What is going on there, the Preston? I appreciate you. Dr. Jim, you're the king. Man, I don't know about all that, but great job with Tesla this week. Oh, yeah. Did I do a Tesla trade? Oh, I did. Oh, that's right, man. It's all a blur. And I was on my high horse earlier about blueberries, whatever. But sometimes I can't remember. Like, did we do Tesla? But we did, and it actually came back to us at the last minute there. I remember. Domino's releases earnings Monday morning. What are we doing? A Friday? Hold on. Because we got to rewrite the whole rule book now, right? Because I just got done talking about, butterflies. You do a Monday, Tuesday going into Friday. You do a Wednesday, Thursday going into Friday. You do the one, it's this. You do the other, it's that, whatever. Now we're doing a Friday going into the next Friday for Domino's? Man, I don't know. DPZ? 373. Domino's doing pretty well for itself. I mean, those 3 mediums for $8.99 total, not each, total. It's doing pretty well for itself, indeed. Wow, yeah. Hold on a second. I mean, can we do a little Domino's? I don't know. I mean, I'm mega bullish on Domino's. I mean, Domino's is the actual physical commercial embodiment of the simple fact that no pizza is bad pizza. Like Domino's is the manifestation of that true axiom that we all know inside of our hearts and inside of our minds. Like, we know that. Like, obviously, amazing pizza is amazing pizza. Like, you remember it. But even bad pizza, you get done, you're like, I still feel pretty good about myself. That's exactly what Domino's is taking advantage of. And they're doing pretty well for themselves. Now, they've gone on hard times since December of last year. But, yeah, I don't know. I think, man, we got to play Domino's to the upside. I love it, man. I love it. And you know what? I don't want to do this butterfly. Oh, they don't even have weekly options in Domino's? Man. I mean, they're obviously pouring all their money into marketing. And so they need to put a little, set a little aside here for some weekly options for you, boy. But, well, let's go ahead and we're just going to do May. I'm just going to buy an upside vertical spread. I'm just doing a 50-50 shot. I'm paying half the width of the spread. I just did a calculated risk today on, this probably won't air until, because I'm trying to do 1 or 2 extra. It's difficult for me to do because I'm kind of maxed out, but I'm trying to do a couple extra so you guys have some while I'm gone. And this is, so when you see the magenta shirt, this is one of the extra ones. I actually shot it today, along with the one that I shot today that's for Monday. But it's about a vertical spread checklist. And so I was like, I think this could be really helpful for people that are new, people that are doing defined risk strategies, and they're trying to think about what they should do with vertical spreads and what have you. And, one of the things I talked about was on your long vertical spreads, call spreads or put spreads, it doesn't matter. We're typically paying about half the width of the spread, looking for approximately a 50-50 shot. And so that's exactly what we have here with Domino's, but we know it's not really a 50-50 shot. I'm pretty sure this is going to work. And so let's go ahead and DPZ is set to closing only. What? Hold on. Are you serious? You guys see that? I can't even do it. They're not going to let me do it. What's going on with DPZ? Are they merging with Avis? Like, are they coming together? Like, to form this craptacular combo that's just going to blow everything else away? I mean, it would be a combo for the ages, man. I'll tell you that. But wow, I can't even do it, Preston. I can't even do it, man. Can't do DPZ. Unbelievable. I mean, that makes sense for like a Poet. Makes sense for like an Avis. Makes sense for like a GameStop a la 2021. But Domino's Pizza, $300 stock that hasn't had crazy moves. Can't trade it. Can't do it. Wow. So this is why we need the futures, right? So this is why we need the individual stock futures. I want to get to more questions, but this is important. So this summer, they're going to be releasing individual stock futures. And that's going to be amazing because when there are different shenanigans going on with the company, with the stock, whatever, that we can't do anything with the actual stock itself, it's closing order with the options, whatever, that's when we go to the futures market. Like Domino's options, Domino stock? No. But I got some Domino's futures for you. Right, we can do Domino's futures tonight, like right now, for the one-time low cost of $8.99, and we'll also send you 3 medium pieces. So it's a pretty good deal, really, if you think about it. But yeah, this is why we need those. We need those quickly. So I guess I'll clear that away. I can't do Domino's. That was a surprise. But Reba is here. Oh, there's Reba talking about the witchcraft. So thank you there, Reba. Maybe Rebe. Could be Rebe. I think it's probably Reba. Could actually be like Rebe. I'm not sure. I'm gonna go with Reba because that feels right. DMZ in the house. What's going on there, DMZ? Yes, I called you out earlier. Hello, Daniel from Argentina. Wow, Argentina, man, that's pretty cool. I appreciate you there, Daniel. Thank you so much for being a part of the show, and it's really, really awesome, man. Like, it's just so cool. It's so cool to know that, you know, all the shows, I mean, my show, the other shows, whatever, we're able to reach and help so many people all around the world, and it's so cool. You know, we've got, I mean, Ordenu's in Italy. I mean, you're in Argentina. Got people in the UK. Got people, I mean, Sam L's in South Africa, I think, if I'm not mistaken. And so it's cool stuff, man. And so let's see. Sam L says, yeah, I'll go. Doc called the top. System, we need a new strategy. Now you just fade. You just fade the doc. You're good. You're 100% good. Ranch, hello, Dr. Jim. I'm not doing much today. Maybe you might have a good trade idea. We shall see. I tried in Domino's, but I can't do anything, unfortunately. Sergio, let's go, Dr. Jim. If AMD doesn't change direction, I'll be working at Bonefish soon. Oh man, what's AMD doing? 345. Wow, didn't we have a short put in here? And so, man, if you're short some calls in here, I really hope it reverses to give you some relief. And you know, let's look at the silver lining, right? I really, truly do. I hope you get some relief. I hope you find an off ramp and you take an off ramp when it comes. And you know, remember, I mean, a medium-sized loser, you can come back from that. Like, you can recover from that. The whole goal is to kind of try to avoid the disastrous outcome. Try to avoid that catastrophic situation. Silver lining, though, is I'm assuming employees eat for free. Right? I'm just assuming that you're going to get either a free meal or a deeply discounted Bang Bang shrimp. And so either way, that's going to be really, really good for you. And so, but man, AMD, wow, up 40 today. We had a short put in there. Remember when we had a short put? I remember. It was like 200 or 220 or something. And we were all like, and we were sweating bullets, man, with that thing under 200. It was like, oh my gosh, we're holding this in the money short put and AMD is never going to come back. And now looking at 345. It's just too funny, man. The whole thing is really, really funny. But Brett Martin is here. Sebastian is here. Man, I appreciate you. Point B. Good afternoon, Dr. Jim. IB rank on my excitement to learn from you is 100. Let's go, man. I'm going to send you that cash we talked about. Point B. I appreciate you so much for putting that in the comment stream at this very time. You timed it perfectly, my friend. And so thank you so much. Sergio is digging it. I appreciate that. iPod Touch. Sam, iPod Touch posted. I told you before the move. That's right. He 100% did. And by 100%, like 10 or 15%. He got it in there. But BBB, fine. Hey, Jim, another earnings winner. Congratulations. Yeah, we could be heating up a little bit, which is crazy that we're going to be off next week. It's just crazy, man. N1's Autumn's fault, obviously. N1C, maybe gamma scalp your way out if you have enough to buy the shares. Oh, talking to Sergio. It's possible that you could do that. Yeah, definitely. Breadmun, thank you for that earnings trade, Dr. Jim. You're welcome, my friend. But you're playing with fire, man. You're on dangerous ground if you're tailing Dr. Jim. I've tried to warn you guys before because I will get ice cold and there will be no warning. Like, you will not know. You will think the hot streak is continuing, and then I'm going to rattle off 9 straight bricks. Like, just brick city, man. Right? Just brick after brick after brick. And so be ready because it's coming, 100%. And so let's see. Point B, can we get your insights on the short put leaps on NVIDIA for May 19th, 2027? Man, that's crazy. I can't do that in 30 seconds, but that will be my 46th birthday. And so maybe I'll share some insights on that maybe next week. But Ranch, let's see. Oh, Zozo Baggins is here. Zozo Baggins, Dr. Jim busting out the pink polo. We got to get short ASAP. Is that what it is now? The magenta is the short call? Is this what it is now? Is this kind of the Uncle J fire engine red? Like when I go magenta? Maybe it is. I don't know. I kind of like it. So maybe we'll kind of roll with that. But man, Joel James and Adam Armfield, I see you guys. I literally got to like 1.5 questions today. It's too funny. Like I say it in jest, but it's like, no, that's about right. And so I do have to go though. I'm out of time. Guys, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay grateful. We'll see you guys on Monday.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Hello, everybody. Well, happy Friday to you. Tim Knight here, and we're here to wrap up another week of lifetime highs. The big news last night was Intel. Intel used to be just trashed and on life support. And some time ago, a year or so, maybe 2, there was the CHIPS Act and a lot of loans and so forth, and it seems to be working. Intel is doing magnificently well. And after earnings last night, it popped like 25%, which for a big company is a pretty big pop. And naturally, AMD, NVIDIA, SMH, all the semiconductor stuff is celebrating and coming along for the ride. So it was a big, big night for semiconductors, and that has fed lifetime highs on the NASDAQ, lifetime highs on the S&P. And next week is a big week. We've got the Fed on Wednesday. We have the biggest earnings week of the quarter. Amazon, Apple, I think Google. Microsoft's already done. A whole bunch of stuff. Exxon, all kinds of big names next week. And then, as always, it'll sputter into like the smaller names until like a month from now, we'll get NVIDIA. So let us look at some charts together and catch up, see what's going on out there in this very green market of ours. And we're going to start unusually with Intel. Just to emphasize just what a big pop this is one giant price gap. Now, the red bar up there, newer folks might be confused because it's having a great day. Why is it red? It's a candlestick. It's only because the present price is lower than the opening price. That's why it's colored in red. But net is up 21%. It was up more earlier today. And I shorted until yesterday, but I did something a little unusual. After earnings came out, I realized that there's nothing holding this back. So I covered after hours at 74. Took a loss, but it would have been worse. So yeah, nothing life-changing, but it, not a good feeling. Not a big position, but it still was a bit of a shocker to see. So I don't usually like doing after hours trading, but this time it's like, no, I do not want to wake up to that and see what it's doing. So I got out. So I cleared that stinker out of there. And up it is. Yeah, up it goes. And the support at this point is way down at that price gap. AMD has followed along with the ride. 13.3% gain on AMD. Lifetime high. This sucker is up hundreds of percent just over the past year. Incredibly, this $345 stock was a cheap double-digit stock a year ago, and it is had this big blast higher, consolidated for a while, and then following this base here, this rounded bottom, it was off to the races. And you can see I've drawn a whole series of horizontals that's been muscling its way higher. And one stock we haven't looked at in ages, I'd kind of forgotten about, but ARM Holdings, also tremendous gains here, up about 130% since last February. So just stunning how strong these semiconductors are. And so this all flows into SMH. And I had some puts, and still have some puts on SMH. These are September's, $500, so underwater now. They didn't get as massacred as they thought they might because they were pretty much just out of the money, and now they're more out of the money now. And you know what? I added more. Maybe I'm a glutton for punishment, but I've got like 147 days on these left, and I more than doubled that position because I think I've got every good chance of this heading down to as low as 400 sometime before they expire. So yeah, took my licks on Intel, but I have more than doubled my SMH put position. God help me. Yeah, lifetime highs on that. And I'll also say, obviously, the war's been kind of quiet today, it seems, but we've spent the past 5 days, basically from last Friday to yesterday, just this huge range that we're getting ping-ponged around based on every little rumor and tweet and contradiction, either for up or down. And if they ask me, how can we just keep this bull market going as long as possible? My advice is simple. Announce a one-day extension of the ceasefire every single day. And I'm serious about that because the human mind, the human psyche is very wired to idealizing what's going to be. This is like the psychology of a better tomorrow. And if you keep extending that, it's we tend to be optimistic. We tend to be hopeful. It's like, won't it be great when, fill in the blank. Paradoxically, the worst thing for the bulls, long term, would be the war is over. Here's the signed document by all sides. And the other sides, they're saying, yep, we signed it. This is real. We'd have a big rally for a day or so, but that would put an end to all this fluff. I don't know how long that'll be. Let's keep in mind the last time there was negotiations about this issue about 11, 12 years ago, it took 21 months of negotiation between two very capable and interested sides to reach an agreement. So we could be going on like this in perpetuity for all I know. But weirdly, this war has been terrific for the market and really distorted the charts, as you'll see and have seen. Here's SOXL. This is the leverage bullish on semiconductors. I moved this trend line here because it actually makes a lot more sense as a channel. So this was channel bound for a year, and it bottomed just like everything else around March 30. And it has tripled, more than tripled, I think, since then. And as I've said before, these leveraged instruments tend to gobble themselves up alive if they are anything but trending, but this is trending. And when it trends like this, it's like mega compounded interest. You know, you don't get a 200% plus gain in 3 weeks from a leveraged instrument normally. This is, you know, this is, let's just pound the table here. This is the 18th day in a row. Just as a gimmick, I was going to count to 18 to show you how much that is, because that's a lot. 18. Imagine flipping a coin 18 times and it comes up ahead every single time. That'd be remarkable. You know, what are the odds? 18 days. My understanding is that the prior record for all history was 15 days in a row. So we just keep making new historic achievements on a daily basis. So with those aforementioned 18 days up, you get this kind of action going on. The cubes aren't up 200%, but they are up. And this is the sort of weirdness that I'm talking about because we have been just unrelentingly pushing higher since the 30th of March. This consolidation range is a cute notation in history at this point, completely irrelevant to the market moves, unless we started weakening, at which time basically the top of it becomes support. But as it is now, it's just sort of like, you know, this little footnote. The diamonds, DIA, are weirdly down. Diamonds have been lagging, just like back in early 2000. Remember that, some of you? Back in early 2000, the Dow peaked on January 17, something like that, mid-January sometime, and became, and people were laughing at Warren Buffett for not, you know, making so much money in the techs and so forth. And that all changed 2 months later because tech peaked. Let's see if my memory here is like March 26, something like that. Sometime in March, and then had an 84% wipeout. Can you imagine? Can you imagine an 84% wipeout in the cubes these days? I can't. So the Dow has it's tired, and it's not making new highs, and it's in sharp contrast to just about everything else out there. The spiders are up, lifetime high, and same deal. Had a nice, cute little consolidation around the top here. And we tumbled, and it's like, I'm done tumbling. I'm going to eat my Wheaties and blast tires. So we're at a lifetime high on this one too, completely wrecking any analog that we had in the past on this one. And the small caps, IWM, are also up. I don't think maybe lifetime high, certainly close to it, but they're up a little shy of 0.5%. And then China, by way of FXI, still has a cool little right triangle top right there. I took profits on FXI and some other items. I've trimmed back to about just a nice even 100% commitment level now across 27 positions. So yeah, there we sit. I also took profits on my miners, GDX. Here's gold, GLD. And I still think gold's going to go down. I still think silver and platinum and palladium are going to go down, and probably miners too. But I'm trimming risk here and there. I'm taking profits here and there. And I just felt GDX has done a good job. So maybe I'll get back in. But for now, I'm cleared that out of there. Reviewing our weird duo of stocks here, just to catch up with those. And they have something in common. They've both lost about 75% of their value in a very short amount of time. Here's Allbirds, and we probably won't look at this again. It's just kind of one of those quirks in financial history. But yeah, this has gone from around 25 to around 7, as people realize that wool shoemakers probably aren't the optimal choice for your hyperscaling needs. And then CAR, which is Avis Budget Group, down again today, around 10%, having fallen from, I think, if memory serves, it peaked at 847.35, and now it is at around about 206. So approaching an 80% loss, you know, in just 3 days. Wow, that is something. Billions were made and lost in that. Can you imagine all the people, all the options and the bears and the bulls and the two funds that own it and so forth, and crazy stuff. I'm certain a really fantastic movie could have been made out of this week just with this one stock. Who knows behind the scenes what kind of drama was going on. That is just tremendous. A few items I'm short here and there. Like I said, I got loony that I am. I've got 27 short positions. A few include ASTS, which is down about 3%. Our old friend American Express, AXP, whose puts I dumped and have done nothing but go up since I dumped them, but I'm still shorted, so that's okay. It's not really. HPQ, this is down about 2%. INFY, which is Infosys, continues down also 1.2%. RGTI is down a little more than 2%. And so it goes. So on the whole, just glance at my screen here, it's about half red, half green on the day. It's been a profitable week. It has not been a profitable day because I got zapped on the semiconductor side to some degree, but we'll go with weekly data. And so it's been a profitable week. I will also note that NVIDIA merits watching because it is getting close to a possible breakout. NVIDIA, oddly, is not at lifetime highs. So NVIDIA is a really bad laggard in its sector, but it's getting close. Another day like today would do the deed. Even half of a day like this would do the trick. But we're getting very close to the top of that range. I've marked it with an orange line right there. So just to wrap up, here's the NQ, which has gone up about 4,500 points in the past few weeks and has sliced right through that range like a stick of butter. And yeah, lifetime highs again, hundreds of points, like about 500 points today alone. As I've said, bear though I may be, I'm standing way over there away from the big domestic stuff, SMH puts notwithstanding. And then the ES has also been one of the weirder charts I've ever seen out of the literally millions of charts that my eyeballs have observed over the decades. This is freaky stuff, but I'm banking on Bitcoin. I have been building this position. I am all in, so to speak, with as short as I want to be. As long as we do not cross that gap around 81,750 or so, I will stick with it. And hopefully Bitcoin is being a little more honest with prospects than equities are. But I think this is just a dynamite pattern, and we'll see if this pays off or not. Okay, well that's the bottom of the hour and the bottom of the week. So you head off to your weekend, and big week ahead, and who knows what'll happen this weekend too. So I'll see you on Monday. Thanks as always for coming by. Goodbye.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nicky Bat, University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Mr. Vecchio, we are back, my friend, for the last call. That was a fun little break.
Yes, we're back. We're good. We're doing well. Markets are breaking out. I happen to be on the right side of the trade this time, so I'm feeling pretty good about things. Oil's range bound. Nick, what more could you ask for after a week of just awesome tech earnings?
It's been incredible. I mean, I gotta say, I feel the FOMO because I have not as participated as much as I should have into this. Today, more than any of the other days, I've been speechless all day today. I don't even know what to think or say.
I think you're speechless because of what's happening with the semiconductors there, Josh. We can go to the charts. 505.90 on SMH right now. 18 days in a row higher for the Philadelphia Semiconductors Index. Hasn't happened all that often. The last few times it's happened were right around the dot-com bubble, either bursting or after it burst. But that doesn't really matter. Enjoy it while we got it, Nick. NASDAQ here up 1.8% now going into the weekend at an all-time closing high. Same thing for the S&P 500, which is finally starting to break out. And for good measure, the Russell's even bouncing back right now. It's not exactly at highs, but it's not falling down either here. Nick, I think this tech run is 10 up and 10 in a row. That was a lot. 10% over 10 days. What do you make of this here? You say that you're feeling some FOMO right now. Is that the general state of the retail trader missing out on this?
Oh, I don't think so. I think the retail trader was all in on this. I think it was the mainstream media, macro,
never go full macro.
Chirpers. I think that was what is fueling what we're seeing today. Like I think, and I've thought it all week, kind of with some of this move. It has felt like a lot of people missed the boat, and this has even today, this move today with the semiconductors. I mean, you can be bullish. I don't know if you can be 25% to the upside after 100% move type bullish. It feels like it's a blowout, a blow off top, whatever. I don't know if it's the top, but it feels like there's a lot of chase right now. And I don't like chase. I like to be the contrarian. I don't feel contrarian here.
Isn't chase the psychology of this market, though? I recall a few weeks back, you and your dad were having a conversation on Let Me Explain about how all the institutional investors rebalanced their books at the end of last quarter at the lows. Mm-hmm. And you got to set up just like April 2025, where retail is buying the dip the entire way down. They're not getting shaken out because they have some investment policy statement they have to adhere to, some investing charter they have to follow. Mm-hmm. And now you have this setup again where hedge funds, institutional investors are not long enough at a time when the market's rallying. Nick, I got longer on a shorter term basis today. I'm looking out 10 DTE, 7,300 calls.
I don't blame you. I think that's probably the non-thinking man's trade, which has been the way to trade this market, is to just don't think. Just move with the momentum. And that's usually how I am. I usually am on that momentum trade. I just feel you've had the squeeziness with the cars and the birds and the planes and the trains. You've had semiconductors going up 200%. we're looking at like people are buying Qualcomm today. I mean, like, you know what I'm saying?
In there? Yeah.
We're going so far out on the tail crap on some of this stuff that I don't know if I can pull the trigger to buy right now. I've been long, and I'm not long as long as I have been, and so now I have FOMO. And maybe you're right. I just YOLO the calls.
You mentioned the birds and the cars and the planes and the trains. I'm looking at these stocks that have actually come in quite a little bit here. So it's not like they're persisting up at the highs. Does that at least curb some of your concern that maybe the market's overheated? Cars was 800 something and change, and now it's 205. It's down a healthy 78%, I think, from the highs.
I guess. I just feel like it's rotating into long calls like you're looking at. Like, I think it's, okay, we gambled on car. We're going to move now, and we're just going to, buy Intel 100 strike calls for next week. Like, that's it. And it's worked. It's worked for the last, 2 or 3 weeks. But I feel like we're a little above our we've gone a little too far. I think the volatility picture, you still have volatility staying stubbornly bid. I know VIX is lower. It's 1868, but volatility has not moved. The oil situation, I've been screaming that I don't think it really matters for this AI space, but for everything else, it probably does matter. And, it has been stubbornly bid as well. I just feel like this market just gives me, it's like, ugh. Just there's some stinky here.
Let's talk a little bit about volatility here, because I'm taking a look at the vol curve right now. Front month fix is trading at 18 and change. And I'm looking out to the Feb 27 contract, and that's up near 23. So it's a healthy, we'll call it 5-6 point contango, depending upon what you're using to measure that. Volatility has come off the highs, though, right? And you mentioned that the uncertainty hasn't disappeared. What do you make of this? I know you're expressing some discomfort here, even as the market's breaking out. Why do you have that discomfort? Is it the shape of the vol curve, or?
I just think what Vol's telling you right now and what you're seeing in the market is that equities as a whole, like the S&P 500, yes, it's up and it's having a great day, great week, great month. It's been unbelievable to watch. For the last week, and Jamal, I'll shout him out because he brought this to my attention for the actual numbers this morning. It's the first 200-point, inside 200-point range we've had since the beginning of March. So, this has been relatively the tightest range we've had, and vol has remained sticky. And what you're seeing is underneath the surface, you're getting these massive realized volatility moves. Intel, AMD, the semiconductors as a whole. You're seeing the Carvana or the Avis car, United Rentals. Like, you're getting some stuff that's just blowing the lid off of places. And I think that's contributing to the reason volatility hasn't contracted here. And it's usually, from my past experiences, when it gets like that, there's usually some sort of breather that, is somewhat painful. And that's kind of just how I feel right now. Maybe I'm wrong. Who knows? I could certainly be wrong. I'm no Batstradamus here. I don't have a crystal ball.
Nick, a few weeks ago, NVIDIA, just as a point of reference, was looking like it may be topping out. And I saw, most of the technical crowd was talking about this becoming a head and shoulders. And then the NASDAQ starts to break down. You do get a break of that neckline, but then you get back into the pattern, which brings up what happens on the other side of a reversal. It usually means that you look for an extension past the former highs of the head and get into a new target that, would set new highs here because you get the reversal going on. That would mean potentially NVIDIA could be looking towards 240 plus over the next several months a kind of North Star. This has been said on air before in recent weeks, and that was maybe $30 ago. We're making progress there. The market really has a bullish thrust to it right now.
Nobody wanted to touch this 2 weeks ago.
Not me.
Michael Burry's puts. I was doing freaking articles, videos about Michael Burry and his puts. that are now, dead and dusted in 2 weeks. I mean, that's, the sentiment flips so quick. And I think that's what you're seeing here. And next week, you got a bunch of the big earnings coming up. I mean, who could possibly be bearish?
Next week, Wednesday, is
too good
just
to be true.
Nick, I was looking at the volatility pricing for next week. I can't help but notice that you get into Wednesday itself, the 29th, and there's not really a huge increase involved from, say, Monday to Tuesday, Tuesday to Wednesday. But there is a little bit more of an edge from Wednesday into Thursday. So just first blush, what do we have Wednesday? We have the Fed meeting on Wednesday. That might matter. But when you think about where most of the market, concern or uncertainty, so to speak, is located, it's for the Thursday close. And I see a Fed meeting before the Wednesday close, but then I see 4 of those 7 Mag 7 names after the Wednesday close, not to mention Apple arriving on Thursday afternoon. Are you with me in thinking that the earnings matter more than the Fed next week?
Yeah. I mean, I think the Fed situation is behind us. I think it's the two things front and center are earnings, which have been just blowouts, and the Iran situation. We've, just like I thought, we kind of got to a point where we've taken out the pain of higher oil prices. I feel like we've gotten to the point where we've priced as good as we possibly can, at least in the short term. I don't know.
Can I talk to you about these earnings? Because they have just been so freaking good.
These companies are printing money.
Can I give a baseline here? Coming into the quarter, the street consensus forecast was for 12.2% earnings growth, for the quarter.
We're at 20-something.
We're starting, projections are starting to edge up into 20. Given where we are, as of today, now 28% of companies in the S&P 500 have reported. 84% are reporting a positive EPS surprise, 81% positive revenue surprises. Right now, the blended earnings growth rate for the quarter, which that's the projections that remain coupled with the actual that have been reported so far, is now 15.1%. So we started the quarter at 12.2. And as we've actually gotten the numbers, that projection is starting to creep up. Now it's 15.1. That's going to be the 6th straight quarter of double-digit year-over-year earnings growth rate for the S&P 500. And this is after a multi-month consolidation where prices didn't move and we just rattled time off the board. And the valuations have come in substantially. You and I were talking about what's the bull case here if this thing wants to continue to run. The Mag 7 right now have a PE of 26.9. They peaked around 32 last year.
Mm-hmm.
I mean, if you want to get back to the market's too concentrated and bubbly, there still may be some room then to the upside if that's your proclivity.
I mean, I think there is a catch up there. I think Microsoft and Meta are interesting here. I think even Amazon, it's been a dog relative to everything else in the Mag 7 for, many, many years now. I'm certainly bullish there. I'm just worried that you got a real fast news moving market, and now we're at prices that are really, really high. And when prices get higher, you need more gamma, you need more money, you need more things to keep pushing higher. I feel like we've kind of just gone a little bit too far, too fast. I had CNBC on throughout the day today, and these people, if you want to talk about lizard people, those are the lizard people, because they were calling for death and destruction a month ago, and now they say you need to double up on your SMH exposure. It's comical.
One of the fascinating parts about this market rally, we're seeing the mega cap tech lead the way. Mags are outperforming the equal weighted S&P or equal weighted NASDAQ, for example. Small caps are basically back to the same forward PE ratio they were at their highs last year. We're looking at the mid caps are getting pretty close to it, but when you look to the large cap or the Mag 7, they still have the most ground to cover. I mean, that was really the story of what happened in the fourth quarter and early in the first quarter this year. It was rotation away from the mega cap tech names into the other things. And so now on the other side of this Iran war recovery and now extension to the upside, it's crazy to suggest, but those are the ones whose valuations haven't recovered all the way yet. And so, Nick, I mean, I'm looking at the market here. Technically, I don't know where you find a place to short this thing. If I'm looking at the NASDAQ, for example, we're in blue skies right now. This is open territory. We've never been up here before.
Yeah, I mean, I have some short delta in MES and a little bit in the Russell as well, and it's manageable. I mean, I am very, very light across the board here. I think the point I'm making, or the things that I'm doing, are less. I'm kind of selling upside units like I've been doing in USO into this move in oil. I'm starting to do this in like an SMH. Doing call ratio spreads. Crab trades. If you want to participate in the upside, look at a diagonal spread or something. The volatility there is just through the roof, and probably is going to stay that way. For at least the short term here. I got people in the YouTube chat. Kimberly's back. She's telling me to kiss. Keep it simple, stupid. And that's what I'm trying to do a little bit. But I think I have found myself overthinking a little bit.
Yeah, you sent me that repeatedly throughout the month of March. So,
but here I am. This is the trader in me. I hate it. I wish I was just turned my brain off.
Do you think we're switching back into a low volatility and grind kind of environment? Because, Iran war aside, it's late April, which means we're getting into the great stretch where you buy through July from seasonality metrics. Volumes have come in. There's positive technical drift. You don't seem ready to commit to that with VIX sitting at 18, though. What is it going to take just to see a 16 print on the VIX next week?
Yeah, I think you're going to have sustained volatility, and that's good because that gives you huge moves to both directions. I think people got caught up in the idea that volatility only means downside fear and risk. It is also upside risk, and I think that the news-driven market. I mean, Trump said it perfectly. He said that everything's been it's a casino. Everything's a casino now. So you got to be ready for both sides. I think the way we trade is going to be the only way you can trade. I think if you get too long-term, too caught up in fundamentals or macro or whatever, you're going to get chopped to pieces, and that's can you have more upside here? Sure. It's just not my thinking.
Nick, options premiums were rich during the recent volatility spike. Now that it's come in, for folks that aren't necessarily putting on trades today, because it's a Friday, we have weekend gap risks, given the news headlines that we're contending with about Iran. Where do you think the best opportunities are heading into next week? Is it single names? Is it index level?
I think the Microsoft and Meta trade is still going to continue. I think I think you have to be bullish there if there's going to be a catch up. I think you just stay small. I mean, I think your way of what you're talking about, of putting short-term convexity in either direction, whatever your sentiment is the way to trade it, because I think you're going to have opportunities still on both sides of this market. It's just, I can't get in here and buy Intel. I just can't do it. I can't do it. I can't go in here and buy AMD. If they have a 20-point down, if AMD has a 20-point down move, maybe I, sell some puts, but I can't do it. I can't do it, Chris.
Funny thing about Intel is it gets back to its week average at 71, and this thing is still, up 70% month to date.
That's what I'm saying, dude, is a 10% haircut across the board on all these stocks puts them at prices from Monday.
I know puts them at prices from Monday. Good point. Nick, one of the beaten down things in this market has been Bitcoin. I know that there's a lot of folks here that watch are looking for something related to Bitcoin. I'm looking at these charts, and while I don't necessarily see something that's fully out of the woods yet, my view is that Bitcoin is looking like it's at least attempting to turn somewhat of a corner. It's back above the April 25 low. It's broken the downtrend from the October 25 and January 26 highs here. Momentum's picking up. What's not to like if we're getting into a risk-on market where there's an Ayatollah booth in the middle of the Strait of Hormuz that you need crypto to pay for?
I agree. I've been leaning long, painfully long here. I think there is a catch-up. I think, especially if you think that we're, if your 8,000 is on deck, you got to think Bitcoin is a lot higher from here. But it's not explosive like the rest of why would you go to Bitcoin when you can YOLO calls in SMH?
I suppose that's fair. A lot of folks have pointed to the connection between Bitcoin and software. The type of folks who would invest in these high beta software names are probably also the types of desks that are investing in the crypto ecosystem, given where they sit along the typical risk curve.
Yeah.
Are you poking around in IGV? I mean, for all the volatility that's coming in and elsewhere, it has an 84 IVR still.
I have some long delta there, very, very small. I did some diagonal spreads. I have some net long delta in ServiceNow, but the reaction on ServiceNow was I was not expecting that. I thought they kind of baked in the fear and the peak pain here, and that the upside was skewed from a risk perspective. There was more upside than there was downside. That move spooked me. That move said to me, no, these companies are like, there's a real problem here. Because the numbers were good. I mean, they came in better than expected. Everything seems, hunky-dory here. They've taken a 50% haircut, but I can't get in there. I can't get in there either.
I saw that names like Adobe, PayPal, Microsoft, they've been added to Burry's long list here. He thinks that the fear in the software sector and enterprise is overbaked. We don't need to go into that now, but perhaps a teaser for later. Jamal and I recorded the signal versus the noise segment today on what's happening in Microsoft. There was a big $10 million put premium put through the tape earlier.
Oh.
And so who's got this right? Does Burry have it right, or does that random put buyer? Tune in more to find out. Hey, before we get there, though, we're getting less than 10 minutes to the close here, Nick. Production, let's throw this up on the screen. Nick, you know about this. The PDT rule is changing, and I suppose that's another shameless promotion. Go check out the signal versus noise video that Mike Butler, Jamal, and I did about the PDT rule changing. But Nick, you talk us through this. What do we need to know? When is this arriving? How is it going to impact trading?
June 4th is the liberation day for us traders. To borrow, there you go. To borrow from past time, I think this fits perfectly. But June 4th will be the day. No, nothing you need to do on your end as a customer. It's going to be retroactive, so anything that happened that is currently in place will just poof go away. It's about as close to a real life magic trick, like David Blaine style situation for us as possible. It's just one day, just going to be gone. It's going to be an amazing day. It'll allow you, there still will be some requirements. I think it's a $2,000 minimum. There are some changes to the margining. But for the most part, this is what we've all been waiting for.
It's especially positive development for those people who want to trade around earnings and are worried about closing positions that could trigger PDT. And
Zero DT, everything. It's going to be great.
So next week, obviously, this is not going to be in effect for this big round of earnings, but we will have the next time we go through in July, Nick, PDT rule will have been eliminated by the time the next earnings round comes through. Which big mega cap tech name do you think next week folks should be paying the most attention to? Wednesday, we're going to get Tesla. No, that was this Wednesday. Should change the calendar to next Wednesday. Next Wednesday, we're going to get Google, Microsoft, Amazon, Meta. And then Thursday, we're going to be getting Apple there. Among those names, are you still focusing on the Meta and the Microsoft of it all?
Yeah, and I like Amazon as well. But yeah, those are the ones I'm looking at here. I mean, Google is relentless. I've been long NVIDIA. I caught that move. I don't know how bullish I am there at this point. It'll be interesting. It'll be interesting to see where volatility is at that point. You have volatility futures upticking here too, going into the close, which is something kind of I was interested in seeing going into the weekend. Tells you a little bit about, just the sentiment here. I mean, you're having a face ripper rally where, stocks are moving 30, 40%, but volatility futures are at the high of the session up about 1%. I think this was too much too fast. I think this was FOMO, catch up. I think no crash, but maybe we have a little bit of weakness early part of next week, or maybe there's just kind of a buy the rumor, sell the news happening right now into next week, all the big name tech stock earnings. That's what it feels like to me. I can't hide my feelings, Chris. I'm too honest. I'm giving you my feelings.
Safe space, Nick. You're allowed to.
Thank you.
Wear them on your sleeve here.
How do you feel? What's your read?
Just for some of there's still short iron condor I'm playing with, which if the market dropped, I don't know, 400 points, it wouldn't be the worst thing in the world for me. On the other, that aside, which, I'm going to probably have to take an L on that here because it's the short strike is near 7,200. The shorter term, the bullishness that I have is actually inside that. So for me, the best path forward would be a little bit more bullishness and then a comeback towards 70-50 or so. And I could work with that. But I think when you look at the fundamentals, the fundamentalists, are we allowed to call them that? They were right the entire time throughout March saying, guys, don't worry about the war. S&P's nothing, gets no earnings derived from that region of the world. In the short term, you can't really judge it because the earnings are going to be so strong. I mean, they had it. They had it right the entire way. We're up, 15%? 13% since then in the S&P 500, 18 in a row in SMH. So kudos to the, what did Howard Marks say? Better to be optimistic and wrong than pessimistic and right. And the optimist had it here, Nick. So I don't really know what else to say besides stocks look good on a technical basis. I understand your hesitation right now. My best trading personally over the past several weeks has actually been in oil because when we've had the sell-offs, I've been able to sell the puts. And when we get these spike highs, I've been able to go out and even on the, here I'm going to say, is this 53? Do we have it here? No, it's the shorter dated 120. This was put on weeks ago. It's able to get up there and sell 148, 150 call spreads. And so I think generally oil has a floor under it. It also probably has a ceiling as long as Trump is clearly trying to de-escalate by not finding every excuse not to drop bombs again. That to me is probably the most difficult to stomach, but what's been ultimately the best trade, playing the extremes in oil, fading them.
I agree. It's going to be interesting to see the weekend. I feel like, Trump has two choices. He's got to put his ego behind him, which he rarely does, and just, put your tail between your legs and make a deal of some sort and try and spin it. Or you got to just, go heavy fisted. And I don't know if either is that bullish.
71.98 here, Nick. We're closing out at the highs. NASDAQ here up almost 9% now, 27,436. In terms of your top performers, the Mag 7 names are leading the way. They're up 1.96% in the session. It's going to be the highest close that we've seen in the Mag 7 ETF. We have to go all the way back here to the end of January. So much for that nice 3-month round trip where we've learned nothing, but perhaps it was about the friends that we've made along the way. Nick, what's been the most disappointing part of this week here as we wind this down?
Not being long enough. The FOMO, brother. It's never big enough. The wins aren't big enough. The losses aren't small enough. It's always the same story in a trader's life. That's it. Time
immemorial. I was talking with Josh about that this morning with respect to SMH because I think you got him in, or Jamal, whichever one of you guys got him into a long position. He's like, I wasn't long enough. Of course, no one ever is. That's the closing bell, Nick. 0.7% higher for S&P, almost 1.9% higher for NASDAQ. Gold marginally higher, oil off, dollar weaker. Tech stocks are flying. Volatility is in. Hope springs eternal after these earnings reports and what should be another interesting weekend of news with U.S. negotiators heading over to Islamabad. We'll be back on Sunday night, though, Nick. Myself and Jamal will be taking you through First Call, 5:55 Eastern, 4:55 Central, here on Tasty Live, so be sure to tune in. Until then, though, I think we're taking a quick 49-hour, 55-minute break.
Sounds perfect.
Hope you have a good weekend, Nick. Hope everyone has a good weekend. Thanks for tuning in. Thanks to the production team.
Have a great weekend, everyone.